So are we ready?
All right, we're live, Steve.
Okay.
We're just getting everything spun up with the YouTube. I want to welcome everybody up here. Thanks for coming and for to our online trader summit today. Let's go ahead and read a legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information being provided in connection with the company. So there you go. I do want to say yes. A lot of people are asking if we're recording today's event. We are, and within about an hour, what we're going to do is we're going to send you the YouTube recording. So you'll be able to have that almost immediately when we get done today, and immediately within an hour. So I do want to say real quickly, thanks to Stocks and Commodities magazine for sponsoring today's event. They always do such a good job. They've been supporting the Online Trader Summit since we started it, like probably 7 years ago. And hopefully, when you signed up, you claimed your free issue. If not, in just a second, when we get Steve started, I'll send you a little link where you can actually sign up and get a free copy of Stocks and Commodities magazine. So, with that being said, today we're running the MetaStock Online Trader Summit with MetaStock. If you're not familiar with MetaStock, it's been rated #1 in its price category for 26 years in a row now. And it's an awesome product. We're going to be talking about it all day in terms of helping you identify good opportunities in the market. It's awesome. It does a really good job. I wouldn't trade without it. So let's get on to the show, though. Steve Bigalow is our first speaker today. How are you doing this morning, Steve?
Good morning, Jeff.
Good morning.
Good morning, everybody.
How are you?
Doing good. Doing good.
Steve and I, how long do you think we've been working together, Steve? I didn't look it up.
I don't know. It's well over a decade now, isn't it?
I think so, yeah. I remember we kind of put the first thing before I moved to California. Was in California for a couple of years, and I've been back to Utah for like 7 years now, so it's been a while. Anyway,
All right.
I'm going to give you an official introduction. Are you ready?
Okay, go ahead.
So Steve and I have been working together for over a decade. I've had the privilege of kind of doing a lot of events with Steve. We just wrapped up some training classes that he gave to some of our members of MetaStock, and he just does such a great job. I love his patterns. I love what he's going to show you today, and I'm going to get out of the way and let you go, Steve. Let me go ahead and give you the screen control here.
Okay.
Okay, here it comes.
Does that work?
Yep, first try.
Yep. Unusual.
Yeah, right? Your turn.
Okay. Well, good morning, everybody. Welcome to the MetaStock Symposium. I'd always like to go first for a very simple reason, that you've got a slate of excellent speakers today, but the mechanics of what everybody might be doing or can be doing is greatly enhanced if you know what the candlestick signals and patterns are doing. You get that much more clarity as far as everybody else's trading program. So the first thing I usually ask, just so I know how fast or slow to go on the description of each chart, is how many people have seen my presentations before? Obviously a Y for yes and N for no. If you just... Okay, so far 4 responses. All right. So it looks like 50-50. Okay, so I'll try to be a little bit more descriptive on how candlesticks came along. I was a stockbroker back in, I'm not even going to tell you how many decades ago. But I got out of the business because I realized that most brokerage firms didn't have any more idea about what made prices go up or down than anybody else. So I got out of the business. Then somebody uh, introduced candlesticks to me. It was in a very early stage, not early stages, but very archaic descriptions. And somebody said, "You're a stockbroker. Take a look at this." And I figured anything as sophisticated sounding as candlesticks wasn't worth the time or effort. But they kept badgering me. So I finally looked at it and I said, "This makes sense." And the more I looked at it, the more sense it made. Now, it made a lot more sense to me because before candlesticks came along, I was the worst investor in the world. I was even a stockbroker for 8 years. So I would look at a chart and say, yeah, I was usually the one selling down here at the bottom, or I'm the one buying up here at the top. So I could see exactly what I was doing wrong on a graphic depiction. So I wanted to learn everything I could about candlesticks, because every time I looked at a chart or looked at it, I said, yes, this makes sense. And I always use the Rodney Dangerfield description. I was learning candlesticks back when I didn't have anybody to confer with or get a second opinion. I always tell people the only time I could get a second opinion back then was I'd go to the doctor and I say, "What's wrong with me?" He says, "You're fat." And I said, "Well, I think I want a second opinion." He goes, "All right, you're ugly too." So what I learned is out of the 50 or 60 signals, there I learned every single one of them. But as I went back and looked at old charts to see what was happening at the tops and the bottoms, I discovered there was 12, just 12 signals that you really needed to learn, because they were going to show up 99.99% of the time in your charts. We're going to concentrate on the Doji, which is the most familiar of all candlesticks. Now, there's about 18 to 20 different candlestick, what we call top ranked patterns. And I'll let Jeff describe that more. Those are the formulas that we already have over at MetaStock that you can use for finding the best trades. And the reason I say best trades is prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's exactly what candlestick charts are. It's the graphic depiction of what's going on in human nature. So we're looking at the Doji. We're going to kind of narrow down, but everything we do on the Doji is going to be representative of the 12 major signals. There is a Doji rule, which is basically the price will usually move in the direction of how they open after a Doji. Now, I say open. We're going to be looking at daily charts, but candlesticks are the graphic depiction of everybody buying and selling during a specific time frame. So whether you're trading off a 1-minute chart, a 5-minute chart, a 10-minute chart, or a daily, weekly, or monthly, it's still, the charts are going to look exactly the same. So there are the 12 major signals. We're going to concentrate on the Doji, but everything we illustrate on the Doji can be applied to these other, the 12 other signals. So here's the most optimal criteria that we look for the signals. We use stochastics. My stochastics are 1233. And logic from the Japanese rice traders tell us that if you see a candlestick buy signal in the oversold area, the probabilities are you're having a reversal. If you see a sell signal in the overbought area, you're probably having a bearish reversal. Now we have things that can add to the credibility or the strength of that signal, like a gap up from a Doji. And we use this because most people are told by money managers or educators to stay away from gaps. You don't know what they're doing. Candlestick signals and gaps are your best friend because we know what the signals are telling us and we know what the gap is telling us. And a close above the T line. I'll get to the T line here in a minute. So, and these are the patterns. If you know what the signals are telling you, you can identify specific patterns. Again, these are Japanese candlestick type patterns. And the reason for that is investor sentiment works the same way time after time. That's why we can recognize the patterns that occur in human nature. So here's some of the top ranked signals and patterns, and I'm putting these on here because if you eventually get the recording, you can go through and see which ones of these patterns work well. Now, here's the most important slide on my presentation, the T-line. We applied the T-line to our charts years ago. I was making good money, finally, just using candlestick charts. And then one of my first private training students came back and said, put the 8 exponential moving average on your chart. And we eventually put it on and we call it the T-line. It's what we call the trigger line. And it has Fibonacci characteristics, meaning the T-line acts like a natural support and resistance level of human nature. Now, if you combine those two, if you know that candlestick signals are the graphic depiction of investor sentiment, and the T-line is the natural support and resistance level of human nature, the combination of those two give you an extremely powerful price trend combination. So we have what we call the T-line rule, which is if you see a candlestick buy signal and a close above the T-line, which is this black line, the 8 exponential moving average, very simply, you can stay long until you see a sell signal and a close back below the T-line. I was making good money just trading off of candlestick charts, but when I added the T-line, it kept me from getting whipsawed out of positions way too early that I could hold on to those positions. Now, while we're here, the red line is your 200-day simple moving average. Your blue line is the 50-day simple moving average, and this may be either the 20 or the 34, whatever, but the important ones are these two moving averages. The reason for that is every major money manager around the world makes their investment decisions based upon the 50 and the 200. We use it to see what those decisions are at those levels. A lot of people say, well, why don't you use the exponential 50 and 200? We're not using these to make our decisions. We're using these to see what everybody else's decisions are at those levels. So the same criteria works the opposite direction. If you see a sell signal close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. So we can recognize the signals, the uptrend getting a little toppy, but the downtrend starts when it closes below the T-line, and you can stay long until you see a buy signal and a close back up above the T-line. There's a caveat to that. Because the candlestick signals are the investor sentiment, and we look for the reversal signals, and the T-line is a natural support and resistance level, the caveat is the further away you move from the T-line, the higher the probability it's going to come back and test it, which makes, there's our Doji rule, that if you're in the overbought condition, you see some Dojis, when they open it lower, remember the Doji rule, it's going to move in the direction of how they open it as a Doji. You take profits, or after a Doji, you take profits because where's your first likely target? Back to the T-line. Once it gets to the T-line, we've always got the ability to see, all right, is it going to do a J-hook pattern, which is one of the candlestick patterns? We don't know, so why take the risk? You close it out when the probabilities, based upon what the Japanese race traders have illustrated for hundreds of years, you can always buy back if the next buy signal shows up. Which EMA do you use for the T-line? The 8 exponential moving average, Dave. So very simply, the further away you move from the T-line, the higher the probability it's going to come back and test it. So the Doji is one of the most recognized of the 12 signals and patterns. It's where they open and close at the same level. If the trading range is very small, it's a Doji star. A big trading range during the day or whatever time frame, long-legged Doji. A gravestone or a dragonfly Doji opens at the top, trades lower, and then trades back up and closes at the top. It looks like a dragonfly. And the gravestone Doji is where they open it, they take it up and close it right back where they opened. The Japanese rice traders described this as being the warriors coming out of camp, getting killed, being pushed back to back into camp, leaving their dead all over the field, thus the gravestone doji. The aspect of a doji provides one very significant piece of information. They're they're demonstrating indecision between the bulls and the bears. So where do the dojis work most effectively? Very simply, if you see a doji in the oversold area, start watching for a reversal signal. The best friend signal is a doji followed by a gap up. And we have expectations, 2 expectations on your best friend signal. 1, a high probability it's going to head up, and 2, the strength or the magnitude of that uptrend is going to be very strong. Now, what does this do for the candlestick investor? Most people say, well, shoot, I don't want to buy a stock that's already up 3, 5, 10, 12, 15, 20%. If you see what the signal is, you can expect what's going to follow after that. So anytime I see a doji in the oversold area, notice where this came back from. This downtrend came right smack dab to the 50-day moving average and gapped up. Now, what's that tell us as far as what's going on in investor sentiment? Well, we can see that everybody that is watching to see what happens at the 50 started buying at that point. What is your candle time frame, Philip? These are all daily charts, but this could be a 10-minute chart, a 1-minute chart, an hourly chart, whatever time frame you're trading. If you go back to the basic description of candlestick signals, they are the graphic depiction of everybody buying and selling during a specific time frame. Doesn't matter whether that time frame is a 1-minute chart or a monthly chart. It's the same scenario. And the indicators all stay the same. We still use 1233 as our stochastics. The T line, the 200, the 50 are all the same, whether you're using a 1-minute chart or a monthly chart. So anytime I see this, now remember our best friend, gap up. Remember our T-line rule. It gapped up and closed above the T-line, giving us a high probability we're now in an uptrend. This not only illustrates a change of investor sentiment, but that gap up tells you they've changed their investor sentiment with great strength. Okay, all right. Somebody, can you please unmute my viewing? All right, I guess people are having some problems, Jeff. So anytime I see this oversold, first of all, if I see a candlestick reversal in the oversold area, I'm starting to take a look. If I see a doji, there's a simple doji rule. If you see a doji in the oversold area, you need bullish confirmation to tell you that it's time to be buying, or otherwise the Japanese rice traders say the weight of the market could continue to push the market down. Notice what happened here. Oversold, doji, gap up, and a close above the T-line. All the elements you need to tell you that there's been a change of investor sentiment. Where would you enter on the close of the doji or on the open of the next day? Usually on the open of the next day, unless you're actually watching that chart. You'll find, as Jeff will sometime illustrate, that you can do very simple scanning techniques to find the best trades each day using MetaStock scanning. So I might not even be paying attention to this, but when I did my scans that night, I can see I've got a big reversal closing above the T-line, best friend signal. Now it goes on my list to make sure it's confirming the next day. How is that different from Bollinger Bands? It's probably, I don't know the exact definition or exact answer to that, Jim. But here's the nice thing about candlestick analysis that I found out through the years. We know the signals work. There's a basic rule on Wall Street. If something doesn't work, it disappears very quickly. Candlestick signals have been around for 400 years. And we're just learning about them in the last 30 or 40 years, not because they were kept secret or anything else. It's just nobody ever paid any attention to them. Excuse me. So that was getting to the answer that if somebody says, well, put Bollinger Bands on or put this XYZ indicator, as you can see, my charts aren't very cluttered because the main impetus of buying or selling is the signal itself. Everything else just works as a confirming indicator. So if you like working with Bollinger Bands, you can throw it on there. If it works to improve the probabilities of being in the correct trade, you keep it on there. If it doesn't do very much for you, take it back up. Take it back off. Does the gap up candle also have to close? No, it doesn't. Remember, Daniel, the further away you are from the T line, let's say, for example, you saw the Doji down here and it gapped up. What becomes the first expected target? Back up to the T line and then see whether it gets through the T line or not. And a stop, if the logic is that there's going to be an extremely high probability that you see a Doji, a gap up, and starts trading positive, what does our probabilities tell us? Extremely high probability we should be heading up, which makes that stop loss very simple in candlestick analysis. If this is where it's supposed to go, if it opens positive, where should it not trade at all? Back below the Doji. If it does, it means the bulls aren't there. You close it out. So the Doji, well, it doesn't have to appear, Anderson. It works effectively because, as you can see, there's Dojis in the trend. They become a signal. Just because a candlestick formation looks like a signal, it's not a signal unless it's occurring in the right conditions of the trend. So if I see that best friend and I can see a pattern that everybody else watches, like the Bollinger Bands, I'm not the Bollinger Bands, a wedge, yeah, it tells me it's time to be buying. Notice what I have, a wedge, and then a little Doji gap up above the T line. And notice what happens at the moving averages. This is where we can see when it's time to take profits and when it's time to get back in. So a Doji bullish confirmation is good. A Doji hammer bullish confirmation is good. A Doji gap up is very strong. What is the number of days? The 8 exponential moving average on the T line. It also allows you to identify, this is what we call a fry pan bottom. You couldn't trade this one way or the other. But as a candlestick pattern, you can see what's building up, investor sentiment. And what do we expect? When it breaks out, we know we're going to get a very strong price move. So the fact that it broke out with one of your strongest signals, your best friend signal, tells you can be buying anywhere in here because more than likely you're going to have a strong price move. It works just as well. All these signals and patterns work just as effectively on the bearish side. So if I see a Doji gap down, what's that tell me about my uptrend? They finally pulled the plug with a lot of force to the downside. Doji gap down. And what's our confirmation? Doji gap down, back below the 50 and closing below the T line. They're still gapping it down, telling you there's still more strength to the downside. Do you use these in multiple time frames? You can. If I was shorting and I didn't know whether they were going to waffle it back up, I flip to my 10-minute chart. Or if I'm trading soybeans during the day, or lean hogs, or the dollar, if I'm day trading, I'll use. I'm more up to use the 10-minute chart. is DT or DB the what commonest pattern?
I don't know, double top or double bottom.
I don't know what a DT or a DB is. The signals and patterns.
But I think it's okay.
Once you set up your scans, you're going to find, if you're looking for all the signals and patterns, you're going to find, no matter how strong, weak, or flat the overall market is, you're going to have 3, 5, 10, 15, 20, 30 good chart patterns each day. So at that point, it's just a process of picking out which one of those good patterns are the best ones. Oh, how far back was that one? Whoops, I don't know. Was overbought, but you were buying. Oh, that was at the fry pan bottom? Yes. The difference between a fry pan bottom or a pattern is if you're looking for a signal, you're looking for a signal in the oversold area. If you're looking at a pattern breakout, it's usually going to occur when your stochastics are already in the overbought area. So that's the difference. The signals, you look for an oversold or overbought condition. The patterns, you're usually looking at when they're already now up in the overbought condition. Would you describe the fry pan formation to be definable as preceding period of limited? Well, yes. I mean, you can visually, whatever you want to call it, you can visually see there's very lack of volatility during that time frame. So that is what makes the Greeks irrelevant when you're trading candlestick analysis, because whatever the Greek that was setting up here becomes obsolete when you see that new price move breakout of a pattern. Another pattern is the moving averages. The blue is your 50-day simple moving average. The red is your 200-day simple moving average. And the T-line is your 8 exponential moving average. Now, on some charts, we have what we call the 3T line, which is the 3 exponential moving average, which allows you to see things a little bit faster as far as price movements. So let's see, did I talk through what I should have been talking now? Yep, I was talking and not illustrating. Okay. So because the Doji, if you see a Doji type day, which is a day of indecision, in a combination of more than one day or one time frame, such as a Doji hammer followed by a bullish engulfing signal, we call that the left-right combo. The Doji's your little left jab. The bullish engulfing is your big roundhouse right. And there is an extremely high probability that the reversal has occurred based upon that signal. So high that most signals you require a bullish confirmation the next day, whereas the left-right combo, you kind of expect that combination the next day. So if I had been short for some reason and I saw a left-right combo, I don't need to wait for it to close above the T line or even bullish confirmation, because I know the probabilities are so strong that that reversal has occurred. So anytime I see this, now you can start adding what we call 2 plus 2 analysis. Kind of got a left-right combo in the oversold area. The next day they gap it up. What do we want to see to confirm a signal? That the bulls are still there. And what's additional confirmation the bulls are still there? When they gap it up from that signal. And then look at the final of that day. They close it above the T line. So I've got a left-right combo, which I know is extremely high probability in the oversold area, gap up and close above the T line. Probabilities are extremely strong. We're in the next price move. The double top or double bottom. We don't trade off of double tops or double bottoms, but we're trading off the signal But if it creates a double top or double bottom, we can visually see that instantly, and we know that's what everybody else is watching. Remember, the number one criteria for showing that there's been a change of investor sentiment is the signal itself. We can now identify how relevant that is. This is what we call a scoop pattern. A flat handle, and then the little pullback, doji, bullish left-right combo, kind of a scoop. And what do we know about the left-right combo? Very strong probabilities it's heading up. What do we know coming out of a scoop pattern? Very strong probability of slingshot effect to the upside. So you start adding all this up, you know there's definitely been a change of investor sentiment. Scoop pattern, flat handle, left-right combo, close above the T line. We're buying immediately on the next positive trading day because this is what we expect coming out of that pattern, and we get it confirmed by the left-right combo. So if you put everything into your visual analysis, which is basically what candlestick analysis is, it's telling us that we're looking for signals in the oversold area, downtrend, 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 and look what they did. They did a doji right smack dab on the 50. What's that tell us? Immediately it tells us, well, there's some indecision going on here at an obvious support level. The next day, they do a bullish engulfing signal off the 50 in the oversold area. We're starting to buy here because that's telling us there's lots of buying going on here with a strong signal. And if it starts trading positive, what else happens? They break this downtrend. We're probably in wave 1, now going into wave 3. And how long do we hold on to wave 3? Look at our doji right here. What would be our doji rule? If they open it lower the next day, they've probably reversed it. It opens positive, kind of negates that as a sell signal. How long do we hold this? Until you see a sell signal and a close back below the T line. Bearish left-right combo, closed right on the T line. If you were long, we would have stopped out right here. If you're ready to go short, as soon as it opened lower, what did it tell us? Bearish left-right combo, gapping down slightly below the T line. We're definitely in a downtrend. What about what? I don't know, which one were you referring to? Oh, yes, that was. But at that point, if we were short or if we were thinking about buying, obviously we wouldn't be buying right there. But we would be buying at the end of the day when we did our scans and found the left-right combo. Note where this gap down occurred in the oversold area. Left-right combo closed below the T line. A doji sandwich, very simple to use. A doji sandwich is merely a bullish candle followed by a doji. Now look where this doji occurred, just above the T line. What's our doji rule? If it opens positive, it's going to trade positive. And if it trades positive, we can pretty much expect that the magnitude of this candle right here is going to be the same as this candle right here with the doji sandwiched in between. So if we know that as a high probability setup, what's it tell us about our T line? They're staying above the T line, so you can be buying because there's an expectation after a doji sandwich. And the expectation is there's going to be more upside. So anytime we see that bullish engulfing and a doji right smack dab at the T line, if it opens positive, we can be buying with great confidence that the probabilities are that there's been a reversal. So there's always the rhetorical question is, well, what if it opens higher and immediately starts selling off? Very simple. If you bought it here, where's the last place you want to see it trading? Back below the doji. That's where you set your stop. You probably have heard many times in your investment career to stop or cut your losses short and let your profits run. I've been doing this for over 40 years, and I've never heard anybody tell you how you cut your losses and let your profits run. Candlestick signals have very simple logic to it to tell you when to be in a good trade and when to immediately get back out of a trade. Stochastics are 1233 slow stochastics. Are the tails inside a gap ignored? And is it still considered a gap? Pretty much, yes. Because what do we want to see after a doji? See it open positive. Remember, where it opens and closes are the important factors of candlestick analysis. That's what creates the candles. The tails, now obviously it's a little bit more stronger if you don't have a tail to the downside. If it opens and immediately trades positive. But the tails are less relevant. It's where they open it and then eventually where they close it. So if I see a doji sandwich that's heading for a breakout area, if I can assume that if they open this positive, that this candle is going to be somewhat the same magnitude as this candle right here, and then I can expect more upside, that's pretty much telling me that this little resistance level is not going to act as resistance anymore. Yes, remember, Prada, candlestick signals are the accumulative knowledge for everybody buying and selling during a specific time frame. Now, whether you're trading this off the 5-minute chart or the 10-minute chart or the weekly chart, depending on the time frame that you want to trade, it's still all the same. It's still the accumulative knowledge of everybody buying and selling during that time frame. So the one thing that I try to illustrate to everybody is candlestick signals are just the graphic depiction of what's going on in human nature, which has been the most consistent consistent indicator in investment history. Investor sentiment does not change. It hasn't changed for the last 400 years. It's not going to change for the next 400 years. So you don't need to be a highly skilled technical analyst. All you have to do is kind of learn the patterns and the signals, and now you're going to put yourself in situations where the probabilities are greatly in your favor that the price moves are going to head in that direction. 1233 is for stochastics. Now, some people like to use RSI. The thing I tell people is if you like using something, put it on your chart. If it works for you, keep it there. If not, you still got the basics that you can go back to. What would you be selling on the red candle? I might be taking profits here with the idea I'm going to wait to see if it pulls back to the T line and see what it does. And then if I see that it's holding the T line, I might be buying. Is there times where I might sell here and buy here? Definitely. But when I'm selling here, I don't know whether it's going this way. But when I'm buying here, I know what that pattern this is. This is what we call the J-hook pattern. That we know that this move right here and this move right here will be the same. Do you get confirmation from higher time frame signals, or do you just enter based upon a single, I don't know what a TF is. I buy based upon, look, my kind of a fry pan bottom. Look where my doji sandwich is, or my doji is right here at the 50. And if it's trading positive the next day, it's going to be the same magnitude as this. What's that tell me about my 50? It's not acting as resistance. What does it tell me about my fry pan bottom? It's still confirming. And we got a very simple rule using a fry pan bottom. We expect a breakout. So how long do we hold it? Until we see a sell signal and a close back below the T line. I'm not trying to buy at the absolute bottom. I'm not trying to sell at the absolute top. I'm trying to make the high probability trades in the middle or time frame. I'm trying to make the that fat part. If your correct trade ratio improves dramatically, the compounding effect is going to be much, much greater than trying to pinpoint the absolute bottom and the absolute tops. If I'm buying based upon, I don't understand, do you try to get confirmations from higher time frame? No, not necessarily. Now, if I'm looking at this and it looks good, I'm usually buying them. I'm a swing trader, so I'm buying based upon what the daily charts are doing. If I'm a longer term trader, I might use a combination of the daily charts and confirm it with the weekly charts. I don't know how many more slides. I'll try to get, is the T-line 8 based upon whether you're using a day chart? No, you keep it exactly the same. That last chart, this could have been a 10-minute chart. This could have been a weekly chart or a daily chart. They stay exactly the same. Investor sentiment works off the same basis, and these indicators are indicators of what's going on during that same basis. So a bearish doji sandwich tells me there's more downside. Bearish doji sandwich tells me the 50 is not going to be acting as a support level. Just allows you to understand that if you're below the T-line and you're seeing confirmed sell signals, you're going to put yourself in situations where the probabilities are greatly in your favor. So we know that the doji sandwich create more upside. So there's our doji sandwich. Again, a 2+2, what I call convergence analysis. This is a bullish harami, that white candle, an inside day known in Western terminology. Then another bullish harami. Bullish haramis are one of the 12 major signals telling us that the selling has stopped. Now I've got a doji sandwich that closed above the T-line. So look at everything I can instantly identify. In the oversold area, I'm seeing buy signals that are telling me the selling has stopped. Then I've got a doji sandwich that closes above the T-line, and I know the results of a doji sandwich. There's going to be more upside. This becomes a very good place to start buying. Doji sandwich right off the 50, that if it opens positive, it's telling us the 50 is not acting as resistance anymore, and this level is not acting as a resistance. This is what puts you in situations. Now, are all these moves going to be huge like this? Definitely not. But what you're doing is you're putting yourself in situations where the probabilities of being in these price moves are greatly enhanced. So if one doji means indecision, a series of doji means greater indecision. So I'm watching this. We're in the oversold area. Not anything here to tell you want to buy. Just a bunch of doji type days. But what's that telling you? There's lots of indecision down here. What's this tell you? They finally made up their mind and there's no indecision. So the longer this indecision period is, this is more compelling that your uptrend has started. Series of dojis, get ready to be buying. So the dojis, because they're so recognizable, if that's the right word, basically tells you there's going to be a change of investor sentiment. So very simple scan parameters, which I'm sure Jeff sometime will demonstrate to you. Stochastics in the oversold area, you see a doji formula or a doji setup. Then you can scan for the biggest percent move the next day. That's where you're going to find your reversals or your best friend signals. You can see what's happening in patterns. Look at our doji gap up. Now we can see our J-hook pattern, which is wave 1, the J-hook, and wave 3 being the same magnitude as wave 1. And what started the strong move on wave 3? Our best friend signal and a close above the T-line with stochastics curling back up. So this is not rocket science. Prices move the same way time after time based upon human nature. Look at our fry pan bottom breakout. What do we expect coming out of a fry pan bottom? Very strong price move. This is what we call the classic pattern. Because there, notice the pullback, indecision, then starts coming back up. And look at where our doji sandwich occurred just after breaking out. We call this the classic because the fry pan bottom creates a very strong price move. The J-hook pattern sets up with a prerequisite of a very strong price move. we can see the nature of the pullback, very indecisive. Now we can be buying if we took profits here at our bearish harami, because it never closed below the T line. And now we're in wave 3. And what do we expect from wave 3? To be the same magnitude as wave 1. There's a morning star signal. That's one of the 12 major signals, a doji gap up and a close. If it opens positive, we're not sitting around saying, oh man, I don't know whether I want to buy this. They gapped it up. We're buying immediately because we know exactly what that reversal signal indicated. So the combined confirmations, there's our morning star signal. We know that's one of the 12 major signals telling you there's more upside, or confirmed it's going to be upside. There's our doji sandwich. And what do we expect coming out of a doji sandwich? More upside. So basically, we've got a morning sandwich, or we call the McMuffin, which is a combination of these two signals. So anytime I see this setup, we're buying, because that tells you there's been a drastic change of investor sentiment. Morning star signal, look where your doji occurred. Look where the next candle closed above the T line. There's your McMuffin, more upside. And that's, again, there's the classic pattern. Come out of a fry pan bottom. There's your J-hook pattern. There's your left-right combo, bullish confirmation that tells you this level is not acting as a resistance. We know what to expect here. The same move as here. And this, oops, I got more of this. Let me see if I can go. Whoops, let me go back. So everybody that was watching Tesla this past week, look at all the indications, or I can show you all the indications of why we were taking profits or recommending taking profits up here. And I'll get to that in a second. So you can definitely improve your trading and control your emotions. Everything that I've done in candlestick analysis is based upon trying to keep my emotions out of my trading. The worst thing that most people have going against them is their own emotions. Because the candlestick signals produce high probabilities of results. Now you make your decisions based upon what will normally happen versus what you think should happen. So if you know the signals and you know the patterns, and it doesn't take very long to learn them because it's all visual, know what gaps indicate, and can use convergence analysis, you're now able to see when it's time to take profits. Tesla kept moving up. We started recommending in our options room buying calls here. And then notice what didn't happen this whole way up. They couldn't close it below the T line. Then look what happened. They started gapping it up. Gapped it up again. Where the Japanese race traders tell us that most people buy, this is one of the basics. Most people buy exuberantly at the top, or they panic sell at the bottom. So what illustrates exuberance? They're gapping up and trading big. They're gapping up and trading big. What was our screaming alert? The further away you move from the T line, the higher the probability it's going to come back and test it. This was our alert. So what do we do from there? How do we take profits up here, even though on that, if it's trading right here, what do we got? A big green candle. How do we know to start taking profits? Because we have the alert that we're a huge way away from the T line. So we flip to our 10-minute chart. 10-minute chart, gapped up, hasn't closed below the T line. We're moving our stop up. Moves up, we're moving our stop up. Moves up, we're moving our stop up. Moves up, we're stopped out right here. And what happens when they pull the plug? Everybody comes screaming out of the trade. So we had a lot of people in the options room taking profits right here, and some of you even being aggressive and going short after that, because where was the next likely target? Back to the T line, which in this case was quite a few hundred points. So, and if you held on to it here, let's say you just got back from your golf game, you saw it close here, what's your strategy for the next day? the Doji rule. If it opens lower, you take profits because it's going to move in the direction of how they open it after a Doji. Identifying reversals. Candlestick sell signal, signs of exuberance at the top, the price moving too far away from the T line, and then you flip to the 10-minute chart. Everything that has been developed in my case, again, was to keep my emotions out of my trading and understand what happens in human nature. TJ, that's, up to everybody who's trading, depending on what they want to do as far as their own option trading. So basically, you're trading ABC swings. Well, I guess you could put it that way. Basically, I'm trading the signals and patterns that tell me there's changes of investor sentiment. So looking at STNG, one of the trucking companies, look what we had on Friday. Or, were you open Friday? Yeah, we were open Friday. There's your bearish Doji sandwich. If this opens lower, what's our strategy? We're shorting because now what do we have? A wave 1, wave 2, bearish J-hook, wave 3. Or LAUR. Look what was created in this one over the last few days. There's our morning star signal. There's our Doji sandwich. So there's our McMuffin. What's our next likely target? If this is wave 1, wave 3 is going to be way up here somewhere. Will it move to that direction? Or move that magnitude? We don't know. What becomes our number one criteria? We stay long until we see a candlestick sell signal. So anyways, that's our high profit signals and patterns. All that information that we looked at as far as the Doji can be applied to all the signals. And so everything that you see on a candlestick chart, if you look at it, the one thing that kept hitting me in the side of the head when I was learning candlestick analysis was, yeah, this makes sense. So all we're really looking at is stuff that we're probably taught. We just don't know how to activate it. Candlestick patterns and signals tell us what to do, when to activate it. I think that's about all I got. So if there's any questions, I know, let's see, do we have a special? I think we're doing a little special. Jeff will describe, but I guess we're giving everybody a free week on our in our chat room. But the reason I became good at candlestick analysis was because I started off as the worst investor in the world. And I could see graphically where I was doing everything exactly wrong. So all I had to do was say, all right, if I turn my trading around 180 degrees, I'll be buying with the smart money and I'll be selling with the smart money instead of being the one doing the opposite. All right, any questions?
All right. Hey, Steve, how are you?
Doing good.
We haven't had a lot of questions I couldn't answer off of YouTube, but we did answer them quite well. TJ Packman had a question. I don't know if you had a chance to get to, but he wants to know if you recommend buying in the money options.
Yes, and I answered that by saying that's up to each individual. We're showing the direction or what to do. Remember, buying options is merely a method of buying the stock. So if you're aggressive, you may be buying out of the money. If you're less aggressive, at the money or in the money. That we don't try to teach people what to do. That's up to each person's investment nature. But we do put out recommendations, and we do a lot of spreads because we know that most price moves are going to go to a level before profit taking. And so probably about 70 to 80% of our recommendations are spreads because of the added leverage, the less money exposed, and the lower amount of price move to still get a very effective return with a lot less risk. So we do training sessions on what type of option strategies to use for specific price patterns.
Paris asked a question. Can we watch the video on YouTube later? Yeah. Within an hour of the end of the GoToWebinar, you can actually just go in and we'll email you the links for the YouTube channel. So those will be available within an hour of the end today. So there you go. OM is asking for one more joke, Steve.
Okay. I just brought the one back up that I haven't told in quite a while. It's about the lady. I tell people you don't have to over analyze candlestick charts. It's all just graphics of what happens in human nature right there where you can see it. And so the way to illustrate that you don't have to overanalyze is the lady that brings her parakeet into the vet and lays it down on the table and says, "Can you help my parakeet? He's been my best friend for years and there's something wrong." And the vet says, "Well, ma'am, I think your parakeet's dead." She goes, "Oh, no, isn't there something you could do to check? I mean, he's been my best friend." He goes, "All right." So he goes out to the back of his lab and brings in his clinic and brings in a cat, lays it down next to the parakeet. The cat sniffs it and then looks up at the vet and shakes its head. And he goes, "Ma'am, I'm sorry, your parakeet's dead." She goes, "Oh, no. No, are you sure? Isn't there anything else?" He goes, "All right." So he goes out to the back of his clinic, brings in this great big Labrador retriever, comes bounding in, puts its paws up on the table, sniffs the bird, looks up at the vet and kind of shakes his head and goes, "Ma'am, I'm sorry, but your parakeet's dead." She goes, "Oh, no." So they go out to the front desk. So he goes, "Oh, that'll be $250. She goes, "You're charging me $250 to tell me my parakeet's dead." He goes, "Ma'am, I would have done that for $18, but then you wanted a CAT scan and a lab report after that." So you don't have to overanalyze candlestick charts. They are very simple, that once you learn what happens with human nature, now you have control of what your trades are based upon high probability expectations off the signals and patterns.
All right. Very good. All right, Steve. I'm going to actually kind of take a little bit over just so we can kind of show a few things. I want to say thanks for coming today. We really appreciate it. And as always, great job.
Thank you.
All right. And then I do want to, just to answer your question, I believe it was Chris that was asking about the templates for this. We actually do have templates that are available, and I wanted to kind of show a chart real quick. I was looking at the time, getting a little bit nervous about it because I do want you to see this. This is one of our most successful add-ons we've ever released. This is the one that we worked with Bigalow on for a number of years. And what it actually does is it'll identify the different patterns, and there's about 30 of them that are here on the chart, and I'm going to show you kind of the list here. But I've just got it up with a chart of the Dow Industrial Average, and you can see every time one of his Doji best friends, there was just one that happened in the market on the 4th of February, showed up right here. It's actually labeled on your chart. I'm going to zoom in just a little bit so you can kind of see these a little bit better. You had a Doji at the top right here. Right here you had a fried trend and an uptrend. You had a bull kicker. So all of these are automatically identified and labeled for you. They also accompany all of the indicators Steve uses in the trading that he does. And you'll notice over here there's a commentary that actually helps you explain it. So if I was to click on this Doji best friend right here, it's actually going to tell you exactly why that pattern is actually happening. In this case, it's a Doji followed by a gap up, an indecisive day followed by a decision. And it'll tell you that. It'll tell you exactly what you should be looking at for enhancements to the trade. And all of these are automatically identified for you. And what's more is you can actually scan for them. So with the MetaStock exploration, you can go in here and very easily run a scan. And if I wanted, I've run this already today. But if I wanted to just find like one of the Doji patterns, like I wanted to find a Doji dynamite, I ran this against all of the Oshable stocks. It really was very quick, but out of all of the 4,000 stocks I ran it again, there's about a dozen or so Doji best friends that actually exist on the chart for that day. So obviously, let me go back in here a little bit, and we are running a little bit on time, and we always do kind of run a little bit with time, but This particular product, the Candle Profit System 2.0, I'm extremely proud of. We've done two versions of it. Both of them have been highly rated by the people we have review our products in Stocks and Commodities magazine. Both of them have also been rated one of the most popular products for not just MetaStock, but for any product that's out there. So here's a list of the patterns that are identified. There's about 30 or so different multiple day patterns that it'll find and notate and that you can scan for on a chart. And then in addition to that, here are the single day patterns that Steve finds important. So with any of these particular patterns that you see on the chart, you'll be able to open up a chart, you'll be able to see them identified, you'll be able to see an English definition of exactly what's going on in the chart. You'll be able to also scan for them. So it does a really, really good job of helping you with that. And all in all, it includes a 6 explorations, which is just what we call scans, an expert advisor, some layouts, and there's about 36 different patterns that are available as part of it as well. One other thing that we just did with Steve, and we just wrapped this up last week, is we put together a series of classes where Steve sat down with some of our MetaStock users and actually did training on all of these. So like how to, here's the sessions that are available. He did a total of 3 sessions. I did a 4 session, so there's a total of 4 sessions, 3 that are taught by Steve that actually kind of talk all about his patterns and how to use them and how to implement them. The bonus class, I actually sat down and said, okay, well, here's really how I kind of organize and get everything ready in MetaStock. And the class series, especially the part that Steve did, were amazing. He did such a good job. And we had such good feedback on the classes. So what I wanted to do is I wanted to make these available for everybody. And what we're going to do, normally if you bought the Candle Profit System and the training and you paid for them separately, it would cost about $1,198. Here at the Online Trader Summit, you can get both the add-on, one of our most successful add-ons, and Steve's training for $598. So with that, if you need a copy of MetaStock, we'll be talking about MetaStock all day, but if you need a copy of MetaStock, we'll include a free trial of MetaStock at that price. MetaStock, just to kind of give you real briefly, it's just been rated number 1 in its price category for 26 years in a row right now. So if you'd like to order that, or if you have questions about it, give us a call at 800-882-3040. Or you can visit us online and talk with one of our sales guys at metastock.com/saleschat. Okay. We are also offering a Trader Summit pack that includes MetaStock real-time for 3 months, Zenith data for 3 months, both the Candle Profit Systems 2.0 and Steve Bigelow's classes, value charts, which we're about to talk about for an hour, Trade Trend, Chuck Hughes, Prime Trade Select, 2 years of Stocks and Commodities, and an Unleash the Power of MetaStock. Normally, all of that purchased separately would cost you about $4,487. We're offering that as a bundle price for $19.45. So you can get all of these great products that we're going to be talking about all day for just $19.45, which is a savings of over $2,500. So give us a call, 800-882-3040. Or you can chat online with us at metastock.com/saleschat. I do see questions coming in through YouTube, and I see them coming in through GoToWebinar. I'm going to answer those by typing, so just give me a second. We are about 4 minutes late, so I'm going to kind of do our best to get back on schedule today. I do want to thank Stocks and Commodities real quick for sponsoring today's session. Hopefully when you subscribed, you registered for today's session, you got the free magazine. I'll copy and paste this link into the chat several times today to allow you to go and get a free copy of Stocks and Commodities magazine. All right. And then, of course, we're MetaStock. So our next presenter today is Thomas Wood. Thomas does a really, really good job. He's going to talk a little bit about some patented technologies that he has for identifying the value of a stock and good times to get into a stock and a future or any instrument, really. So let's go ahead and bring him on real quick. And let's see how that works. Thomas, how are you doing today?
Hey, doing pretty good. How are you doing?
I'm doing really, really good. Sorry we're about 5 minutes late, but
Oh, it's no problem.
we always are. So, sorry, not sorry. Anyway,
All good.
all right. Let's go ahead and get you the presentation over here. So
All
let's
right.
do this, and I'll let you know when we can see your screen. All right. All right. It looks good, Tom.
Alrighty. Thanks, Jeff. Appreciate it, man.
We do have quite several, probably about 100 people watching on YouTube. If we have questions for you at the end, we'll make sure you get them.
Good deal. Sounds good.
Okay. Thanks.
Alrighty. Well, thanks for having me. It's always a pleasure to come and talk at a MetaStock event. So thanks for having us out here. Today, for those of you not familiar with my voice, like Jeff said, my name is Thomas Wood. We're going to be talking about trading with value and momentum and how to use this, how to use value charts and momentum indicators, oscillators in any type of market and time frame combination. But before we get into the good stuff, before we dive into everything, we got to go through a risk disclaimer really quick. Just keep in mind, trader investing carries a high level of risk. There's always a chance to lose money, just like there's a chance to make money. With that being said, we always tell everyone, look, if you're going to start trading, only trade with risk capital, meaning don't go take your son or daughter's college fund, money that you need for something else, and start trading with it. There's twofold reasons for that. A, if you do lose it, it's no big deal if it's risk capital. But B, it also takes a huge burden off your shoulders as a trader of sitting there going, I have to be right. I can't mess up. I have to make this work. It makes it a lot easier for you to keep your emotions out of your trading. And the other thing we always tell people is, look, before you go start trading live in the first place, go learn how to trade simulated. Go learn how to trade with fake money first. If you can't make money with fake money with no emotions, you're not going to be making money with real money in most cases. Then along those same lines, CFTC Rule 4.41, we have to show you, this is basically just a hypothetical disclaimer saying, look, past performance is not necessarily indicative of future results. Although I wish I could show you examples of the future, I obviously can't. So we're using examples from the past, and there's no guarantee that it's going to happen again in the future. All right. So with that being said, most traders, when they start trading, they actually end up, we've all heard that statistic, most traders lose money, right? But most traders don't actually go in and just boom, all their money's gone. They actually start off decent and they start building really bad habits. And this is actually an equity curve from a person I worked with a couple of years ago. And when he came in and he said, he started off making money and he started building all these bad habits. And then as those bad habits kind of came to fruition, they end up blowing up their account. All right. And that's how most traders end up doing that. And it makes it really, really difficult for them to start off learning the correct way to trade. So one of the things I always tell people is, look, you need to learn the fundamentals first. Always start off with learning what I call price action, which you got a really good education on a lot of price action trading here just a minute ago with Steve. Price action is, in my opinion, one of the foundational, fundamental things you need to look at. But then in addition to price action, we can kind of enhance our probabilities by adding on filters. So the next thing we look at is momentum. And the third thing we look at is value. So we start off with the basics, then we start adding things to it that give us confluence with our setups that then increase the probabilities of success. Okay, so with that being said, I got a quick question for you. Where are you with your trading right now? You making money? You losing money? You breaking even? Where are you? Making money, losing money, breaking even. Good deal. Yeah, there's a few things that I always check when determining whether or not a trader's making money or losing money, or what's causing them to lose money, I should say. The first thing I always look at is, do they understand how to read price action? Do they understand how to read the price chart? And the second is, do they understand how to combine value and momentum with price-based setups? All right, because these things go hand in hand with each other. And that's how we really start getting what we're after, which is consistent equity curves, consistent profitability. Now, these are a couple different traders I've worked with. This is Michael's equity curve over here. This is Dave Glissmeyer's equity curve. This is Sherry's equity curve. All these are trading real money. And one of the things I want you to know about them is they all have different strategies, but they all have the same foundation. They all have the same fundamentals, and they understand how to combine price, momentum, and value to determine potential trades. And that's what we're going to be focusing on today, is combining price, momentum, and value. But before we dive into that, let me introduce myself a little bit more. This is me, Thomas Wood, and my beautiful wife, Dora. And a couple of big things that always get asked, and I always want to address them. First off, Thomas, you're really young. Yeah, I'm pretty young, but I've been trading since I was about 13, 14 years old. And I've already spent more time trading real money than most people will in a lifetime. It's the only thing I've ever done in my professional career is trade for myself, trade for others, and teach people how to trade. And then the other question that always comes up is, well, if you're such a good trader, then how come you're not just trading for yourself and ignoring everybody else? Why are you taking time to teach people? And I say, that's a great question. Well, in order to understand that, why I do what I do, you need to know a little bit more about my background. The whole reason I got started in trading in the first place, my father's who got me into the industry. And he said, look, Thomas, you don't want to be doing this backbreaking work that I'm doing. He owned a construction company. He said, if you want to make the money that you want to make and have the freedom to do the things you want to do and spend time with your family that you want to spend with your family, then one of the best ways to do that is trade. So they're in a winning position that's making them money, and they're afraid to give back those unrealized gains. So they cut their trade off too soon. But they're hopeful and they're losing trades. So they're in a losing position to go, I'll just give it a little bit more room, or I'll just give it a little bit more time. We'll see if it'll turn around. They get hopeful that it's going to come back. If it just gets right back up to even, I'll close the trade. If it gets back with only $200 loss, I'll go ahead and get out of it. So they're exactly backwards from how you should be. You should be, as a trader, hopeful in your winning positions that they're going to continue to run and make you more money, and fearful in your losing positions that they're going to lose more money. So you want to get out of them quickly and cut your losers off short and allow your winners to run. All right, that's the first big thing. All right, the second thing is confidence in approach. So how many of you look at a chart, you see the setup, you go, that's what I was looking for. And you go, but I don't know if I really want to buy this one. So you don't have the confidence to actually click that button to buy when you're supposed to. And then that market starts to run. You go, shoot, I knew it was going to go. I knew it was going to start running. So you jump in late and now you're chasing it. And that comes from a lack of confidence in your approach, a lack of confidence in the strategy. And that happens to a lot of traders. And the third thing is consistency in gains. So it's not just, I shouldn't have phrased this as consistency in gains, it's consistency in trades. Okay. You know how I showed that equity curve earlier where it was blown a count, but it was up, 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 and then boom, boom, boom. Well, most traders go just like that. And what happens is they have these big blow up days and they don't have consistency in the types of trades they're placing, the types of risk they're taking, and the types of profits they're making. So instead of having that smooth equity curve that's steadily climbing, they end up with equity curves that look like a roller coaster ride, spiking up and then turning right back around and spiking straight back down. Okay, so one thing you got to understand is in order to be a more consistently profitable trader, one of the things that professional traders do a really good job of is maximizing their profitability, having confidence in the strategy they're trading to do the right thing when they're supposed to, and then having the consistency in their trading. So what are we going to be talking about today, and how is it going to help you? Well, we'll be discussing the three components of trading, what they are, placing a trade, price, momentum, and value. We'll talk about understanding the fundamentals of objective value, what we mean when we say objective value. We'll talk about how do you read the value charts indicators, how do they work on MetaStock, and we'll talk about intro to value range trading, as well as combining price, value, and momentum to identify opportunities. But one thing I do want to go over here with you here is what we call the law of diminishing intent. All right, and that is the law of diminishing intent applies to everything, but it also applies to trading and learning things. And that is we always start off with the best intentions, right? We always start off with the best intentions, and a lot of us, the further we put it off, the further we actually procrastinate taking action, the less energy and effort we're going to have and to actually follow through with it. So I would encourage you, look, if you decide, you know what, today's the time I'm going to make a change, it's actually time to stop doing what I'm doing, take action. Don't be that person that just sits on the sidelines and never actually jumps in with both feet, never actually commits. All right. So let's dive in here with the three components of trading and what they are. But before we dive into that specifically, I have another question for you. So what's the first feeling you get when you're about to place a trade? When you're about to buy or sell a market, do you have anxiety? Do you have uncertainty, hesitation, self-doubt? Do you have that fear of loss, pain, or disappointment? These all come from a lack of confidence in the strategy, a lack of confidence in your abilities. Okay, so one of the things we can do to combat this is we can look for higher probability setups, okay, that have been back tested and show us they have, historically speaking, a very high probability of playing out. All right, so before we get into any trade, we need to analyze three different parts of the market. We need to look at price, which is price action. We need to look at momentum. We can use something like the MQ momentum oscillator, which we'll talk about here in a little bit, or you can use a stochastic or a MACD, and we'll talk about value. Value is the third component. Now, this is very, very important. Let me tell you why. Most traders have heard of trading with price momentum, right? Most people have heard of trading with price momentum, but they have not added that third component, which is objective valuation. Okay, and let me give you an example of this. We actually took the value charts indicator suite, which is the patented tool, which we're going to dive into here in just a little bit. There's a hedge fund we were consulting with. They had a strategy that was a price and momentum strategy. All right, and on average, that strategy was losing $30,000 a month. Okay, but the fund believed, look, this thing has potential. It should be able to work. There's just some missing piece. And what we did is we added that third component. We added a value charts based filter to time the entries and make sure we were buying from attractive value zones or selling from attractive value zones. And that fund, that strategy went from a $30,000 a month loss to an average of $25,000 to $30,000 a month profit. So a complete 180-degree turn. And this is the one component that most traders are missing. All right, and why we ended up developing and creating the value charts indicator suite. So let's talk about what that is. Let's talk about what value charts are and how they're helping us. First off, you need to understand there's a difference between subjective and objective valuation. Subjective valuation means, in my opinion, this is a good value. Objective means based on historical data, this is a good value. Okay, value charts are looking at historical data. All right, so it's looking at actual performance of how the market's moved in the past and then determining whether or not this is an attractive value zone. Now, what it does is it plots price in one of 5 value zones. Pretty simple. Green is going to be fair value. Moderately over and undervalued is going to be upper and lower yellow areas. And then significantly over and undervalued is going to be upper and lower red areas. Now, if you think about it kind of like a bell curve, where it goes like this. All right. Historically speaking, we trade significantly over and undervalued about 2% of the time. All right. Then we trade moderately over and undervalued about 14% of the time. And the rest of the time, we traded in that fair value, that center fair value zone. Now, we've actually taken this and we've taken the value charts indicators when we were going through the patent application and everything, and we had it tested by 3 PhD statisticians. We had Dr. Abraham Weiner from University of Pennsylvania, Wharton School of Business. We had Dr. Eric Laber of University of Michigan and Dr. Sheila Nair of University of California, UCLA. All right. All 3 PhDs were in agreement that value charts was highly effective in determining valuation in dramatically changing market environments. Okay. And the reason I tell you this is because you need to have confidence, like I said before, in the strategy that you're trading, that it does have a high level of success so that you can stick to that plan and have the ability to place the trades when you're supposed to place them. All right. So with that being said, when we actually plot the value charts indicators, it looks something like this. All right. Upper and lower red areas are that significantly over and undervalued zones. Upper and lower yellow areas are moderately over and undervalued. And that center area is that fair value zone. All right. So when we put this onto a MetaStock chart, it looks something like this. So we'll have price up above moving. And then down below, we will have value charts plotted. Now, at the same time, one of the things we've done is we've started putting dots above or below the price bar based on how over and undervalued we are. So if it's red dot below, that means we're significantly undervalued. Okay. Red dot below, significantly undervalued. Red dot above means significantly overvalued. All right. Making sense? Now, one thing you need to understand before we move forward anymore, I want to talk a little bit about price action. And we're just going to talk about a very simple concept in price action, and that is how you determine a trend. Okay, now the market is always moving in one of 3 phases. It's either trending up, trending down, or in consolidation/reversal. Okay, the way that we can determine what phase of the market we're in, up, trend, downtrend, consolidation/reversal, is based on pivot points. All a pivot point is a place that the market has gone up to and pulled back from. So if we see a market stair-stepping up like this, where we have higher low pivots and we have higher high pivots, we are in an uptrend. Okay? So if we're going higher high and higher low, we're in an uptrend. If we are going lower high and lower low, like this, where each pivot low is lower than the last one, and each pivot high is lower than the last pivot high, we're in a downtrend. All right, and the third phase, consolidation/reversal, is anything other than that. So if we do not have higher highs and higher lows, and we do not have lower highs and lower lows, then we're going to fall into that third category. Now, the reason this is important is because one of the simplest ways of applying value to your trading is what we call buying value retracements. So if we are in an uptrending market, we're in a market that's moving higher, we will look to buy undervalued dips. So we're just going to use a bias filter based on trend and then look to buy at attractive value zones so that we know we have a higher probability of the market, after we get in, of the market turning and moving our direction very quickly, which allows us to A, get in the money faster, B, use tighter stops, and C, we don't have to sit there underwater going, "Ooh, is this a good idea?" All right, so when we look at something like this is Amazon. All right, we can see very simply this is higher highs, higher lows, trending up, right? Based on our pivot points. So we know we're in an uptrend. So what do? We add that value filter. Okay, so we look to buy every time we dip undervalued. So that means we're getting long here, we're getting long over here, we're getting long right here, we're getting long right there, we're getting long right here. And you can see, as long as we continue to put in higher low and higher high pivots, we continue to buy until we change pivots and start going consolidation and back into an uptrend over here. Okay? Everybody's starting to understand? Now, a very, very simple way, if you want a quick and dirty way of helping determine bias, one thing we can do is we can use the MQ momentum oscillator, which is what this oscillator is down here. And if our indicator lines are above the midpoint is the center of the oscillator, 0. If the indicator lines are above 0, we're in an uptrend. We'll have bullish bias. So from here to here, we have bullish bias. All right, so we're looking to buy every single undervalued dip as long as we maintain that bullish bias every time we get down to these lower yellow price bar segments. Make sense? Now that's the quick and dirty fundamentals of what value charts are. All right, but there's a whole lot more we can do with value charts. The other thing I want you to notice here, by the way, is when we are in an uptrending market environment, you're going to see overvalued price bars showing up a lot more. We are not saying just because you're overvalued, start selling this market. In an uptrending market, we expect to see and want to see overvalued price bars because that shows strength in that trend. Okay, in a downtrending market, we expect to see and want to see undervalued price bars showing up because that shows their strength in that downtrend. Okay, so keep that in mind. The momentum oscillator down here is the MQ momentum indicator. The one down at the bottom is the value charts indicator. All right, so that right there, when we look at the momentum indicator lines being above 0, buying undervalued, and then looking at price trend based on pivots, that right there is an example of combining price, momentum, and value to determine higher probability entries. All right. So moving on here. Let's talk about intro to value range trading and how value range trading works. All right, so value range trading is a really good way of using the value charts indicator in a market environment that's in compression. Okay, essentially what we're looking to do is profit from market fluctuations between over and undervalued. Because when the market is not trending, so we're not higher highs and higher lows, or we're not lower highs and lower lows, we're in compression, we can look to time entries and trade the swings, the oscillations from top to bottom of the value zones. All right, now it's very important that you make sure that you're trading this in the correct market conditions. All right, you want to be careful of attempting to trade this strategy during incorrect market conditions. We must have a market trading inside of a range or that's in consolidation based on price action. So again, you're going back to understanding how price chart moves, and then we look to add to that. All right, now if the market is trending, value range trading does not work as well without implementing a directional bias, like we talked about just a minute ago. We're in an uptrending market, we're only looking to buy undervalued, or in a downtrending market, we're only looking to sell overvalued. So with that being said, let's take a look here. This is Tesla. This is back when Tesla was actually trading in a channel or in a range for a little while before we built that base and then turned and jumped to the roof like we've seen here recently. So if we are in compression, what we'll look to do is buy significantly undervalued moves and sell significantly overvalued moves, because we know that when it hits that upper and lower red area, we have a very low probability of it staying there. It should at least consolidate or reverse. Okay, so when we start seeing significant undervalued dips like here, we're looking to buy significantly undervalued, or significantly overvalued, we're looking to sell significantly overvalued. Now, one thing I want you to notice here, especially for example, right here. All right, we did hit significantly overvalued and it pulled back very briefly before continuing higher. One thing to keep in mind when we are trading value range trading, the very next candle after it triggers, after we hit significantly overvalued, we should break the low of the previous candle if we're going short, or break the high of the previous candle if we're going long. If that does not happen, we can go ahead and close the trade. Okay, so for example here, we went significantly overvalued, then the next bar opened and did not break the last bar's low. So we would go ahead and close that trade right away, because get out of those losing trades as quickly as possible, but stay in the winning trades and allow them time to move. For example, up here when we hit significantly overvalued, the next bar broke the low, so we get a bigger follow through to the downside. Okay, again, significantly undervalued shows up down here. Significantly overvalued shows up here and then here. Significantly undervalued shows up down here. And again, over here. Okay, and as long as we stay inside a compressing market like this, we can continue to trade it. Now, once we start trending based on price actions, we start going lower highs, lower lows like this, trending down, we're looking to implement a directional bias, which means we're only selling overvalued bounces as it trends down. All right. Making sense? Here's another example. This is from Alphabet. Now, you can see Alphabet does a much, whereas Tesla was chopping sideways in a channel, Alphabet here, we're actually trending much better. So we have several trends here. We're going higher highs, higher lows, trending up. Then we change trend and start trending down, lower highs and lower lows. We go into a little bit of a compression phase right here before we start breaking out and going higher highs, higher lows once more, trending back to the upside. So if that's the case, then over here, for example, we were uptrending right through this whole area. That means we're only looking to buy undervalued retracements. Buying undervalued here. We're going to buy undervalued here. Buy undervalued here. And every time we get undervalued, once we go long, we'll look to take profits at the opposing value level. So for example, if we're buying undervalued down here, we can look to take profits once we hit overvalued right here. Buying undervalued here, taking profits over here. Again, just trading in between the value ranges. Making sense? Buying undervalued here, we'll be looking to take profits right in this area because we're starting to hit significantly overvalued. When we're in the chop, in the compression, we're looking to implement value range trading where we're only selling significantly undervalued and overvalued. And you're trading in the value ranges there. Once we start trending once again back to the upside over here, we're looking to once more buy our undervalued retracements. Oops, that should have been here to here, here to here. And once again, you're selling once you hit the opposing value zones. All right. Now, one thing that we've done that's really cool for MetaStock that we have not done on any other platform, we've set up the value charts indicators to have expert commentary on current market developments. So you can actually turn this on or off via your MetaStock platform and use this tool when analyzing current happenings to help identify potential trade setups and market bias. Now, before I move on here, let me answer this question. You said, yes, but trend is only identifiable in hindsight. Can't tell in real time if consolidating or trending. That's incorrect. You absolutely can. So how do we tell if we're trending or in consolidation? We look at price action and we look at pivots. Okay, so in here, at this point, we have, let me do this. We have a high up here. We have a pivot low down here. We have a pivot low down here, and we have a pivot high up here. Okay, so we have higher high pivots, and at the same time, we have lower high pivots, or lower low pivots, excuse me. Therefore, it's in that third category. We're in consolidation / reversal. So we know we're implementing value range trading. Then what happens? We continue to go lower lows, and we bounce up, put in a higher low, and we break to a higher high. As soon as we put in a higher low and a higher high, we're now back in an uptrend, all right, because it meets the criteria of an uptrending market. So we say, all right, we have a bullish bias. We're looking to buy undervalued. So we're getting the dips here, 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 here and up there, and we stay in an uptrend this whole time because we continue to put in higher lows the whole time until this point up here where we break to a lower low. And now we're no longer in an uptrend. We're now consolidation / reversal again from that point forward until a new trend develops. Does that make sense? So you can absolutely identify trend in real time. Now, you're not going to say, look, you're not going to start right here and say, hey, we're going to be in a new uptrend because you can't predict the future. But we have to operate under the assumption that a trend is going to continue until it changes. So once it establishes a higher high, higher low pattern, we're then staying in that uptrend as long as we continue to put in those higher lows and higher highs. Make sense? This is why I say you need to understand how to read price action first, and then you add on to it value and momentum. You said, is there an indication of trend other than analyzing it ourselves? Yep, that's why we talked about using the NQ momentum and saying, okay, if our momentum indicator lines are above 0, we have a bullish bias. So right there, momentum indicator lines went above 0. So from that point all the way to the right, indicator lines are above the midpoint. So we're buying every single undervalued dip. Okay. So let's talk about the expert commentary here. Now we have it broken down into 3 sections. It gives us kind of the current bar information, what's happening, the high, the low, open, the close, what's going on in section 1. Section 2, it gives us kind of the value charts analysis. What are the intra-bar extremes? Where's the value charts at the close? So this would say, for example, VC buy opportunity conditions indicate this market's momentum is gaining. At the same time, its relative valuation is still low, representing a value buy that has potential energy to move higher and room to run. Okay, then section 3 gives us considerations based on value charts. So current bar at close, we're fair valued. We have buying considerations, selling considerations, hold considerations. Would we want to do one of the 3? Okay, so it kind of breaks us down and tells us, all right, how on this current price bar should we be analyzing this, and what should the expectation be for this market? All right, so let's take this one step further. You know how I said we always want to analyze price, momentum, and value? Well, let's talk a little bit more about the momentum part of it and how we combine momentum with value. More so than just saying, okay, if we are above 0 and market's undervalued, we look to buy, or below 0, market's overvalued, we look to sell. So you'll also get access when you get the value chart suite for MetaStock. You get access to the MQ momentum indicator. All right, now the MQ momentum is a momentum oscillator that's used in determining a market's strength. Now, Chris, you said, can we use this on different time frames? Absolutely. Now, one way of using momentum is to identify bullish and bearish divergences. Now, all a divergence is when momentum and price are no longer in agreement. Okay. Now, when we look at the NQ momentum indicator, this is what the oscillator looks like, and it's set up, really, there's a couple different things we want to pay attention to. There's the indicator lines, all right, and we want to pay attention to whether or not these are trending higher or trending lower. We also want to pay attention to whether or not they're above or below that midpoint, that 0 point. All right, the other thing that we look at is the histograms, and the histograms kind of tell us the strength of each move, whether or not the current rally or sell-off has more strength or weakness than the last one. And that's based on kind of the height of these histograms. All right, so when we look at a chart like this is Apple, we can start looking for momentum to confirm price action. All right, and momentum should, as the market's trending lower, momentum should also be trending lower. As the market's trending higher, momentum should also be trending higher. When they are no longer lined up, this is when we get to the point where we have a divergence. Okay, so for example, right here, and you can do this, by the way, with any type of momentum oscillator, but for example, right here, we have price trending down, and you can see on the way down, momentum is still trending down the whole time with it. All right, but then on this last little dip, we go pivot low and then pivot low again, pivot low number 1 and then number 2. But if we look at the indicator, we have a higher low on indicator lines and a higher low on histograms. Okay, so momentum and indicator are no longer in agreement. Yes, Chris, it is. Okay. And then what happens? Price starts to confirm by climbing, and our trend changes on price back to an uptrend. So we start going higher highs and higher low pivots. Momentum starts confirming as well, going higher high and higher low pivots. And we see the market reverse and start to climb back up out of there. Okay. So we can start using momentum combined with price action to determine entries. Here's another example. You can see a disproportionate move here in price versus the momentum. Momentum had a significantly lower high there when price was just a little bit lower. Then market starts to sell off. Momentum kind of confirms on the way down. And then we start getting into that choppy phase. And what starts happening to momentum? Momentum starts chopping. We start switching from bearish to bullish to bearish to bullish on the histograms. That's a very big hint that the market is trying to make up its mind. And we're just staying out of all this, staying out of the chop, staying out of the chop until the market starts trending again, which is over here. And we're starting to look to buy the undervalued moves. All right. Making sense? So let me make this even easier for you. Now, another way of trading with this is, again, combining momentum and value to identify potential entries. Well, we've set up with MetaStock with the version of Value Charts Indicator Suite to actually call out potential buy and sell signals that are generated when markets hit extended levels in value, but they have opposing momentum signals. And that's what this looks like here. So this is IBM. You can see neutral bullish pressure here, value charts buy signal. Then we had a value chart sell signal right here. Another value charts buy signal here. Bearish pressure coming in here. Bullish signals, or bullish pressure, I should say, bullish pressure, bearish pressure, VC buy over here. So it will start looking for divergences in both price and momentum and value, and start looking to identify entries based on those divergences. So you can see, for example, buy signal, sell signal, buy signal, buy signal. And then inside of that, we'll also start calling out, hey, this market's starting to see some bearish pressure coming in. We're starting to see some bullish pressure coming in. And it will help you with identifying where to potentially take profits. All right. And it makes it, this is probably the easiest way of using it because it just calls it out for you. All right. Here's another example. This is Tesla again. Right here we have, once more, a VC buy. Then you have VC sell, bullish pressure coming in, etc. All right. And again, what this is doing is it's specifically looking for setups that are combining both price and momentum and value. Okay. All three components of technical analysis that we analyze before placing any trade. So with that being said, let me tell you a little bit more about some of the people that use this, how they've done. These are all people I've done mentorships with as well. This is Randy's equity curve, creating credit spreads using value retracements. So you know how I was talking about looking at buying undervalued during an uptrend or selling overvalued during a downtrend? Well, he uses credit spreads with options, does just that. Okay. Here's another example. This is Lori's equity curve. Lori is actually an individual that I'm really, really proud of because she went from being consistently losing trader to actually running her own hedge fund. This is her equity curve, trading again, starting off with fundamentals of price action and going in and adding momentum and value. This is Frederick's equity curve. Same thing. He's trading future spreads. This is Tom Trem. Same thing, trading future spreads. This is one I always like to show. This is Bill's because he also sent me the broker statement with it as well, showing he started off with like a $1,700 account, turned it into just under 13 grand in a matter of a month and a half trading futures, directional trading futures. This right here is Dave Glissmeyer. Dave was a friend of mine. He actually ended up passing away, but he had realized his goal. One of his goals was, I want to learn how to trade and trade for a living. I want to pay my bills doing this. And before he passed away, he actually had achieved that goal. And I'm really, really proud of what he had done because he was averaging a little over $3,000 a week in profits trading futures directionally. So I got a question for you. Do you see how value charts can help maximize profitability, increase consistency, and grow your confidence? That's what we're all about. Okay. You said, is over and undervalued a version of market profile? Not at all. It's patented tools. Nobody else has it. Okay. So for those of you that are interested in it, you can get the value chart suite by going to metastock.com/value charts A, or you can call them 800-882-3040. The value charts add-on tool is $9.97. Plus, we'll give you a bonus workshop that teaches you all about value trading and how to trade with the value charts tools that you're getting. All right. If you need help as well, you can email support@metastock.com. So let me answer some questions here. He said, I can trust these entries at a glance because that's how I time-consumingly analyze it. Nice. Good deal, Steve. Yeah. Again, I'm a big fan of trading. You add confluence. When you get multiple things, momentum, value, and price, all lining up, pointing to the same direction, that's how you have a much higher probability win rate. A question I get asked all the time is, Thomas, what's your favorite setup? What's your favorite trade setup that you look for? And my answer is there's not a single setup that I look for more than anything else. What I look for personally is confluence between time frames and signals. So if we might have 5 different things on 3 different time frames all pointing in the same direction, that's a much stronger setup than just having, or a stronger trade opportunity than just having one single thing on one time frame. Make sense? Let's see, any other questions here? MQ-Momentum is proprietary, yes. Chris? Any other questions? Value charts. The value charts indicator suite is patented. No, not like tick and trend. The way that value charts work is it's looking at what we call DVUs, dynamic volatility units, which is an algorithm for determining range that the market should move based on historical price action. And they adjust based on the volatility. So one thing you got to keep in mind with value charts, they don't work really well on, for example, a range bar, because there's no volatility. It removes the volatility aspect from it. And they don't work really well on Renko bars, because once again, same thing, you remove the volatility aspect of it. But it has to be able to look at volatility, because again, it's based on DVUs, and it expands and contracts the value zones and whether or not a market's going to hit over or undervalued faster or slower based on historical volatility.
Yeah, things to talk about.
Yeah. Jeff, were there any other questions over in YouTube?
Yeah. So there are a couple of comments, really. I'm assuming you can hear me, Thomas.
Not hearing anything.
Oh, you're not hearing anything.
What's included in the Value Trading Bootcamp? It's a whole workshop that's about 3 hours long, specifically talking about setups that involve the value charts indicators and how we use momentum and value to determine potential entries. So it'll just go into a lot more detail specifically on using the value charts indicator suite. So this would work really well in trending market, but may have a hard time in sideways market, which happens 80% of the time, except lately. Not necessarily. When you're in a sideways market, remember we implement the value range trading where we're just looking at extremes, significantly over and undervalued, and we look to fade extremes based on valuation. Because again, we know statistically speaking, we have a very high probability of the market pulling back from a significantly over or undervalued price bar. So in a trending market, it really shines because it times entries really well. In a consolidating market, it does a great job of giving us short-term trade entries based on significantly over and undervalued.
All right, can you hear me now, Thomas?
Yeah, now I got you.
All right, very good, very good. We do have a couple of questions. Norman says, "Great job. That's a wonderful way to combine the various factors to show." And then it scrolled off of there. Strong actions. We did have a question that from Amit saying that the interpretation remains a little bit subjective. And for me, no, it seems very, very objective. I was wondering if you wanted to kind of chime in on that.
Sure. The only objectivity And it would be if you're determining direction, trend based on price action and which pivot highs and lows you're counting as a significant pivot high or low in reference to whether or not we're currently higher high, higher low trends or lower high, lower low trend. Value charts are totally objective. I mean, it is significantly over and undervalued when it gets there. We have nothing to do with it. No subjectivity in that. And then the signals that are generated from momentum and price are also totally objective.
Cool. Awesome. Well, I think you did a great job. Let's see. Here's a question that we can answer. Does value charts include a scanner to find undervalued stocks ready to trade? So I think that might be a good chance. And maybe I'll just show my screen for a second just to show the scans that are actually included with MetaStock. So let me go ahead and kind of move this over here. And we can just talk about the scans that are included briefly. So let me go ahead and change the presenter over to me. Okay, I'm going to show my screen. And right here what we've got is so there's a couple of different scans that are in here. You can go in and build a universe of stocks that are extremely overvalued or extremely undervalued. You can look for stocks that are significantly undervalued or significantly overvalued, and there's scans for that as well. The one thing that you can also do that's very, very unique to the MetaStock implementation is you can actually look for what they call the value charts buy and the value chart sell setup. And so what that allows you to do is it allows you to go in and find very, very specifically the ones that have the momentum in the right direction, that are also undervalued or overvalued depending on what direction they go, and all of the signals as well. So that's actually something that I requested. We'd actually released a product. I'm like, why don't we scan for this buy setup? It's really, really good. So we added it in within a couple of weeks. People love it. It makes the product very, very functional. So there you go. Let me go ahead and click on the present button. There's a picture of Thomas again. I do want to talk a little bit about the value charts complete suite. Again, it's a patented methodology for looking at the value, just like Tom was saying, of a stock and determining whether it was valued or undervalued or overvalued. And Thomas showed you a little bit of the success for the different products that they've had. But one of the things that they've always liked to talk about is the hedge fund that started using it that was losing $60,000 a month before value charts, and turned it around to where they were making almost $30,000 a month just by implementing value charts into what they were doing. So that's kind of a bit of an idea of kind of what's in there. Let me go ahead and kind of skip a little bit here. Tom did a really good job of talking about how to look at the stocks to see if they're undervalued or overvalued. He talked about the momentum oscillator and how that all puts together. So all of this is put together and available as part of the value chart suite, or the value charts complete suite. This is a product that we will sell you for $14.95. It's the normal cost on it. Here at the webinar, it's $997 with our Online Trader Summit special. One of the things that we'll do with this product is we'll let you try it. If you go ahead and install it, you order it, and you don't like it for any reason, within 30 days you can return it. You'll get a full refund. No questions asked. So that's how much we believe in the value charts and how much it can kind of bring into the product. All of our services that we offer on a one-time cost actually do come with a money-back guarantee. So if you'd like to take advantage of that, you can give us a call. The phone number is 800-882-3040. And you can visit us also online. We've got some sales reps here waiting to answer and help you with your questions. It's metastock.com/saleschat. And it is also part of the Summit Special. And with the Summit Special, you'll be able to get the MetaStock real-time program. You'll be able to get the Zenith data on 3 months of MetaStock real-time, 3 months of MetaStock Zenith. You'll be able to get Steve Bigelow's Candle Profit Strategy Systems #2. You'll be able to get those classes that we just finished up. You'll be able to get this Value Charts Complete Suite, the Trade Trend, which is another product that's been insanely popular last year, and Chuck Hughes Prime Trade Select. You'll be able to get Unleash the Power of MetaStock. And you'll also get, just for good measure, we'll throw in 2 years of Stocks and Commodities magazine. So if you bought all that stuff separately, $4,487. Here at the event, it's $1,945. Again, most of that's covered with all except for your monthly subscription cost is covered with our 30-day money-back guarantee. So if you have questions on that, give us a call, 800-882-3040, or you can chat live with us at metastock.com/saleschat. So with that being said, Thomas, do you have any final thoughts?
No, thanks for having us, Jeff.
Yeah,
Always a pleasure.
No problem. Thank you, and thanks for creating this for MetaStock. We appreciate it. It's been a widely accepted product. All right, thank you, Thomas.
Thank you.
Okay. All right. Well, we're a little bit ahead of schedule today. So Norman says, having 3 PhD confirmations add great weight to your patented method. I agree, actually. And it is a product. We brought it on about, I think it was January of 2019. People have really, really loved this product. It's something that people have enjoyed. Like I said, we sell it to you on a money-back guarantee. We do allow you to try it. And people keep it. It's something that somebody made a comment on YouTube that they're going to try and sell you profitable software later. Well, that's exactly what we're going to try and do. There's a reason MetaStock's been rated number 1 26 years in a row. So let's go ahead and talk a little bit about stocks and commodities since we are running a little ahead of the ball. I do want to say thank you to Stocks and Commodities for literally 7 or 8 years they've been supporting the Online Trader Summit. And you can get a free issue. Hopefully you signed up for that when you registered. If you didn't, there's a little bit of a link right here that I'm going to put in the chat in a minute that'll allow you to go in and get a free copy of Stocks and Commodities magazine. I love Stocks and Commodities magazine. I've been getting a copy of it for free ever since I started here at MetaStock like 23 years ago. And if you don't have a copy, make sure you at least take advantage of the free trial today. Okay, and then let's go ahead and kind of migrate and start talking a little bit about Jeff Tompkins. So Jeff is a guy who has a very good first name, number one, and number two, he comes in and he teaches a really good class. He usually likes to talk a lot about the MACD and some of the other indicators that he uses. He does a great job. He's located up in Boise. We've been working with him for about a year now too, and he probably gives one of the best classes here. He gives an incredibly good class. So Jeff, let me go ahead and bring you on here. I'm going to unmute you. Oh, I can't unmute. You can unmute yourself.
I think I did.
There you are. I can hear you.
All right.
Hey, welcome to the summit.
My favorite Jeff.
well, one of them, right?
I guess you're number 2.
All right. I'm going to go ahead and turn the presentation over to you. How are you feeling about the market in general right now?
Well, it's an interesting time being at what could be the tail end of a unprecedented bull run. So, of course, none of us have a crystal ball. It'll be interesting to see how things play out in 2020. But we're certainly in a bit of an unstable environment. I think it won't take a whole lot to move things the other direction. So time will tell, of course. But yeah, it's an interesting and challenging time. But I'm going to give you guys some good tools today to help you kind of determine when things may be shifting to the downside. So I'm excited to share that with everybody today.
All right. Well, I'm out of your way. It's your turn.
All right. Sounds good. Well, we're going to be talking about how to use an indicator that's commonly available on today's retail trading platforms to predict trends in any market. And it's especially useful for predicting market crashes. So we're going to specifically focus on that because that's really every trader's biggest fear is when is the market going to sell off? And this one indicator that we're going to look at, which many of you have probably heard of, or even used, but may not be using in the way that I'm going to show you. And then we'll get into that, how we can use it to predict market crashes. And we'll look at some case studies on how it's done that in the past. So here's our disclaimer. Obviously, anything that we cover today together should not be construed as individual investment advice. We will be going over some live trade examples and whatnot, so just keep that in mind. So I'd like to start out by talking about why the market is so difficult to trade. Most trading presentations, education that you receive tries to tell you that, why things are so easy and why our tool is going to make it so much easier for you. And that's fine. We're going to do the same thing with you today. I'm going to make things a lot easier for you. But before we get to that point, let's talk about why it's so difficult, because it is really difficult. I've been trading for a couple decades, and it took me well over a decade to reach consistent profitability. And really what I want you guys to do is just take the pressure off of yourself. Don't blame yourself for past difficulties in the market. And I'm going to show you why it's so difficult, because it really just boils down to math. So imagine a deck of cards, right? So we all are familiar with the deck of playing cards. There's 52 cards in a deck. And if you shuffle them properly, arrange them randomly, believe it or not, there's actually more ways to arrange that 52 cards in a deck than there are total atoms on planet Earth. That's hard to believe. But again, if you shuffle it properly, there's a pretty high chance it's going to come out in an arrangement that's never existed before. All right. And that's because a 52 card deck has an astronomically large number of possible combinations. So keep that in mind, and let's apply this to trading. That number, in fact, is huge. As you can see, it's about 69 digits. And so that's a lot of combinations. So imagine the number of possible combinations in the market, right? There's many more patterns, candles, whatever you want to look at in terms of the volatility, momentum, trend. There's just an astronomically large number of possible combinations, much more than a deck of cards. And it's one of the major reasons that many systems and strategies fail over the long term, because they revolve around a set of very specific rules in an environment that is extremely dynamic, rapidly changing, and has an astronomically large number of possible combinations. So there is actually a method that overcomes this drawback to the markets, and it works regardless of how the cards are dealt. And I'm going to show you guys that today, and it's going to make a dramatic difference in the results of your trading. So here's what I'm going to give you to make it easier. We're going to talk about how to use one indicator to predict markets in any time frame. So this is going to work whether you're a day trader, a swing trader, a position trader, a long-term investor. I'm going to show you the correct way to use the indicator to make money in the markets. The beauty is it tells you exactly when to buy and when to sell, so there's no guesswork. We all too often use guesswork in our trading, and unfortunately that doesn't play out in the long term. I'm going to show you how to identify when momentum is shifting and a new trend is starting. I'm going to show you how to eliminate the majority of your losing trades. We all have losing trades, but imagine if you could eliminate a lot of those losing trades and increase and improve your consistency and profitability. We'll look at how to do that. I'm going to show you how this works for stocks, futures, forex, and options. So we probably have a diverse group of traders on our session today, but regardless of what market you're trading or even strategy, this can help improve your consistency. We're going to go through some trade examples, and then I'm going to show you how you can copy my success and get my trade signals I use to make a living in the markets. And I do trade for a living. I also manage money for other traders and investors. So this is a good kind of case study that I like to focus on, 2018, because 2018 was kind of an unprecedented year. We were in the midst of a bull market, but we had four major corrections, and we're going to look at those here in just a minute and how this indicator predicted those. But I want you to imagine if you could predict every major market sell-off, not just in 2018, but in the history of the market, because this particular indicator, going back decades, actually predicted every correction, sell-off, crash that we've seen in the market. Okay, so again, it predicted all four corrections in 2018. It predicted the flash crash of 2015, an entire day before it happened. It predicted the 10% correction in October 2014, 2 weeks before it happened. It predicted the crash in July of 2011. And it predicted the major sell-off in 2008 when the market lost more than half its value. So that's just a handful of examples. There are many, many more. But imagine if you could have predicted these before they happened, gotten out of the market, gone to cash, protected your portfolio, or implemented a strategy to take advantage of the sell-off and make money. So we're going to take a look at that. So again, I think 2018 is a great case study to look at because it was kind of a unique year in terms of market corrections. We saw 4 of them over the course of 2018. So put up a chart here of the S&P 500, the SPX, and it encompasses the entire year, January through December, and it's a daily chart. And we're going to look at what occurred in 2018. So towards the end of January into February, after we're in this nice, long, steady bull run, we finally see a correction after topping out around 2,900 on the S&P. And so in this particular scenario, a lot of people were overzealous and very bullish and loading up on positions, getting into the market, and they anticipated prices to continue going up and up and up. But unfortunately, that didn't happen in January, February timeframe of 2018. Right at the top there, 2,900, we had a 10% correction and a reversion to the 200-day moving average. And so this really freaked a lot of people out. People lost money. They abandoned their strategies. They started second guessing themselves. They were unsure where the market was going to go. And this really set off a bit of a volatile time period in the market. All right. And so after that sell-off in January, February, we kind of go into this ranging, choppy price action. And then in March, we see another one. This time we top out around 2,800 and another mean reversion into the 200-day moving average. All right. So people are freaking out again. But then we start to go in this nice, steady, well-defined uptrend in the middle of 2018 until October hits, and there it happens again. This time we sell off below the 200-day moving average, and this is when traders and investors really start to panic as we go below the 200-day moving average, which is a benchmark for the overall market in terms of bullishness and bearishness. So when we go below the 200-day moving average, a lot of people start to panic, and certainly that happened. We're kind of bouncing around there, or just around the 200-day moving average in October, November until December hits. And this correction almost really put us into bear market territory. The peak to trough was nearly a 20% correction. So we topped out around 2,800 there in the early part of December and sold off all the way down near 2,300. So these were major sell-offs in the market. And I'm going to show you how the indicator that we're going to look at today actually predicted these and gave us pretty good warning that these were going to occur. So just a little quick blurb about myself. If you haven't been on any of my educational seminars, I can give you a little bit of background on myself. Again, I've been trading for over 20 years. I trade stocks, options, and futures. I did receive professional training at Morgan Stanley. I'm the founder and chief investment strategist of the Trading Profit, which we've now merged with Altos Trading. We have over 25,000 members in over 100 countries across the globe. I'm also a hedge fund manager. So I did mention earlier that I manage money for our investors, and I run the Altos Capital hedge fund. And I actually use a lot of the tools that I'm going to give you guys access to today in my own hedge fund. And I'm the founder and creator of the Trade Trend Signal software, which we're going to talk about today as well. So by the end of our session, you're going to discover how you can use one special indicator that's available for free in any trading platform, including the MetaStock platform, to predict market moves. And this works for stocks, options, futures, and Forex. So regardless of what market you trade, this can work very well for you. And once you learn the correct way to use it, and I'm going to give you guys a few secrets and tricks on how to use this indicator in an effective way, you'll never look at the markets the same way again. And that's the sincere truth, because I learned to use this indicator correctly in my own trading, and it's made a dramatic difference. So you're going to discover why momentum is so vital to trading success, how to read momentum shifts and continuations, and I promise this will completely turn your trading around. If you're struggling right now, this can make a big difference in your consistency. You'll learn how to use momentum as a leading indicator, not a lagging indicator. That's huge. We all know that most indicators are lagging, and they use past market data to extrapolate some sort of a signal to give you what you hope to be some sort of predictive quality. Unfortunately, that doesn't play out with most indicators, but I'm going to show you how to actually use momentum as a leading indicator. Okay, so we can actually use it as a high probability predictive indicator. And I'm going to show you how you can do that and apply it to the market. I'm going to show you guys how you can get your hands on a tool that will change your trading forever. And again, I say that because it has changed my trading forever. So I want you guys to imagine a bowling ball. You're probably wondering, why is there a bowling ball on a trading presentation? Well, because it actually can be applied to the markets, and it's something that we're all familiar with, right? So we We probably all bowled at some point in our lives, or if not, we know with a high degree of predictability what happens when we roll a bowling ball down the bowling lane, right? It's going to roll until it gets stopped. Something stops it, and generally, you roll the bowling ball down the lane and it hits the pins and it stops. And so I want you to think about this analogy in the context of momentum, because basically what momentum is in physics is the property or tendency of a moving object to continue moving. So just like the bowling ball, once you roll it down the lane, it's going to keep going until something stops it, right? And that's an interesting concept to consider in our trading, and we're going to apply it to that. So this is what's referred to as linear momentum, okay, in physics. And that's about as deep as we're going to get into physics. We're not going to go into a physics lesson here, but keep this in mind as we think about momentum in the markets, because we can apply this concept to trends in the market. The real difference is the catalyst, right? So instead of the force of our arm when we roll the ball down the lane, the catalyst in the markets is supply and demand. It's buying and selling pressure, but it can be predictive when we understand how it works fundamentally. And this is why it's so important. First of all, it's calculated by taking price differences for a fixed time period compared to current price levels. So the calculation for momentum in the markets is a little different than it would be for linear momentum in physics, but the concept is the same. And generally, a value above zero indicates prices are moving up, and a value below zero indicates prices are moving down. So this actually means that you can pinpoint areas where trend reversals are highly likely to occur. So again, we're looking at this in terms of predictive qualities, not lagging. And although we'll focus on a lot of the market corrections and crashes that have taken place in the history of the market, the beauty is it doesn't only work for market crashes. You can make money on the way up too, all right, because it measures the rate of the rise or fall in security prices. And for trending analysis, it's a really valuable indicator of strength or weakness in an underlying securities price. So if you look at this chart in the middle of the screen, I believe this is a chart of the SPY. You can see we have a steep sell-off on the left side of the chart, a reversion into the 200-day moving average, and we have a indication that the trend is going to be shifting from down to up, and this particular indicator actually identified that right there near the bottom of that shift in trend and momentum, and it picked up the reversal and the move to the upside. So again, it can work on the way down, but it can also work on the way up. All right, so we're just about to get into this particular momentum indicator. I want to kind of cover some momentum indicators prior to that, so you have an idea of what they do, the different common momentum indicators that are available to you on today's retail platforms. And there's probably a couple dozen, I would guess, that you can access on retail trading platforms. They all kind of use different information, different inputs, and they give us different outputs. And it ultimately comes down to how do you interpret the data and apply it in live trading. So the first one is the average directional movement index. And this particular momentum indicator can help measure the overall strength of a trend. It's often referred to as the ADX. You'll probably see it as the ADX in your trading platform. And it's basically an average of expanding price range values. So it's a good indicator. But again, there are many ways you can apply it to live trading. A lot of the issues with these indicators is how do you apply it to live trading? They look great on a price chart when you look at past data, but it becomes very difficult when you try to apply it to live trading. So that's one trick and tip I'm going to give you guys today when we get into the one indicator that we're going to look at for predicting market crashes. And I'll show you exactly how to apply it in a very easy and simple fashion. Another commonly used in momentum indicator is the commodity channel index. So this one is often referred to as the CCI, and it measures the relation between price and normal deviations from a moving average. All right, and the third one is the MACD. This particular momentum indicator is very versatile. It gives us a lot of information. And what it does is it reveals changes in strength, direction, momentum, and duration of a trend in a stock's price or any securities price. It actually works across any security. And last but not least, the relative strength index. So the RSI is a technical indicator used to chart the current and historical momentum strength or weakness of a security based on the closing prices of a specified trading period. Common default on that one is 14 periods, and it's often used as an overbought, oversold indicator. And it can be a very good momentum indicator. The problem with this one is that markets can remain overbought or oversold for a long period of time. So in terms of predicting a actual shift in trend or momentum, it tends to fail quite a bit, but it can give us good information in terms of the market being overbought or oversold, especially when we combine it with other momentum indicators. And that's actually an important point to make right now, is that these indicators can all be combined in a certain way to help improve accuracy and filter out false signals or noise in the market. And so we'll talk a little bit about that too. So the one that we're really going to focus on in terms of predictive qualities is the MACD. And so this is referred to as the moving average convergence divergence. And we're going to look at how to use it to predict market moves. And there's a number of ways to do that, but I'm going to show you the way that I use it and the way that I think it's the most effective. Okay, so if you're not familiar with the MACD, I'm sure a lot of you are. You've been exposed to it or used it at some point in your trading. Again, it's short for moving average convergence divergence, and it's often used that way as a convergence divergence indicator. We're not going to look at it in terms of convergence divergence, but that is one way that is commonly used. But it was developed back in the 70s, so it's been around a long time. It stood the test of time. And what it does is it reveals, again, changes in strength, direction, momentum, and duration of a trend in a security's price. And the beauty is it does work across all markets, whether you're a Forex trader, futures trader, an equities trader. It does work well across markets, and that can't be said for a lot of indicators out there. A lot of indicators will work well for one market and not for another. It also works well across time frames. So whether you're trading a short-term 5, 10, 15-minute chart or a longer-term daily, weekly chart, it can give us some really good information. So how do I use it to predict market trends or shifts in momentum or momentum continuations? I use the MACD cross, okay? And basically, the MACD cross gives us a buy signal when the MACD line crosses above the signal line, and it gives us a sell signal when the MACD line crosses below the signal line. Okay, so we're going to look at that in the context of 2018. So this is the same chart we looked at earlier of the S&P 500, the SPX, and it's a daily chart. And this time I've got the MACD indicator plotted at the bottom of the screen. So let's look again at these corrections in terms of the timing of the cross on the MACD. So we see that this cross occurred back towards the end of January of 2018. Now, where these crosses occur relative to the zero line, whether they're above or below, the slope of the cross, all of these variables do have a lot of significance. We don't have time, unfortunately, to get into that today. I just want to highlight to you where the crosses are taking place relative to the market sell-offs. And you see that this first one did a really nice job at warning us of a potential correction back in late January into February of 2018. All right. And you can see there's a lot of crosses on here, obviously. But again, we'll focus on the sell-off. So the next one occurred closer to the zero line. And this one wasn't quite as dramatic as the January-February sell-off. But you can see that it did a fairly good job of warning us of that reversion into the 200-day moving average. So it didn't do quite as good of a job as it did back in January, but still gave us pretty good warning as we crossed below the 50-day moving average and reverted into the 200-day. All right, and then October hits. This one was a lot more difficult to read, right? The lines are much closer together. They're horizontal. We're above the zero line again, but it still gave us an advanced warning of a potential market correction, okay? And it let us know about a week ahead of time. And lastly, the December sell-off, this one was below the zero line. The slope was steep. It was an obvious cross. And it let us know pretty close to the top of that correction where the market sold off. So these are all examples of the predictive nature of the MACD in terms of market correction. Okay, so pretty accurate. Now I'm going to give you guys a trick to make this easier. Okay, because you can see that some of those crosses are a little bit difficult to interpret. Okay, so they can be a little confusing. especially when the lines get close together and they're horizontal, like right here. So when we're near the zero line, the lines are crossing frequently, they're horizontal, they're close together, they can be much more difficult to interpret, okay? It can be easy to look back on a chart and identify them, but if you're actually trying to trade them in real time, that's where it becomes tricky. So there's an easier way to do this, and it's with the MACD histogram, okay? And you can access this on your platform. And basically what it does is it gives us a red bar below the zero line when the lines have crossed to the downside, and it gives us green bars when momentum is going up and the line has crossed to the upside, okay? And so it gives us a buy signal when it's green and a sell signal when it's red. It's pretty simple. It's much easier to interpret than the MACD line cross, but it's giving us the same information in terms of predictive momentum, okay? So let's take a look at this as an example on a chart. This is a daily chart again of the stock Momo, M-O-M-O. And now I've got the MACD histogram plotted at the bottom of the chart. And you can see that we went from red to green there on the left side of the chart, giving us a buy signal. And we see that nice continuation of the uptrend until we get the red histogram telling us this might be a good time to take profits on our position. And you can see that the momentum shifted there for a few days. It didn't sell off significantly, but we had a few days to the downside. So this would have been a good time to scale out of our position or take profits until we get another buy signal where we go from red to green on the histogram, and we're back in our uptrend. So there, the momentum is up, and you can see the nice predictive qualities of the MACD here. The trend is up, the momentum is strong, and we get another shift from green to red on the histogram, and we sell off there for a few days. We had topped out around just a little over $34 a share, and we sell off down below $30 a share. So this was a good warning to take profits, get out, or protect profits, whatever strategy we're using. We want to be aware that there could be a shift to the downside until we get another move from red to green on the histogram, telling us it's now safe to get back in, and the momentum is now going back to the upside, giving us another buy signal. So obviously very accurate in terms of predictive measures, right? And I'm just using the standard settings here, by the way, on the MACD. I see somebody asked, what are the periods of the MACD? What are your MACD settings? You can see that they're just set to the default 12.26.9 there on the bottom. So I use those default settings for the histogram. Now I'm going to give you guys another trick to improve the accuracy of the MACD histogram even more. All right, and that's to use a certain type of order for these buy and sell signals. So we want to use a buy stop order and a sell stop order to confirm momentum direction, okay? So we use a buy stop to enter long trades. And basically what we do is when we get a shift from red to green giving us the buy signal, we put our buy stop order above the high of that candle. That way, if the market fakes us out and the momentum doesn't follow through in the anticipated direction, then we don't even get into the trade. Okay, so it's going to help filter out false signals. And conversely, when we get a buy to a sell, we would use a sell stop order just below the low of that candle. And it's going to help, again, filter out false signals, improve the consistency of the indicator, and increase profitability. And we've actually programmed this little trick into the MetaStock add-on, and I'll talk to you guys about that here in just a minute. So here's the thing. Obviously, the MACD can be very effective when used in your trading, but it does need to be used correctly, just like any other indicator. There are wrong ways to use it, and there are right ways to use it. And obviously, if it were easy to use and work correctly every time, we'd all be, really, really successful traders. We'd all be multi-millionaires. And so obviously it's not that easy. There are a lot of nuances to these indicators. And I actually spent more than a decade and thousands of hours trying to figure out which ones to use, when to use them, how to use them most effectively. Lots of trial and error, lots of data analysis, and lots of forward testing. I'm not a big fan of back testing. There are a lot of inherent flaws in back testing any indicator or system. I truly believe in forward testing, so I put my live hard-earned money at work to test these theories to see if they actually play out in live market conditions, and that's extremely important. Always consider that whenever you purchase a system or implement somebody else's system in your trading. Make sure that it's been tested forward tested in a live market, not just back tested. So once I got the settings dialed in, I had to formulate them to work on all time frames. I had to duplicate the success across all markets, and I had to do it in an adaptable algorithmic formula that actually had predictive qualities and not lagging qualities. And that's very difficult to do. But I realized that a lot, after I had success with this in my own trading, a lot of our members were going to want to use this in different time frames and different markets. And that became very difficult because, again, a lot of these indicators will work on one time frame or one market. And then when you try to use them for something else, they don't work. Or the market changes, right? The market environment changes where we go from a nice bull market uptrend to a bear market, and all of a sudden the indicator fails. Or we go from a well-defined trend to sideways choppy market and the indicator fails. So I had to program this in a way that bypassed that and actually made it work, or at least keep us out of the market when it wasn't ideal to be in the market based on the price action. Okay, so I was actually able to formulate this into a combination of momentum indicators, and I was able to make it so that it adapted to market conditions. All right, and so we're going to take a look at that. The cool thing is when you formulate the right combination of momentum indicators, as I have, and combine them with volatility studies and price action setups, you can actually do much better than the MACD alone. So I think that I've demonstrated how effective the MACD can be by itself, but we've actually improved it. And we've programmed it into an add-on for MetaStock called Trade Trend. And basically what Trade Trend does over the MACD is it lets you get in before the MACD signal a majority of the time. So we saw how effective the MACD was in terms of predictive qualities, but we've actually improved it. And we've done it with a proprietary blend of momentum indicators that can produce nearly instant profits. It predicts short-term and long-term trends with astounding accuracy. It works across all markets, stocks, futures, and Forex. And you can use it to screen for trades on the MetaStock platform in seconds. So even if you're a short-term intraday trader, you can find these signals before they actually take place. And it gives you 1 to 3 bars of advance notice. So if you're trading a 5-minute chart, you know 5 to 15 minutes ahead of time that there's a potential shift in trend. Okay, we're not talking about lagging data here. We're talking about forward-looking predictive measure of momentum shifts and trends. And you can use it on any time frame. Again, whether you're intraday or a swing trader or a long-term investor. And the beauty is on the MetaStock platform, in fact, of all the platforms I've seen in my trading career, they have the most robust backtesting function. So if you do want to backtest it, you can look at the results, and it gives you a lot of really good metrics and data points to see how it performs in terms of drawdowns and consistency. You can use it to supercharge your option strategy. So a lot of our members use Trade Trend to trade options, and a lot of them come to us, and they've been trading options for some time, and they've tried all these different strategies, and they'll come to us trading very complex multi-leg strategies like iron condors, butterflies, calendar spreads, ratio spreads. And that's great. There's nothing wrong with any one of those strategies per se, but of course the more complex strategy you trade, the more difficult things can be. So what a lot of traders do when they see our trade trend signals is they simplify their strategies. They go from trading these complex multi-leg strategies to simply buying calls and puts on the signals. And most people fail buying puts and calls on indexes and ETFs and equities because you have to get your timing exactly right. And if you're off just a little bit, it can be very difficult. But Trade Trend allows us to pinpoint our entries and exits with astounding accuracy. And so a lot of our members will just trade buy just calls and puts on directional moves. And it takes all the guesswork out of trading, right? So we talked about how a lot of traders just use guesswork or gut feeling or whatnot to select their trades. But this removes all of that. It actually tells you when to get out, when to get in, when to get out, but it also tells you when or where to trail your stop loss. So those are the 3 major components of a signal, right? You need to know when to get in, when to get out, but also how to manage the trade while it's open. And this gives you that as well. All right, so I'm going to share some actual live screenshots. Again, I don't like hypothetical results. It's easy to go back and find things in the market with a trade signal service and say, oh, this worked, this worked, this worked. So I'm going to show you some actual live real money screenshots from my own TD Ameritrade brokerage account using the trade trend signals on the futures market. Okay, so these are all off the daily chart, no intraday day trading here. And they're all just one contract. So nothing crazy. I'm not trading 10, 20, 50, 100 contracts. One contract trades off the daily chart, over $13,000 profit in a single day using the trade trend signals, over $3,600 in profit in a single day. Now, of course, not every trade is a winner. You can see we have some losers in there, but the winners tend to far outperform the losers, and that's key. You want to have a positive expectancy in your trading, and you want your winners to outperform your losers, both in quantity and in terms of win percentage, and also risk reward ratio. So over $4,400 profit a day. This is real money, guys, not hypothetical. All right, so let's take a look at the MACD versus trade trend. I don't have the MACD indicator plot on here on the screen, but basically it gave us a buy signal right here on the SPY, the ETF that tracks the S&P. And it did a nice job at letting us know that there was a potential continuation of this uptrend, and it did predict that. In fact, it predicted it at a resistance level around 280. So a lot of traders may have been going short or getting out here because there was a previous rejection of this level on the SPY, but the MACD actually told us otherwise. It said, okay, the SPY may sell off here for a couple days, but the likely direction going forward is going to be to the upside, and it did find that. But our trade trend members were actually able to predict this uptrend much earlier, over a week before the MACD signal, and at a much lower point in that little retracement there, correction. Okay, and so what does this mean in dollar terms? Let's put this in dollar terms for you options traders out there. So if you had just bought the 10 at the money call contracts on the MACD signal and gotten out when the histogram went back from green to red, you would have made $335 before commissions and fees on 10 contracts. That's not bad, right? You had about a 4 or 5 day trade there, 10 at the money call contracts, you would have made a little money. But our trade trend members who got in well over a week before the MACD signal and they bought 10 at the money call contracts on our trade trend buy signal, that equated to nearly a $5,000 profit on those same call options. Okay, so that's the difference between trade trend and MACD. This is a screenshot of trade trend on the MetaStock platform. So basically the way the signals work, and I apologize, they're a little small there. I probably should have zoomed in more, but I wanted to give you guys a real high-level overview of the accuracy of this add-on to MetaStock in terms of the predictive qualities. These are all of the corrections of 2018. This is, again, a daily chart of the S&P. The diamond is the warning. The diamond gives you the warning of a potential move. So remember I said that you have 1 to 3 candles of warning. You're not having to act on this immediately. It tells you where to place your order 1 to 3 bars ahead of time. Okay, so we're not lagging. We're not getting into this move after it occurs. We're getting in before. And then the arrow tells us that the trade was triggered using that little trick I gave you guys, the buy and sell stop order. Okay, so trade trend on MetaStock actually gives you the exact entry price, whether we're going long or short. All right, and you can see where the diamonds are. These are the sell-offs. These are the warnings. It actually gave us more warning than the MACD did by itself. And look at all the accuracy of the buy signals. So it's finding these shifts in trend and momentum practically at tops and bottoms and shift of the market. And if we look at that signal on the far right, that was the December correction of 2018. If you had bought just 10 at the money put contracts on that red diamond, it would have been a profit of nearly $10,000 on that move. And it's very small and difficult to see, but it also tells you when to get out. You can see the little black box there that says exit. That's telling you when to exit the trade. So we know ahead of time when to exit too. There's not a lot out there, guys, that can tell you when to get out before the trend shifts, and trade trend can do that. This is another example of trade trend on MetaStock. This is the TNA. This is a ETF, a leverage ETF that I like to trade. All right, and you can see the green diamond tells us, all right, the momentum is about to shift to the upside. Let's get ready to go long. Let's put our order in at the suggested entry price that trade trend gives us on MetaStock. And there's a nice profit of over $5,400 on 1,000 shares traded. It tells us when momentum is starting to shift to the downside. We went into that sideways price action, and it gives us the sell signal for a nice $2,000 profit. Then another buy signal as we bottom out for over a $5,800 profit on 1,000 shares traded. And you can see all of these incredible signals and all the opportunity that you had just on a daily chart. Okay, so just on these 6 trades, nearly a $40,000 profit. All right, and we had a few little break evens and small losers in there, but it catches the big moves and it allows you to profit on these trends and momentum shifts. Let's take a look at another example. This is another stock that I really like to trade. This is a daily chart of Micron, and in December it gave us the buy signal there. Right, we know that there's a high chance that the stock is about to go up, and right after it triggered there on day 3, and it gives us the trailing stop, tells us how to manage the trade, where to trail our stop. So it got us in around $49 a share, and then we're out up there right around $54.50 a share. Okay, so we picked up over a $5 move on this one signal alone. Okay, and if you just traded 1,000 shares, that's a $6,000 profit in only 3 weeks. Okay, so that was a cherry pick trade off of Micron. So I'm actually going to give you 5 consecutive signals on Micron that TradeTrend identified back in October through December of 2018. And I picked this time frame because remember what happened when we looked at the chart. We had those major corrections in October and December. So people often wonder, well, how's this going to work when the market is crashing or selling off? Well, this is how it works. 5 consecutive signals. If you'd taken every trade and just traded the stock, we had 1 little loser in there and 4 big winners for over $13,500 in profit on 1,000 shares traded. If you're an options trader and you just bought puts and calls on these signals, nearly a $7,000 profit. You could have put up a lot less cash to make a really good amount of money. So again, TradeTrend works in any market, any time frame, any size account. We have traders who use small accounts, and they are able to use the indicator to select high probability profitable trades. We have traders who have very large accounts who use it. It can be used with any size account. So you may have seen other signal softwares before, but not like this. Okay, remember, I told you it's predicted every market sell-off in the history of the market. All right, so this is the flash crash, May 6, 2010. If you guys were trading back then, you'll remember this one because it was a big sell-off. And there was the warning right there, just towards the end of April. And boom, the market tanks. And it gave us the warning ahead of time. And it told us exactly where to trail our stop as the market's selling off. This is the more recent flash crash, August 24th, 2015. There was the sell signal. Boom. The market tanks. We knew ahead of time before it actually sold off. This can really help you protect your portfolio. Imagine 2008 when the market lost more than half its value. If you guys were trading back then, this was a really tough time. And we were in some really sideways, rangy price action prior to that market crash. But TradeTrend predicted it. It actually gave us the sell signal before the market sold off, and actually gave us 3 profitable sell signals all the way down as the market lost more than half its value. So there's no need to go to cash. You can actually cash in on these moves too. If you want to buy puts or short the market. This is the .com bubble, 1999 to 2001, if you guys were trading all the way back then. There's the sell signal, there's the trigger, and there's the sell-off. And again, we got several nice sell signals on the way down. So every system will produce winning trades, and every system will produce losing trades. The problem is they don't keep you out of the market when conditions are not favorable, and you end up giving them back a lot of your profits on the losing trades. That's the problem with most systems. But that's changed with TradeTrend. 99% of signal softwares operate on static algorithms. We've formulated TradeTrend to adapt to market conditions. Okay, and this is the reason most signals don't work consistently. They'll work for a while and then they fail. Okay, but TradeTrend's different. It's one of the only adaptive signal softwares available today, and it's an add-on available on MetaStock. And this is actual live real money proof of that. Again, these are screenshots from my real money TD Ameritrade brokerage account using trade trend in the futures market. And you can see the profit potential here, okay? These actually were all taken during the 4 major corrections of 2018. So when most traders were failing to trade the market and they were struggling with the choppiness and the corrections, I was making money using the trade trend signals in the futures market. So here's my promise to you guys. I want to help you guys have days just like these, just like the real money results that I showed you in my own brokerage account. I'm going to give you guys access to a tool that lets you copy my trades. So this is a one-time opportunity for the MetaStock Summit for you to join me to discover how I make consistent income in the markets day after day, week after week. Again, I'm a professional trader. I manage a hedge fund. I actually use this tool in my own hedge fund, and I use it in my own personal trading account. So here's everything you get. You get trade trend for stocks, futures, and Forex. It gives you the exact entry and exit signals, 1 to 3 candles in advance. That's huge. Most signal softwares tell you either when it's too late or you don't have enough time to act on the signal to actually get into the move before it happens. With trade trend, you do. You have 1 to 3 candles in advance. You're also going to get access to our live trade sessions. So we hold several live trade sessions a month using the trade trend indicator. And I actually run these sessions on a webinar, and you are able to join that. And I go through a lot of my best strategies and techniques that I use using the trade trend signals. And you get members area access for replays and recorded training sessions. So if you're not able to attend or join one of the live sessions, you can gain members area access to our portal where you can view all the past recordings. You get full support and coaching from me. We also teach trade adjustments to fix losing trades. So of course, every system has losing trades. Trade trend is no different. There's going to be losing trades, but we actually have a lot of adjustment techniques in our arsenal to fix losing trades. And a lot of these surround options trading. And then I also give a list of my most profitable tickers to trade on our live trade sessions. So you get a lot for trying out trade trend. And it's going to give you the opportunity to cut the learning curve and trade like a pro starting tomorrow. Okay, so the market's going to open back up tomorrow, and I want you guys to be prepared whether we continue in the uptrend that we've been in for the last decade, or we see a market crash, which is inevitable. We just don't know when. But if you have a tool that can help you predict it, it's going to make a big difference for you. And here's my guarantee. If you don't make money in the first 60 days, and this is how confident I am in our trade trend add-on for MetaStock, we give our members $1,000 to spend on any of our highly acclaimed online trading courses and trade alert services. So we offer a lot of other products and services on our website, altostrading.com, and we will give you $1,000 to spend on our website in any way that you choose. I'm going to tell you right now, no one's ever taken us up on this. So here's a little bit about what our members are saying. Jay Thomas says, very impressive results. Well done. Thanks for helping us little guys with small accounts who dream of growing our accounts over time and reaping the benefits of consistent monthly income. And Frank says, how refreshing to have someone produce a product that does what it says. I thought it was too good to be true, but you proved me wrong. Thanks, and keep up the good work. Chris says, first of all, I want to thank you for providing such a first-class alert service. It's really the only one that delivers on promise, and I've tried a few. After demo trading for several months, I'm now happy to go live. And Alan says, I've been involved with lots of software testing. Alan was one of our early beta testers for Trade Trend. And he said, Trade Trend seems to do exactly as it says. And so far, I can find some nice setups. And Craig says, my first trade paid for the entire package. Nothing ever works for me this fast. I wish I had found you guys last year before all the major market dips. This is one of my favorite quotes from Mark Twain. The secret to getting ahead is getting started. A lot of people don't succeed because they never start. Okay, so I really encourage you guys to start with me today and try out Trade Trend for yourself. Again, it lets you get in before the MACD signal. You get my proprietary blend of momentum indicators that can produce nearly instant profits. It allows you to predict short-term and long-term trends with astounding accuracy. It works across all markets, whether you're a stock trader, a futures trader, a Forex trader, and whether you trade intraday, long-term, doesn't matter. It works regardless of the time frame you choose to trade. You can use it to backtest before you place a trade. You can use it to supercharge your option strategies, and you can trade like a pro without the guesswork that so many traders use in their trading. I'm going to throw in a couple bonuses for you guys today too. If you decide to try out Trade Trend, I am an instructor on the online education platform Udemy. You guys may have heard of this. I have over 18,000 students in 7 courses that I have on Udemy. This is one of my more popular courses. I have over 9,500 students enrolled. 4.5-star rating with over 1,200 ratings. And this is one of my most popular options trading strategies, how to win 97% of your options trades. And I show you guys exactly how to do that in this course. And you get it for free if you decide to try out Trade Trend today on the summit. Normally I sell this for $124.99. I'm gonna throw in a second bonus. I just finished up my my popular ebook, How to Create Risk-Free Trades and Let Your Profits Run with Little or No Risk. I'm gonna give you guys a copy of my brand new ebook if you decide to try out Trade Trend today. So I want to open it up for questions here. We have a little bit of time left. And if I don't get to your question and we run out of time, you can always send us an email at support@altostrading.com or visit our website, altostrading.com. Or you can call the toll-free number. This actually rings right into MetaStock at 800-466-6312. And they can answer any questions for you regarding the MetaStock platform or the Trade Trend add-on. All right, so I'm going to go ahead and take some questions here. So TJ is asking, where do you put your buy stop? Good question. So if you're just using the MACD indicator technique that I showed you earlier in the session, TJ, you would just put it right above. I generally do a few ticks above the candle on a long signal, or your sell stop would go a few ticks below the low of the candle on a sell signal. So good question. The nice thing is Trade Trend on MetaStock actually gives you the exact entry price. So you don't need to guess where to put your buy stop or sell stop order. It actually tells you what price to put it at. I don't have the platform pulled up, unfortunately, but maybe Jeff can run through that if we have any extra time. Chris is asking, does it work good with small time frames? 1 minute, 3 minute, 10 minute. Yeah, Chris, we have members that use it across all time frames. Just like any strategy, the shorter the time frame you trade, you're going to get more signals. So as you go out in time frame into the longer time frame intervals, you'll get fewer signals. If you're trading off a 1 or 3 or 10 minute chart, you're going to get more signals, and you might get a little more choppiness, but it does give you still very good accuracy. So yeah, it does work good with intraday day trading. We have a lot of members that use it for that. Let's see, these are coming in quickly. I can barely read them fast enough before they scroll off the screen. How do you search the stocks to trade? So Vic, we hold our live trade sessions and run screens, so we can kind of show you guys how we do that. But that's the beauty of the MetaStock platform. They have a screener built in, so you can select your time frame, pull up the Trade Trend indicator, and you can screen for trades. And I've actually set up some pre-populated screens. So for the futures market, stocks that have weekly options, and we can provide those to you. MetaStock has a lot of those already built in to their screening system. So if you just wanted to scan stocks that have weekly options, or if you just want to scan, you know, NYSE stocks or S&P stocks, it allows you to do that. Okay, Richie's asking, what's the link? I think Jeff will put that in the chat box probably.
I did. Yeah, I did. And I wanted to show a few of these things if you don't mind. So
Sure.
let me go ahead and, because I've just been, a lot of people have been asking. We have a question from Germano from Germany on the YouTube channel. And he wanted to know what the winning percentage is for this particular system. Do you have anything you can talk about in regard to that?
You know, it's an interesting question, and we do get asked that a lot. And it's hard to, it's kind of a very broad question, hard to say, because I haven't actually run data across all markets and all time frames on a winning percentage, but it's just going to be variable depending on what stock, what market you're trading. But it generally ranges in the 60 to 80% range. That's if you're just trading the signals. The win rate can be quite variable. For instance, if you're selling puts or credit spreads on the signals, you're probably going to have a very high win rate of 90% or more. If you're just taking a directional trade, you know, on equities, for instance, it may be more in the 60 to 70% tile range, but it's variable. I can't give you an exact number, but what I can say is most of the time the winners outpace the losers. And what's actually more important than win percentage is risk reward or positive expectancy. So a lot of traders will focus on, you know, what's the win percentage, and they'll hear, you know, oh, it's 80% or 90%. Oh, great, that must be a winning system or a winning signal service because they're winning more trades than they're losing. But in fact, a lot of those strategies lose money because they don't have a positive expectancy. You still need to have a favorable risk-reward ratio. And our system provides that. So it's going to make more money on the winning trades than it does on the losing trades.
So I actually ran a little bit of a test just using the MetaStock built-in test. I thought I'd show that for a minute, if that's okay.
Sure.
So right here, one of the things about MetaStock is you can test trading ideas. So I just did a quick test while we were talking about kind of the results of the system, and said if we would have traded this thing on all of the S&P 500 stocks, how would that have worked? And what stocks would it have worked best with, and which stocks would it have worked worst with, and how would it have worked overall? So that's kind of out of the S&P 500. These green ones over here are going to be the stocks that, just using the entries and exits that are programmed in, if you took every single one of them, these would be the stocks that made money. So you can see right here with PG&E testing about 1 year of profit over the last about a year. You'd make about 95% with a win-loss ratio of about 8 to 5. 8 wins to 5 losses. Right here under equity, this equity ordinary would have made about 52% with a 7 to 9 batting ratio. So you kind of get the idea. With the way this tool is set up, you can get an idea, okay, well, based on what happened last year, maybe I should look at PG&E for trading it for the next year. Now, it doesn't mean necessarily that it's going to work and you're going to get exactly 95% next year on PG&E, but you do have the ability to go back and test that and see exactly how well it worked, what your drawdowns look like, and that kind of stuff. So,
and one thing to point out here too, Jeff, is that and one thing that we do, two things to point out actually. One thing we do on our live sessions, because I'm guessing this was run for both long and short signals, is we'll look at the overall context of the market. We may not want to look at short signals if the market's in a strong uptrend. We may just want to look at taking long trades. And so we cover a lot of that in our live sessions and how to optimize this. But another really important thing to notice is the risk reward here. So if you look at a lot of our winning stocks on this S&P screen, we have on that side of the spectrum, it looks like about a 10,000 winner. But you can see that the winning trades are much greater than the losing trades, because the worst one on the right is a little over 2,000, where we have
a double.
The winning trades.
This is a 95% increase in 1 year.
Right. So that's something you want to definitely pay attention to with any system.
Somebody was asking about how the stops kind of show up in MetaStock, and I thought it might be a good idea to show that too. Do you mind?
Sure.
All right. So
not at all. That'd be great.
Let's go ahead and go in here. I'm going to go ahead and close out that report. And then what we're going to do is, this is a chart of the Dow Industrial Average, or the DIA ETF right here. Last week we would have had, just to kind of talk a little bit about the expert advisor. Anytime you have a diamond right here, that's the actual setup. If that setup triggers, you'll have a little bit of a buy signal. And then when you get out, you have an exit. You're looking to talk about something, Jeff. I'm going to let you talk if you want to.
Oh, no,
okay.
I was letting you go.
All right. So here we had a pretty decent little trade. Back here on, and if I highlight over it, it's going to tell me, on the 23rd, we had a setup that was confirmed right before this big move to the downside that we had. The way you actually pull so the setups are going to be indicated by the diamonds. The actual trigger will be indicated by the arrow, and then the exit that you're going to get is just going to be painted on there. But if I'm following any of these trades in real time, I'm going to want to be able to know what my stop is and exactly where I'm going to get out of that trade. And that's where this expert commentary that you see on the left comes in pretty handy. What I've got here is, I'm going to move it to the very last day. You see this triangle right here. This is the day that it's looking at. If I look at today, actually this is Friday, it's going to say there's no long positions and there's no short positions. Okay, so if I move it back to where this triangle exists and where this triangle is, this was on the 5th. Okay, so it says trade trend projects a move up. The criteria for a buy setup has occurred based on this alignment, and I'm going to make it a little bit bigger so you can read it. Based on this alignment of technical patterns, including volume, volatility, momentum, and other trend factors, the probability of prices moving in the anticipated direction is currently at its highest. is suggesting an entry price of 293. So we're not buying because this diamond occurs. We're looking for an additional confirmation by the stock moving to 293 in this case, using a buy stop limit order. However, do not take the trade if it's above 301. So what you're saying, I'm going to put words in your mouth like the commentary is putting words in your mouth, is if this trades at 293 or higher tomorrow, buy it, as long as it doesn't gap up above 301.
That's exactly right. And we put that in there as protection. So if there is any gap,
It's a risk
in the
reward.
market.
Yeah.
Yep.
So in other words, if there's a huge gap, you don't want to necessarily, your risk reward gets out of line, right?
Right. And you may have already missed the move that it predicted.
So here you got your initial stop is, so if you get into that trade, you already know where your stop is going to be. That stop will update every day. So the next day we get into that trade, here's your stop is 281.57. If we move to the next day, it's 289. If we move to the next day, it's going to be 290. So it's inching up. You'll notice as that right here you've kind of got a lighter green, and right here you've got a bit of a darker green, and that just means right here it says it's not as favorable for the trade as it used to be. So when that happens, Jeff, correct me if I'm wrong, it's going to start to get more aggressive with your trailing stop.
That's exactly right. Yep. Mm-hmm. So the algorithm is picking up that momentum may be slowing down, and there could be an exit signal coming, in the next 2 to 3 candles. So it's just giving you that warning, and you'll find that that's accurate the majority of the time.
Yeah, you'll notice right here we had on this setup that we had to the short side, you had kind of a big move down. Here it starts to lose that momentum, and you end up getting out of that trade. Same with this up move here. Had this big move up. Once it starts to change direction, it's actually really good the way that it works. Let me show how the scanning works, because we did have one question about that. If I come in here to our Explorer, that's our MetaStock scanner. And what I'm going to do here is just come down to the trade trend. You've got your long setups. So the setups, what you're going to be searching for in a long setup is going to be the diamond. You're looking for something that's triggering a setup for the following bar or the following day, but hasn't triggered yet. So if I ran a setup, let's say today on Friday's data, I could kind of make a list of the stocks that are kind of looking to trigger, open those up and kind of keep an eye on them to see if any of them actually do trigger. Right here on the signals, those will be basically what you're searching for is the buy signals. So, and the way, and like Jeff was saying, I'm going to go ahead and I'm going to do a long signal setup. Actually, I'm going to search for some long setups right now. And let me go ahead and choose that scan. What I'm going to do is I'm going to do the S&P 500. I'm going to go ahead and start that exploration here. And you'll notice how fast this is going through that. It's going to go ahead and it's going through. It's rejecting about 84% of the stocks, 84% of the S&P 500. If we're looking for a long setup, these are just stocks we don't have to look at. Right now, what we've got is exactly just the 76 that might have a trigger for tomorrow. Here you've got the close price, the entry. This is the price that you want to see at an entry, the maximum, and then your stop loss, and how long it's good for. So, and this is expressed in bars. So when you get a setup, that setup is good for a total of 3 bars. Do I remember that correctly?
Yep, that's exactly right. So you have up to 3 bars advance notice, and that's what I really like about the MetaStock platform as well, is it actually tells you how many more bars the signal is good for if it hasn't triggered yet.
Cool. And so 0 means if it doesn't happen tomorrow, it's not going to show up again. Anything right. 1 or 2, you still have a couple of days on it still. Okay. SP asked a question I'm going to have you address a little bit, Jeff. What time frames do you recommend people use these signals on?
So I recommend that you trade it on the time frame that you are comfortable with. And the reason I say that is because it does work the methodology, the adaptive nature of the algorithm, everything else. The time frame shouldn't make any difference. It's still picking up momentum shifts and trend changes. So I just tell our students, trade the time frame that you already trade or that you're comfortable trading, because there's really no reason to switch time frames just to try to get the better signal. the signals work across all time frames, and we've programmed it to do that. Personally, I don't do much day trading. Most of the trading I do is off the daily chart.
All right. We're out of time again.
That went fast.
Jeff, I appreciate it. Great job
Thanks
again, as always. And there's a question to show the package again. I'll do that very quickly. And let me just go back into the PowerPoint a little bit here. And there's the package being offered here. There's the trade trend. It's a MetaStock add-on. And it does do the scanning. It does require MetaStock to run, but it'll allow you to do the scanning. It'll allow you to see that expert commentary that's going to tell you, hey, there's a setup. Here's where you should buy it. Here's where your stop loss needs to be. It allows you to do the system testing. It allows you to identify what stocks work the best with it. And it's been very, very successful. People really have liked this over the last year. And I'd encourage you to try it. All in all, it comes with 2 different templates, an expert advisor, the scan or the exploration, and the system test. And normally with this, it's $90 per month as a monthly subscription, or $9.72 a year. What we're going to do as an offer for the Trader Summit today is we're going to offer you the ability to subscribe for 1 month at $90 and get 2 additional months for free. So we're going to give you for about $30 a month. You can add this to your existing MetaStock account, and you'll be able to evaluate it for $30 a month, basically. With that, we're going to include the white glove installation, the training class on how to use MetaStock called Unleash the Power of MetaStock. We'll even include a trial to MetaStock if you need it. So if you'd like to do that, give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. This is also available today as part of our Summit special, where we include MetaStock Real-Time, the software that we're showing all day that's been rated #1 in its price category for 25 years in a row. We're going to offer you the 3 months of the Zenith data. We're going to offer you the Steve Bigelow's candle profit strategies, as well as the classes that he did, the value charts, the trade trend, and then Chuck Hughes Prime Trade Select, with some training called Unleash the Power of MetaStock to help you get started, and 2 years of Stocks and Commodities magazine. This is a software this is a package that we've built today that includes literally our most popular products that we've had. People love these products. I'd encourage you to try them. You can give us a call. We can help you get set up for them. 800-882-3040. Visit us online at metastock.com/saleschat. So, and I'd encourage you to try it. It's awesome. This works great. So, in any case, do want to say thank you to Stocks and Commodities for subscribing to, or for sponsoring the event today. Just going to go ahead and Chuck.
Yes, can you hear me?
I can. I was a little nervous that we weren't going to be able to hear you because I didn't see your audio connected all day. So, or when you initially signed in. So I'm glad we can hear you. How are you doing today?
I'm doing great. It's a beautiful morning here. How are you doing?
I'm doing great. We're having a lot of fun. Welcome to the summit today.
Yes, thank you.
You have a pretty interesting history. You used to be a bit of a pilot, from what I understand.
Yes, I was a Air Force pilot, and then I was an airline pilot for most of my career. And now I'm in the second part of my career as a trader. How did you get involved in trading? It was kind of like a hobby, and on my days off, I would dabble in trading and try to find out as much as I can about trading. And I eventually designed my own trading systems, and I've been doing that for about 35 years.
Great job. I'm gonna try. Let's go ahead and get your screen up here. Okay.
Okay.
Good. We do that. It should have just popped up a message saying, "Do you want to?" Okay, and I can see that.
Okay, and I'm going to go into slideshow mode.
Okay, good. Saw a little bit of an error message. I thought we might have some problems. Chuck, I'm just going to get out of your way.
Okay. All right. Sounds good. Well, it's great to be here, everybody. Today, we're going to look at Prime Trade Select system for selecting option trades. And Jeff will mention at the end of the presentation that there's a MetaStock module available for Prime Trade Select that will screen stocks using the indicators that we'll look at today. And I have brokerage statements. I can just roll through these quickly, but we have over $3,700,000 in closed trade profits for our option trades over the last 6 years, with an average return of 169%. So we'll be looking at the system I use to produce those profits. And we had 187 winning trades and 18 losing trades for 91% accuracy. And the high percentage of winning trades is mainly due to the 1% rule for selecting options. And we'll look at how we implement that. It gives us a high percentage of winning trades. So $3.7 million in actual profits over the last 6 years. And we'll also look at our profit guard spread strategy for trading options. And this is our go-to strategy once we have a profit in an option trade. We'll always leg into a spread strategy to protect those profits. And then we'll have a Q&A session at the end. And to start off, we utilize technical indicators to trade options. I developed these indicators over the last 3 decades, and it's our belief that all of the known information about a company is reflected in its stock price. So if you can quantitatively measure the price movement of a stock using technical indicators, then you can determine the most likely future price movement of a stock. And this can give you the edge you need to be a successful trader. So let's talk about Prime Trade Select. There's 3 steps involved. We'll go through these today. The first step is we want to select a stock that's on a 50 and 100-day EMA system buy signal. Step 2 is we want to select a stock that's trading in the Keltner channel buy zone for a lower risk entry point. And then step 3 is we use the 1% rule to select an option strike price with a higher percentage of winning trades. And I'll show you how that works here shortly. Now, contrary to what you may have learned, option trading does not have to be complicated. Our mantra is to keep it simple. Options are known as derivatives that derive their value from the price of the underlying stock or ETF. Now, as you know, call options profit as the underlying stock moves up in price, and put options profit as the underlying stock moves down in price. And the price movement of the underlying stock determines an option's value and the resulting profit or loss for the option trade. If we can identify a stock moving up in price using the 50-day and 100-day EMA system, then purchasing a call option on that stock can produce enormous profits and allow us to harness the leverage provided from option trading. So the 50, 100-day EMA system, it smooths out the day-to-day noise of a stock and gives us a clear picture of the stock's price trend. It only takes a few seconds to pull up the 50 and 100-day EMA system, and that gives us a clear picture of whether the stock is on a buy signal or a sell signal. So step 1 is we use the EMA system to determine the price trend, and the goal is to quantitatively measure buying and selling pressure of a stock, and this allows us to follow the trend instead of trying to predict a trend. I like to use a system instead of emotional decision making, and I've been using trend following successfully for over 35 years. And our trend following system, Prime Trade Select, it worked well in the 2002 and 2008 bear markets when we had short positions, and we used Prime Trade Select to select those short positions. So a stock is on an EMA buy signal when the 50-day EMA is above the 100-day EMA, and a stock is on an EMA sell signal when the 50-day EMA is below the 100-day EMA. So that's the first step in Prime Trade Select. And we purchase stocks or call options on stocks that are on a buy signal, and we purchase inverse ETFs or put options on stocks that are on a sell signal. Today, we're going to look at stocks on a buy signal because most of our stocks are on a buy signal in the current market conditions. But we will, in the next downturn, we start transitioning to short positions using Prime Trade Select. And the trend following works in both bull and bear markets. So you always want to be wary when there's a market change. You have to be ready to start selecting short positions. Once we have a downturn of maybe 10% or so in the S&P, we'll start looking at taking short positions and exiting some of our weaker buy signals. So let's look at some examples of EMA buy signals. This is a daily price chart for Apple. And the vertical black lines right here represent the daily price movement of Apple stock. We can see back in April, the 50-day EMA line, which is this black line, crossed above the blue line. The blue line is the 100-day EMA. So once the 50-day, the shorter term, closed above the longer term 100-day EMA right in here, then Apple was on a buy signal. Now, as long as the 50-day EMA, which is this black line, is above the 100-day EMA, then the stock remains on a buy signal, and you can see it's currently on a buy signal with the 50-day above the 100-day EMA. Here's a price chart for Microsoft, and we can see on Microsoft is on a buy signal as the 50-day EMA is above the 100-day EMA. Another price chart for Visa, and again, we can see that the 50-day has remained above the 100-day EMA. So that's the first step in Prime Trade Select. Here's an example of the China ETF. This is an example of a sell signal, and these red and black lines here represent the daily price movement, and the blue line is the 50-day EMA. We can see it crossed below the 100-day EMA right here, and at that point, the China ETF was on a sell signal. So step 2 in Prime Trade Select is selecting a lower risk entry point using the Keltner channels. And we use the Keltner channels to help us time our stock or option purchase with a lower risk entry point. So let's take a look at the Keltner channels that help us time our entry. We can see that this is a daily price chart for Home Depot stock. We can see the chart moves from lower left to upper right, and it's in a very strong price uptrend. Now the question is it too late to enter this price trend? So if you wanted to participate in this rally by purchasing a call option, the question becomes, at what point should you enter your trade? And we use the Keltner channels to help us participate in a stock that's in a strong price uptrend by waiting for a pullback and getting a lower risk entry. So there's 3 channels with the Keltner channels, and they're overlaid over the daily price movement of a stock. So here's a price chart for Home Depot stock. The red and black lines represent the daily price movement, and overlaid over the daily price movement, we have the three Keltner channels. The upper channel is this blue line right here. The middle channel is the dotted line in the middle here. And then we have the lower channel, which is this blue line right here. Now, the Keltner channels are an overbought, oversold indicator. They're similar to the Bollinger Bands. We prefer the Keltner channels. We've had a good experience with the Keltner channels, and they seem to work well with Prime Trade Select. Now, normally a stock will trade inside of these channels, and once a stock trades outside of the channel, it can set up an opportunity. So when a stock is trading above the upper channel, the stock is getting overbought, and then it normally trades lower. So we can see with the daily price movement of Home Depot stock, we can see that once it gets above the upper channel, it's getting overbought, and then it usually declines in price. So we can see overbought right here, declines, overbought, declines, overbought, declines, overbought, declines, overbought, declines. So this is a great tool for entering a new trade in a stock that's already in a strong price uptrend. So whenever the stock trades below the upper channel, it's no longer overbought, and then it will normally rally. So we can see it was overbought, retraced, and then rally, retraced, rally, retraced, rally. So we want to look for a stock that's trading below that upper channel, and then we know that the stock is not overbought. So the Keltner channel buy zone occurs whenever the stock is trading below that upper channel line and is no longer overbought. So I circled the Keltner channel buy zones right here, and you can see we had numerous opportunities to enter this trade. And if you use the Keltner channels, even though the stock is in a strong price uptrend, it allowed you to participate in this uptrend with a lower risk entry as the stock rallied. Each time it came into the Keltner channel buy zone, the stock rallied and gave us plenty of opportunities to participate in the trend. Okay, so that was step two. We select a lower risk entry point using the Keltner channels. And then step three is we use what I call the 1% rule to select an option strike price with a higher percentage of winning trades. And once we select a stock or ETF on an EMA buy signal that's trading in the Keltner channel buy zone, then we next have to select an option strike price. And depending on the stock, there could be hundreds or even thousands of strike prices to choose from. So how do you determine which strike price to trade? And selecting that strike price can be just as important as the stock selection itself. So option premiums consist of time value and intrinsic value, and we add the time value of the option to the intrinsic value, and we come up with the option premium, which is what you look at when you pull up an option chain and you look at the prices. You're looking at the option premium, which consists of time value and intrinsic value. Now, each day before option expiration, the time value portion of an option decays, and the greatest amount of time decay occurs in the last 30 days before option expiration. And at expiration, options lose all time value and consist of only intrinsic value. So at expiration, that time value portion of the option decays to zero, and the option consists of intrinsic value. And here's a typical time decay characteristic of options. And this line right here represents the time value portion of an option. And you can see it decays each day. And then in the last 30 days, you have the most rapid decay in the time value portion. And then, of course, at expiration, the value goes to zero. The time value portion goes to zero. So options lose all time value at expiration and consist of only intrinsic value. So when you buy an option, you're buying a decaying asset. So due to those time decay characteristics of options, we want to minimize the time value, which is going to decay it to zero, and then maximize the intrinsic value. And the best way to do that is to purchase in-the-money options. And in-the-money options have more intrinsic value and less time value than at-the-money or out-of-the-money options. And in-the-money options have strike prices that are lower than the current price of the stock. So I developed a simple technique I call the 1% rule for selecting an in-the-money strike price when purchasing options. And the 1% rule utilizes a strike price that limits the time value portion of an option to less than 1% of the stock price in order to minimize time value and maximize intrinsic value. So for the 1% rule, we want the time value portion of the option to be less than 1% of the strike price. So if you limit the time value portion of a call option to less than 1% of the strike price, then the stock price only needs to increase 1% in order for the option trade to start profiting. So if we limit the time value portion to less than 1% of the stock price, the stock only has to go up 1%, and we're going to start profiting on the option. And when you use the 1% rule, the intrinsic value will increase $100 for each 1 point increase in the underlying stock. So let's look at an example of the 1% rule on a XLU option purchase. XLU is the utilities ETF. And we can see on January 31st, we bought 2 of the XLU 40 calls at 1480. So bought 2 of the 40 calls, 1480. XLU was trading at 54.36. So in this example, with the XLU trading at 54.36, we would limit the time value portion of the call option to less than 54 cents, which is 1% of the current ETF price. So with XLU trading at 54, we want to limit our time value portion to less than 1%, which would be 54 cents. So we have a current stock price of 54.36. If we subtract the strike price of 40 from 54.36, we come up with an intrinsic value of 14.36. So to calculate intrinsic value, simply subtract the strike price from the current price of the stock or the ETF. In this example, the intrinsic value is 14.36. And if we subtract that intrinsic value of 14.36 from the total option premium of 14.80, we come up with a time value portion of 44 cents. So 44 cents is less than 1% of the 54.36 stock price. So this strike price would qualify under the 1% rule. So with 44 cents of time value, that's less than 1% of the 54.36 stock price. So this option qualifies. And in this example, the XLU only needs to increase 44 cents, and then we'll break even and start profiting on the call option. So obviously, a 1% price increase to profit on an option will have a much higher probability of being profitable than an at the money or out of the money strike price that can require up to a 5 or 10% or even higher price increase at option expiration to break even and start profiting. Many times the expected stock price move will not occur before option expiration. So remember, if you purchase an at the money or an out of the money call and the stock is flat or down at all at option expiration, it will result in a 100% loss for your option trade. So you have to keep that in mind when you're trading options. If you buy an at the money or out of the money strike and the stock is flat or it's down at all, at expiration, you're going to lose 100% on that trade. So always keep that in mind. That's why we like to trade in the money options with lots of intrinsic value and low time value. So if you use the 1% rule to select an option strike price, it will increase your percentage of winning trades compared to trading at the money or out of the money strike calls. And this higher accuracy can give you, can make you a more successful trader, and a higher percentage of winning trades is always good to help you maintain that discipline you need to be a successful trader. So we like to trade in the money options with a time value of less than 1% of the stock price. So let's look at some actual profit results for Prime Trade Select. And I'll just run through these portfolio reports that show we had 3.7 million in closed trade profits with an average return of 169%. Now we have large trading accounts and we trade multiple contracts, as many as 100 contracts. So trading one option contract would require a smaller trading account. And what I did is I took all these trades over the last 6 years, put them into a spreadsheet, and calculated the number of winning trades and losing trades. So we had 187 winning trades, 18 losing trades. So we had about 91% accuracy. So I'll just scroll through these. This is Applied Materials. We had a $42,000 profit. Amazon, $162,000 in profits. Boeing, $205,000 in profits. Alibaba, $81,000. BKF, the Brazil, India, China ETF, $156,000 profits. Emerging Markets ETF, $292,000 in profits. CBOE, $104,000 in profits. FDN, that's the Internet ETF, $188,000 in profits. Home Depot, $120,000. ITB, the Home Builder ETF. UDOW, that's the leveraged Dow Jones Industrials. We had 358,000 profits. Chinese Internet ETF KWeb, 314,000 in profits. Apple, 364,000. The FAS, the leveraged financial ETF, 407,000. Home Depot, this was a different snapshot, different time period, 324,000. And in the triple Qs, 590,000 in profits. So those profits, those were all closed trade profits over the past 6 years for our option purchase trades. So Prime Trade Select has produced a lot of winning option trades, and that poses a dilemma. Do you hold on to a winning call option trade for further upside profit potential, or do you take profits in case the stock declines with the possibility of a profitable trade turning into a loss? So whenever you have a profit in an option, you always face this dilemma. So we know from experience that it's very difficult to watch a winning trade develop into a losing trade. And this is hard on your psyche as a trader and can help you lose confidence in your ability to be a successful trader. So what we do is we found a way to avoid this dilemma, and we simply purchase a put option that provides insurance on the profitable call option trade. So if we have a profitable call option trade, you always want to enter a spread trade to protect those profits. You don't want that profitable trade to develop into a loss, because that's really tough to take as a trader. So we simply buy a put option, and that provides insurance on your profitable option trade. And of course, put options profit as the price of the underlying stock declines in price. So if you have a winning call option trade, purchasing a put option provides a profit guard that can help protect you against a loss for your call option investment in the event the underlying stock declines in price. And we also, if we have a winning stock trade, we'll also purchase a put option to protect the profits on the stock trade. So the profit guard spread strategy applies to both stocks and options. And if we have a profit on a stock or an option, we always leg into a spread trade to protect those profits. Now, when you purchase a put option, it does not limit the upside profit potential for your call option purchase or your stock purchase if the underlying stock continues to move up in price. So that's an important point. When you buy that put protection, it does not limit your upside profit potential. And as we'll see shortly, this put option insurance can even guarantee that your trade will be successful. So you greatly reduce the risk of option trading when you purchase a put option to protect your profits. Now, once you buy that put option, then you can just forget about that option trade until option expiration. Because you're fully protected, so there's no need to monitor the markets or watch your positions. You can just simply take the trade and forget about it because you're protected until option expiration once you buy that put option. So with a profit guard spread, there's a long position, which is the call option, and a short position, which is the put option. And this is also known as a market neutral spread. And these spreads can profit if the price of the underlying stock goes up, down, or is flat. And there's no limit on your profit potential for the trade if the underlying stock continues to increase in price. And a sharp decline in the price of the underlying stock can even result in a windfall profit, which I'll show you shortly. And the risk of your maximum risk is limited to the cost of the spread. So you can't lose more than the cost of the spread. Now, with profit guard spreads, you can start out with a small $5,000 trading account, and we normally go out 1 to 3 months on a profit guard spread. So let's look at some examples. We use Prime Trade Select to select a BRIC ETF call option purchase. I was able to get a low risk entry using the Keltner channels, and I used the 1% rule for selecting the option strike price. The trade was profitable, so I created a profit guard spread trade to protect profits. So this brokerage confirmation shows that we bought the BKF March 32 strike call at 10,003. So this shows the option purchase. We bought 132 contracts of the 32 strike call, and BKF moved up in price. So after we purchased that 32 strike call, we had a profit on our call option purchase, and then we purchased a BKF 48 strike put option, and that created a profit guard or a market neutral spread. So we had a profit on the 32 strike call, and we purchased a 48 strike put to protect those profits. And we bought the BKF 48 strike put at 75 cents. So of course the 32 strike call is going to profit as BKF moves up in price, and the 48 strike put profits as BKF moves down in price. So we developed a series of calculators to calculate the profit potential for option trades. We have a total of 6 different calculators for 6 different option strategies, including the market neutral strategy. And the calculators will calculate the profit potential for an option trade based on the price change in the underlying stock at option expiration. So we use these calculators before we take an option trade, and we have 6 different strategies, and we use these calculators to calculate the profit potential. So let's look at the profit potential for this BKF spread trade that I just mentioned. And again, the calculator will calculate the profit potential for a trade, assuming various price changes in BKF at option expiration. In this example, we plugged in a 30% increase in BKF, was trading at 50.88. So a 30% increase would mean that it's trading at 66.14 at option expiration. And we plugged in different factors here, different percentages in this top row, and then the second row here tells us what the stock price would be. So if the stock price is flat at option expiration, it'll be trading at 50.88. If it's down 20%, it'll be trading at 40.70. If it's down 40%, it'll be trading at 30.58. Now, we don't expect the ETF to decline 20% or 40% or 100%, but I just plugged that in there so you can see how the strategy works. So in this example, BKF was trading at 50.88. We purchased the 32 strike call at 10.003. We had a profit in that call, so we purchased the 48 strike put at 75 cents. So let's look at the profit potential, and the calculator, calculated this before we took the trade. Again, we bought the 32 strike call at 10, bought the 48 strike put at 75 cents. So the cost of this spread was 10.75 or $1,075. So the bottom rows indicate what the profit potential is for the spread based on the price change in BKF. So we can see that if BKF is flat at option expiration at 50.88, the spread will have a $813 profit and a 75% return. And if BKF is up 10%, we'll have a 122% return. And you can see as the price of BKF moves up, then the profit potential also moves up. So there's no limit on the profit potential. But if the stock goes down 20%, we'll have a $525 profit on the spread and a 48.8% return. And then if it really drops, which we would not expect, but if it dropped 40%, we'd have a 62% return. And if it dropped to 100%, then we have a 346% return. So the returns also increase as the underlying stock goes down in price. So we can see in this example that our minimum profit, guaranteed profit, would be if BKF dropped 20%, then we'd realize a 48% return and a $525 profit. So in this example, by buying that put protection for 75 cents, we're guaranteed a profit on this trade. Here's another example. This is the emerging market. The EEM was on a prime trade select buy signal, and we purchased the 32 strike call at 1070. We had a profit in this call option purchase. So to protect those profits, we bought the 50 strike put at 67 cents. And let's look at the profit potential. EEM was trading at 51.22 when we bought the put protection. So stock price 51.22. The call, we purchased the 32 call at 1070, and then purchased the 50 strike put at 67 cents. So in this example, if EEM was flat at option expiration, we'd have a $784 profit and a 68% return. And we can see if it increases in price, the profit potential goes up. If it decreases in price, the profit potential also goes up. So whenever you can profit when the underlying stock is flat at option expiration and you have a 68% return, that's a great way to trade, and a very low stress way to trade, knowing that you're going to have a 68% return if the stock is flat. And if it goes down 20%, in this example, the minimum return would be 58% for the trade. So this is a great low risk, low stress way to trade options. If you have a profit in your call option trade, you want to protect it by legging into a debit spread, legging into a market neutral spread. And in many cases, you can have a guaranteed profit at option expiration, no matter what the underlying stock or option does. So here's a snapshot of some profit guard spread trades. And in this column, it lists the symbol for the stock, the quantity. Now, in this example, we have both stock and option trades that we purchased a put option to protect. So in the first example, for Boeing, we had 1,300 shares of Boeing stock, and we purchased the April 340 put. So we had 1,300 shares, purchased the April 340 put, and in this column here, it lists the price that we paid for the stock or option, and then the total total gain in this column, and then the percent gain. So at the time we took this snapshot, we had $901,000 in open trade profits. Excuse me. We had $901,000 in open trade profits for our profit guard, both stock and option spreads. So this is interesting. What we did is we looked at each one of these trades, and we entered the trade into our spread calculator, and the snapshot I just showed you shows that we had $901,000 in open trade profits for these various stocks and ETFs. Now, using that calculator, we were able to calculate the minimum profit for all the trades. Even if these stocks all went to zero, the minimum profit would be $788,000. So with open trade profits of $901,000 and a minimum guaranteed profit of 788,000, you can see that we were able to lock in a substantial amount of our profits if the market goes down. So this is a great strategy for limiting your risk and producing substantial profits, and not limiting your upside by simply purchasing a put option. So the minimum return for all these trades would have been 40.7%, no matter where the underlying stock or ETF, no matter what the price movement was of the underlying stock or ETF, we'd be guaranteed $788,000 in profits and a minimum return of 40%. So here's an example of a market neutral spread for CBOE, and we purchased a call option on CBOE. We had a profit in the call option, and then there was a sharp sell-off due to unexpected bad earnings report. So we had purchased that put option to help us protect our profits. You can see it took a pretty steep dive, but here's a snapshot of the trade at the time of the market neutral trade. And we owned the 90 strike call, and the 90 strike call, after that sharp decline, that had a $9,094 loss. So if you just owned the call, the 90 strike call, you would have had a $9,000 loss in this example. But by buying that put, we purchased a 135 strike put at 350. So the put option had a $17,270 profit. So the net profit for the spread trade was $8,176. So instead of having a $9,994 loss for the call option, we actually had an $8,100 profit because we purchased that put option. So that's just an example of how the puts protect your profits. So this is a great strategy. And once you have a profit in a call option, a lot of times if you purchase that put option, you can guarantee those profits. And that's a low risk way to trade options. So that concludes my presentation. I just want to mention that I have a daily e-letter called Chuck's Trade of the Day. And in this daily e-letter, each day we analyze a stock and we go through the chart patterns. We look at our various indicators, and then we look at a potential call option trade. Sometimes we'll look at a spread trade or a covered call for the trade. So each day we analyze a stock. Today we analyzed ARE, and this is the daily e-letter for today. And we analyze the potential stock trade for the trade of the day. So if you're interested, this is a free daily e-letter. If you're interested in subscribing, you can just go to Daily Trade at chuckstod.com, and we can sign you up for this daily e-letter, and each day we'll analyze a different stock. And I also want to mention we have a weekly newsletter package, and it's called the Weekly Stock and Option Alert Newsletter. And each week we go through 4 trades using our various strategies and analysis, and we use the calculators to calculate the profit potential. So we have a package of the Weekly Stock and Option Alert Newsletter. We also give you the Stock Market Miracle book, and then we give you 3 reports on spread trades and the 1% rule, and you get a 2-year subscription to the weekly stock and option alert, and that's $79. I think Jeff will be displaying that link if you want to sign up for the weekly stock and option alert. And Jeff, do you want to mention the MetaStock module for Prime Trade Select at this point?
Okay. Hey, Chuck, how are you?
Good. How you doing?
Good. We have a number of questions. I was wondering if you could answer some of them for us.
Sure.
Okay, let me go. And I'll probably we've got a lot of people here, and there's a lot of questions. So we probably won't get to them all. I'm just gonna say, but let me kind of go through the ones that I promised I would ask. Somebody, Art asks in the GoToWebinar chat, do you personally execute and manage all of these trades, or do you have a number of other people involved?
The trades I displayed today were all my trades in my personal accounts. They were actually in my retirement accounts.
Okay. Typically, Al was asking, how much delta do you look for when you're using the 1% rule strategy?
Okay, I'm not familiar with the Greeks. I believe the delta is that the time value portion, or
so delta would be the how much you expect the price to go up of your option if the increase of the I'm doing a horrible job at this too, Chuck. So that's how much increase in your option you expect for $1 increase in the price of the underlying.
Okay, yeah. Yes, I see what you're saying. Well, if you use the 1% rule, it's going to have a high delta, and it's going to follow the stock price pretty closely, because if the stock goes up 1%, then you're going to start profiting right away. So it would have a high delta, but I never really looked into the Greek letters and everything that all the analysis involved with the Greek letters. I just know that if you buy a call option and the stock goes up, you're going to make money. So I just base everything on that, and we try to enter a trade where we know the most likely future price movement of the stock is up, and then we use that 1% rule to select the option. And I know that's worked for us over the years, and I don't really pay any attention to any of the other option strategies, all the Greeks, because I just like to keep it simple, and I know if the stock goes up, I'm going to make money.
Art had another question.
And if the stock goes down, then if I have a profit guard spread in place, I can still make money. So
Art said, I notice you're using a lot of ETFs instead of individual stocks. Is there a reason for that?
Yeah, I guess some of the presentations I showed you, probably about half were ETFs and half were stocks. In our closed trade profit record over the last 6 years, I think that's about evenly divided. There's probably half stocks and half ETFs. So we use both in our trading.
Jim had a question that I'm kind of interested in the answer to as well. How far do you usually go out for your expirations?
Okay, that's a good question. We usually go out 1 to 2 months, maybe 3 months when we purchase a call option. And that brings up another good question. We at option expiration, let's say we buy a 1 month option. At option expiration, if the stock is still on a Prime Trade Select buy signal, then what we'll do is we'll roll over the option at expiration. We'll roll over the profits, and that will reduce the cost basis of the new option and allow you to compound your returns. And in most of our options, we're able, after a few months, after a few rollovers, we can reduce the cost basis to zero, and then you're playing with the house's money. But to answer the question, we normally go out 1 to 2 months, maybe 3 months, depending on the option and the amount of premium, and then at expiration, we'll roll that over if the stock is still in a prime trade select buy signal.
Okay. Yeah. Okay. I think that addresses most of the questions. Ernest Hemingwell from our YouTube super chat says, Chuck is brilliant. I'm seeing him speak live in a few months. I think that must be the Vegas event. I'm going down for that one as well.
Oh yes, yeah, we're going to be in Las Vegas in April, and I'm hoping everybody listening can join us out there. It's a lot of fun, and it's also very informative. I did another live seminar in Las Vegas at the same hotel a couple years ago, and it was great to meet members and explain these strategies in detail. So we're hoping you can join us in April in Las Vegas.
All right. Very good. Good job today, Chuck. Really appreciate it. I'm going to talk a little bit about the Prime Trade Select and how that works. It's just another fantastic add-on that we've done for MetaStock. So, Chuck, thank you for coming today. Really appreciate that.
Okay. Thank you, Jeff, for putting on these webinars. We appreciate it.
Awesome. Thank you. Okay. And then one of the things I like about the Chuck Hughes Prime Trade Select and the add-on, it's an add-on that's been available for a number of years. It follows a pretty simple strategy, really. It determines the price trend, confirms the price trend, and then determines like a low-risk entry point. And it works just like the rest of the add-ons that we've been showing you today. Typically, the MetaStock exploration will screen for stocks that have the 50-day exponential moving average above the 100-day exponential moving average. It looks for stocks that have traded at a new 52-week high in the last 4 weeks, and that the on-balance value is greater than it was 6 months ago. All of that has to happen, and in addition to that, you want to see it decline to the Keltner channel or below after making that new 52-week high. So all of that's incorporated into the actual scan itself, and what it actually comes is back with is exactly results for finding that. So let me go ahead and pull up, and I've just been doing Dow all day long, but you can kind of see where the opportunities are actually coming in here. Anytime you have one of these blue signals on a chart, that means it's currently in a Prime Trade Select buy. So if we're looking just a couple of days ago, this would be an entry level for the Prime Trade Select. Here you had an entry level for the Prime Trade Select. Here you had another entry level for the Prime Trade Select. So every time that actually happens on the chart, it's a little bit different. As long as it's in an active buy condition, you can actually go in and buy it, and it'll be highlighted blue here on the chart. It does list out all of the rules here. Basically, a blue highlight when attached signifies this stock is currently on a buy signal. This stock is currently not on a basic buy signal. It tells you exactly what the steps are. Again, it's going to determine the price trend, confirm that price trend, and then determine an entry point using Keltner channels. And so that's really kind of how it all puts together. I'm just going to go ahead and kind of, and it's that easy. It does include the exploration functionality, so you can come in here, you can run a scan, it'll tell you exactly what stocks actually have a buy for that particular day. It does a really, really good job. It's been an extremely popular add-on for us. We do offer this one again with a 30-day money-back guarantee, so your risk-reward is right where it needs to be for that. Normally for this particular add-on, we charge $499 as a one-time cost. Here at the summit today, we're going to offer that at $399. And if you need a copy of MetaStock, you can get a copy of MetaStock as a trial for free with this. So if you're interested in taking advantage of that, you can give us a call, 800-882-3040, or you can chat online with us at metastock.com/saleschat. So there you go. It is also the last product that we're going to feature as part of our Online Trader Summit bundle today. And I actually really like the bundle that we have this time. You're going to get 3 months of the MetaStock real time. That's normally $300 right there. You're going to get 3 months of our Zenith data. Now, I do have a little bit of extra time because I have the whole hour to talk now. But with our MetaStock Zenith data, basically it's a software news and data service that they put over $1 billion into developing. It's supported by 300 different full-time reporters in about 3,000 full-time reporters in about 300 different news bureaus. It's a data service and a news service that they put together to compete with Bloomberg. Actually, they did a really good job with it. It's now the company name is called Refinitiv. It's actually before that it was known as Thomson Reuters, and before that it was named as Reuters. But it's a fantastic news service. We had a gentleman in our YouTube chat talking about how hard it was to get good data in Brazil. Well, Zenith is probably a really good option for that. Part of this, we're going to also include that Candlestick Profit Systems 2.0, one of our most popular add-ons, as well as some training that we just barely completed last week with Steve Bigalow. And he goes through, it's basically about 3 or 4 hours of training that he goes through and talks about all of the patterns and how to use those. It's going to include the value charts, the patented methodology we showed you earlier that actually you can attach to a chart to find out the fair market value of stocks. You can combine that with momentum. It's been a very popular product as well. You're going to get 3 months of trade trend with that. You're going to get the Prime Trade Select. You're going to get 2 years of Stocks and Commodities magazine. You're going to get a copy of Unleash the Power of MetaStock. You're going to get somebody to give you a phone call and set up a time with you where they can sit with you one-on-one and help you make sure everything's installed, answer any questions you've got in what we call our white glove installation appointment. We had a question earlier from one of the people that was here today that was talking about our support and how good it was. All of our support is right here in our office, right here in Salt Lake City, Utah. We actually, one of the things that we like to brag about is we keep more people in our support team than we keep in our sales and marketing team combined. There's many times when I'm looking at our support surveys and they're at a 100%. They do such a really good job of helping out the people. I think that's one of the reasons that we have been rated #1 for 26 years in a row this year. So you can give us a call, 800-882-3040. You can chat live with us at metastock.com/saleschat. Today, the retail price of all of this stuff purchased separately would be $44.87. You can buy it all, own it all for $19.45. It's a discount of more than 50%. So 800-882-3040 or metastock.com/saleschat. Whew. All right, very good. let's kind of going to take a little bit of a breath because there's no way I can keep up that kind of a pace for the next hour. In any case, I do want to spend a minute saying thank you to Stocks and Commodities magazine. They've been sponsoring these events for 7-8 years, however long we've been doing them now. You'll get a free copy of that. You can actually, if you want, if you didn't sign up for it during the registration process, there's a little bit of a link on the bottom. I'll paste that as well. So. And then, of course, we've been, MetaStock. You know who we are. So let's go ahead and kind of transition into talking about me, I guess. And just as we kind of transition here a little bit, how are we doing today? How many, I just have a quick question, and I'll just want to have you put why in the chat if you've been in here since we started 4 hours ago today. Let me know with a why if you've been here for 4 hours today or more. Jim asked for these CDs. Most of the products are actually downloadable. Thank you for that question, Jim. And I'm just waiting for some yeses. While we're doing that, I'm going to talk a little bit about me. And we're going to talk a little bit about what we're going to talk about today. John said, two Johns, John H. and John P. say yes, we've been here all day. Richard, Matesh, Harold, Jim, all have been here for 4+ hours today. So me. Chris says, great information. Victor says, I'm learning. Good. One thing I would ask for you, we do try and do a really good job of putting together this summit and doing a good job of actually providing you good information. At the end of the day today, Chris, thanks for being here all day. At the end of the day today, what I would like you to do is I put together a 2-question survey. 1, how did you like the summit? And 2, what kind of feedback you have? Please fill that out. And hopefully you're enjoying the class. Hopefully you've learned at least a thing or two. So let me talk a little bit about me. My name's Jeff Gibby. If you haven't picked that up yet, I've been working here at MetaStock. As of March, I'll be completing my 23rd year at MetaStock. And it's a great job. When I started here, I started in inside sales. I did that for the better part of a decade, let's say. After that, I was moved over to what we call our business development team here. During that time, I would work with a lot of our international partners, as well as a lot of the people that we've had on here today, like Steve Bigalow and Drew Day, Ken Wood, Chuck Hughes, you name it. I've had a chance to work with a lot of the partners that we have today. I've had a chance to also learn a lot. When I started, I didn't know anything about. They had to explain to me what a stock was, and then I spent about a decade actually working with all of these experts that we have in here today, learning about how they look at the market and helping them code out their methodologies that they use for MetaStock. It's a great little company to work for, and it's a brand that I've been proud to represent because of its heritage, the fact that it's been rated number 1, the fact that there's so many things that you can do in it. And we're going to talk a little bit about kind of the capabilities of MetaStock today. For the last, 7 years? No. For the last about 3 years, I've been in charge of our sales team. And my new title is called the Director of Sales. But that's also been a lot of fun. And I've learned a lot with regards to that as well. As a company, you've probably had a chance to read all of these bullet points. We've been in business for 1982. When I started, we were owned by Thomson Reuters. They've now become Refinitiv. We bought ourselves back about 6 years ago. We've been working on this software for more than 30 years. And one of the things that we are proud of is the fact that we have been rated for so long the best software in our price category. So today, I was kind of thinking about what I should talk about today. There's a lot of things that I could talk about really if I wanted to. And there's a lot of things that I definitely enjoy talking about when it comes to MetaStock. What I'm going to actually start with what I'm not covering, because MetaStock's a huge platform, and there's going to be a lot of stuff I have to kind of decide what I want to talk about. Literally, I've spent 2 weeks training a bunch of Saudi princes and sheiks. Spent 2 weeks actually training people in Saudi Arabia how to use MetaStock, and I could talk about it for 2 weeks. I have. What we're not going to cover today is we're not going to be talking about the Zenith news service. It's awesome. If you're interested in news, it's like I've heard reviews that say it's like getting Bloomberg for $99 a month. And if you've seen Bloomberg, it's definitely way higher than $99. We're not going to talk much about system testing, although MetaStock has one of the best system testers on the available. The things that I like about the system tester is its ability to go in and test as many strategies as you want against as many stocks as you want to get a real good idea of how something works in a broad market. And I showed that a little bit earlier with Tompkins stuff, but we won't be covering it in too much detail today, just again because of time. We won't be talking a lot about system testing or scanning. We'll talk a little bit about the expert advisor. But today what I want to do is I want to talk about some of the things I really, really enjoy in MetaStock. And I call this presentation the hidden gems of MetaStock. So. So let's get underway. And then if you have questions, I'll do my best to watch them. I've got YouTube up on this side, and I've got GoToWebinar up on this side, so you can tell where I'm looking just based on what I'm doing. Let's see. Robert says, can you provide an opinion on why MetaStock is better than Thinkorswim? I do lots of options to include futures and also do Forex things. Robert, I'll give you my opinion of why I do like Thinkorswim. Thinkorswim's a great platform. If I wanted to kind of talk about kind of some of the differences between Thinkorswim, here, full market scanning, the ability to test trading ideas. We, of course, have a patent-pending forecaster system. But I think it depends on really what you're looking to do. Like, so for example, if you're a trader that wants to be able to put together a quick scan to find a stock that meets a certain parameter, that kind of thing is really easy to do in MetaStock, where it's a little bit harder to do in Thinkorswim. If you're somebody that doesn't really wants to have a big selection of different ideas that you can test against, MetaStock has over 40 built-in systems. If you want to be able to tweak those systems, it's quite a bit easier, in my opinion, in MetaStock. So it kind of depends, but I would say this. I would encourage you to try MetaStock. We have some very low-risk trial offers for you. And I would also say I wouldn't trade without it. And there's a reason it's been rated so long, for so long, number one. So hopefully that does help. Jim says, can I use Schwab? Absolutely, Jim. We're not a broker. What we've specialized in, they say focus on what you're good at. Well, what we've focused on for the last 30 plus years isn't getting you the best trade. It's helping you figure out what the best stock to trade is, when the best time to trade it is, what the best strategy to use is. So the nice thing about us, Jim, is we're fairly broker independent. So there you go. All right. Bhaskar says, thank you, Jeff, for all the sessions until now, informative and simple. Thank you, Bhaskar. I'm glad you came today. I'm glad you enjoy it. And then Pratap asked a really good question. Can MetaStock be installed only on Windows, or is it compatible?
I just hit chat.
Oh, did you answer that question? Well, I can answer it too. So
Well, let me answer, because I'm the marketing guy, and I have a Mac, and you don't.
all right, go ahead and answer it, Mr. Lewis.
You absolutely can run it on a Mac, but you have to have Windows on that Mac, and see what something like, oh crap, I can't think of what it's called.
Boot Camp,
Boot Camp or
Parallels.
yeah, Parallels. See how good I mentioned the question?
Yeah.
But so as a longtime Mac user, I have run it on the Mac forever, and it runs great.
Thank you, Greg. Thank you.
You're welcome.
All right, let's kind of get on with it a little bit. So I'm going to show you a couple of my favorite trading systems, or some of my favorite features in MetaStock. We'll go as long as we have time. I'm looking at the time, and we got a lot of time right now, but that'll go away pretty quickly. So the first thing I'm going to show you is the very first system I started trading real money with. And there's a couple reasons. I'll get into why I like to show this system, but mostly because it's easy. It is a trend following system. I'm sure you've heard, like, the trend is your friend, befriend the trend, a rising tide lifts all boats, etc., etc., etc. This is a trend following system. So it's also the system I'm going to call, hopefully, is called the Rahul Mohindar oscillator. So the RMO, we call it the RMO system in MetaStock. It was developed by a gentleman in India called Rahul Mohindar. That's his name. So that's why they call him that. He's a seasoned trader. He's a panelist for CNBC and CNN India. He's also one of our most successful dealers in the world. We have a lot of dealers that help us resell packages. He happens to be in India. He resells MetaStock in India for us. The genesis of kind of getting RMO and the RMO indicators in MetaStock is actually quite simple. I'm going to say, probably about 15 years ago, Rahul was in our office, and we were meeting with him, and we were like, you've done so well in India, and your sales double year over year over year, and we wanted to know exactly why you're doing so well in India. And he's like, well, I teach people how to trade, and in addition, I've built some specific methodologies for using with MetaStock that I provide to my customers for free. The only thing is I require that they buy a legal copy of MetaStock in order to get these methodologies and the RMO methodology. And we were very, very interested. I was like, okay, well, can you show us these methodologies that you use to train students? And he showed them to us. We liked them. We bought them from him, and we've been including them in every version of MetaStock since like version 10.0 for free. I've also probably done a couple thousand demonstrations on how they work, but they work really, really well. And there are a couple of reasons I like to show the RMO when I'm doing a class. The first, and this is probably a little bit self-serving, but the first is that it's easy to use. Okay, so when you get MetaStock, you're going to have the ability to scan and system test and forecast the market, and you're going to have a lot of tools that are available to you. One of the things that I want to do is obviously we're gonna tell you how to get a trial to MetaStock and see how you like it, but we want you to keep it. The reason I like to show this to you is this is something that while you're losing all of the things that are in MetaStock that you'll be able to use, and just as long as I do a pretty good job of kind of showing it to you, you'll understand exactly. You'll have a really good trading system that you can use. It's included with MetaStock. Okay. The other thing I like about it is it's 100% objective. Okay. As we're going through this, every time I explain a rule to you, if I do a good job, you'll be able to understand why we're saying this is a bullish stock or a bearish stock, what we should be doing about it. There shouldn't be any guesswork. We're not going to be trying to guess what the next tweet is going to be, or what the next QE5 or QE6, or what the overnight lending freeze is going to do. What we're going to be looking at is what the stock market is actually doing and making objective decisions. I also like the fact that it works on a lot of different time frames. And it's going to work on many different instruments. So what I need from you guys, Art, I'm not going to read your question out loud, but almost. Can you guys hear me okay? I do have somebody complaining about the volume. Is everything looking good over there in the control room, Greg?
Yeah, everything looks good over here.
Okay. And then it works on a lot of different instruments. What I need from you, give me some instruments. See, I think it'd be easy for me to come in and pick out like 5 or 6 stocks that look really, really good, and then just show you idealized examples. We're not going to do it that way. What I want you to do is give me 5 or 6 stocks that you want to look at. We'll pick them out of the list here and see what you guys like. So start typing in those stocks right now. The other reason I like it is it's fairly simple. It's a simple 3-step process. So you just follow the rules, basically. So Chris says Tesla. Okay, let's go ahead and look at some stocks. And we'll start with Tesla and Apple. And Chris, you might be the one that picks out all the stocks because you're the only one that's typing them in. But we do have RUT. Rahul is asking for RUT in here. And I will specify that we're not talking about Rahul Mohinder, just for what it's worth. Okay, let's go ahead. I'm just going to basically, I've opened up a lot of charts throughout the day. I'm just going to kind of close everything down. We'll open up some charts. Wow, we're getting a lot of a lot of stocks. Okay, we're not going to be able to look at all these stocks, but we'll look at a bunch of them, and I appreciate the participation here. So let me go ahead. I'm going to open up our Power Console here. Here we've got charting. This is a bit of a quote list. This is where you go to do scanning. This is where you go to test trading ideas. Here's where you go to look at our patented forecaster. And you'll notice I'm going a little bit quick. This is the option scope. So we want to look at some charts. I'm going to go ahead and click on chart here. You'll notice, because I'm going to point it out, well, actually, I only have the North American list loaded into this, but we cover just about any market you're interested in, including India, London, Australia. There's about 200 different exchanges that we cover through our Refinitiv data link services. That includes futures, it includes Forex, it includes ETFs, just about anything that you want. Okay. In fact, normally I show that list off, but I was doing a training class in here last week where I showed how to limit the list a little bit. So right now we just have the North American, particularly the U.S. markets, on our list, and that's okay. let's go ahead and look at some of the stocks that you're looking for here. And we won't have time to do all of them, but let's just do the ones that we have. I'm going to type some instruments up here. So let me go ahead and, what am I doing wrong here? Okay, let's just go ahead and add a few of them. Okay, just so I can make sure I've got like all the RICs right, I'm just going through the instrument search. That's not necessarily usually required, but it does help if you're not sure about kind of the Reuters instruments codes. And they do have, usually like with US stuff, you'll add a .o at the end, just to signify that you want the US one, as opposed to like maybe the one that trades in Belgium or whatever. So I'm gonna go ahead and add DIA here as well, and FB. And I believe FB is a .o as well. And I honestly think that's all we're gonna have time to look at today. So if we have a little bit more time, I'm happy to look at charts. The one thing I will also say is if you want to see how this looks on any particular chart that you're interested in, if you just get in touch with one of the sales guys that we have here, they'd be happy to pull charts for you if we don't look at the ones you're interested in. We have a ton of people here. So what I'm going to do, so this is Tesla, Apple, Dow, Industrials, Facebook, and then I'm also going to do .rut because I think I promised that earlier. And what I'm going to do right here where it says attachment, this is a list of different templates. The template I want to apply, and a template is just a collection of indicators and what we call an expert advisor, but the one that I want to apply is called the RMO trade model. So it's right here. Okay, and I'm going to open this up on a daily basis. I'm typically very comfortable working on a daily chart, and we'll probably mostly look at daily charts today. So I'm going to go ahead and open these up. Okay, and we'll go ahead and let some data come in. For now, I'm going to go ahead and close this commentary window, and I'm going to wonder why they didn't open up with the RMO trade model. I think I did something a little bit awkward. I'm not sure. Oh, instead of RMO, I did rainbow chart. All right. So now I'm just wondering if it would be easier for me to just open these charts again with the chart or just apply them. I'm going to just open them up again real quick. So let's go ahead and I'm going to hit close all. Okay. We're going to do .rut. We're going to do tsla.o. We're going to do fb.o. We're going to do dia. And we are, I think I forgot one. Greg, do you remember what I'm missing here?
Our KBH.
Which one?
KBH.
KBH?
Yeah, that's what Scott Gow has asked to see. Kilo Bravo Hotel.
Oh, okay. Yeah, we can add that one up in there for Scott. KBH. Okay. I was like, I didn't have KBH in there before. I know I missed one of them. I'm sorry, but, let's go ahead and open these charts with the RMO trade model. And then Apple. I'm getting some help. Apple was the one I forgot about earlier. So let me go ahead and open those up. Chris says you picked the wrong template. I did. Jim says, as a retired orthodontist, Align Tech or clear aligners is the future of braces. So
That's a hidden gem.
there you go. There's a tip. Okay, let's go ahead and look at these. This is more along the lines of what I was expecting here. I'm just going to tile these charts out, kind of take a look at them, and we'll start with, I guess, Tesla, because that was one of them that was asked for. And we'll go ahead and move this to a full screen, and we'll talk a little bit about the rules here. We had a bit of a crazy day on Tesla, too, but this will be a pretty good way to kind of look at the way trends work in any case. Let's go ahead and talk a little bit about the rules. Chris, I appreciate your helpfulness there. I did realize I spelled Apple wrong too. Let's go ahead and talk a little bit about how this works. So it's a trend following system. It's designed to help you identify the trend. And obviously, since it's objective, we want to be able to identify the trend using this. So Rahul has a couple of different ways that he talks about the trend. When I say primary, I mean long term. When I say short term, I mean short term. So the first thing that we're going to look at is what Rahul calls the primary trend or the long-term trend. And I'm going to show you how you determine whether that's bullish or bearish. Okay, so let's take a look at this this top indicator. It's called the Rahul Mohindar oscillator. And I'm just going to go ahead and make it full screen right here. And I'm going to draw a little bit of a line around 0. And the way I do that in MetaStock, in case you're not familiar, here's a horizontal line. I just grab it. I put it right around 0. Okay, and there we go. We have a 0 line. Okay, it's not exactly at 0. If I cared, I could double click on this. I could say I want exactly 0. And there you go. You've got a 0 line. Okay. Now, the way that this works is it's going to be objective. It's also going to be fairly simple. Okay. What we want to be able to do as step 1 with Rahul's methodology is we want to be able to identify the trend. Okay. And the first thing that we're going to do is the primary trend or the long-term trend, like I was saying earlier. And the way that we read this particular indicator, this Rahul Mohindar oscillator, is if it's up above 0, then it's bullish. Okay. If it's down below 0, then it's bearish. Okay. Now I want to be really, really specific here because this is simple, but it's important that you don't overthink it. If it's bullish, there's a couple things. This isn't a signal to go long. Okay. So just because it went from -0, minus something to positive something right here, just because it crossed above 0, you're not going to buy it right there. Okay. The other thing that Rahul is very, very specific about is that size and shape don't matter. So in other words, if it's way up here, doesn't matter. If it's just a little bit up here, size and shape do not matter. It's either bullish or bearish. If it's above 0, it's going to be bullish. If it's below 0, it's going to be bearish. Is that completely clear? Okay. Chris asks, can you use a smaller time frame rather than daily? We can. I'll make a point to actually look at a smaller time frame other than daily. Okay. In a minute. Let me get through this part of it first. Okay. One of the things that, so if this is bullish, that means a couple things. We're going to trade in the direction of the trend. So it means we're allowed to go long. Okay. And it means that we're not allowed to go short. Those are the two things that means. Okay. The other thing that we do, and I just drew a horizontal line right here. The other thing that we do is to kind of keep things easier. If we're up above this 0 line, we're going to say that the RMO is in a bullish zone. We're not allowed to go short. And you'll notice that we also have a ribbon on the bottom of the chart that says this RMO is in a bullish zone. Okay. So that should be really, really clear. I hope it is. And step 1. That's identify the primary, the prevailing, the long-term trend. Okay, and then just to reiterate that, if the RMO is in a bullish zone, you're allowed to buy. You're not allowed to short, and it's not a trigger to get into the market. Okay, it's step 1 basically on a 3-step process. Okay, the next thing that Rahul wants to do is he wants to identify the short-term trend. Okay, so we're going to show you how to do that. To do that, what I'm going to do is I'm going to go into this second set of 2 indicators. There's 2 indicators on this chart. I'm going to change the view of this a little bit. And anytime you want to change something in MetaStock, all you have to do is double click on it. So if I double click on here, I just prefer that this blue indicator is a line and not a histogram. It makes it easier for me to visually see it. So I'm going to go ahead and click on OK like that. And now we've got a blue line, okay, instead of a histogram. Okay. The indicator, though, that we're actually going to pay attention to right now is this pink purple-ish indicator. Greg, what color would you call that, marketing guy?
Mauve?
This mauve? This mauve indicator. Okay. Yeah, I've always struggled to figure out exactly what the right technical name is. If you have a technical name for this color, email me at Jeffrey.
Magenta, actually, is what I was trying to think. Not
Magenta?
mauve.
Okay.
Magenta.
All right.
Magenta.
I'm going to refer to it by its technical name of the pinkish purplish indicator, if that's okay.
Yes.
Okay. All right. So this one, you'll notice it's a lot more I was going to say neurotic, but erratic is actually the word I was looking for. In other words, it jumps up and down quite a bit faster. It's because what we're doing is we're measuring a shorter term. So a short-term trend is going to be a lot more reactive to market conditions than a longer-term trend. Just like a moving average would be, a shorter one is going to stay with price a lot more. We read this, although the exact same way. So if I come down here, and and if I was looking at the current bar, which we had to trade on the current bar, but if I was looking at this, I'd say right now, short-term, we're bullish as well. Okay, because this pink, purple technical name of the indicator is above zero. That means that we're above zero. That means that we're bullish because it's above zero. If it's down below zero, then we're bearish. Okay, short term. Okay, so the important part about this is if we're looking to go long, we want our primary trend to be bullish, and we want our short-term trend to be bullish. Okay, and the way that we kind of make this visible on a chart for you as well is if you're in a short-term trend that's going up, you'll have blue bars. If you're in a short-term trend that's going down, or a bearish short-term trend, you'll have red bars. So you'll notice that these will match up. So I can look at the indicators. If I'm trying to make an assessment of what I'm doing today, I can say, okay, well, Tesla's bullish long-term by looking at the green indicator, or by looking at the trend ribbon. And then I could say it's also short-term, it's bullish as well. Okay. The important thing, I want these to match up. And again, I haven't talked about how we get into the market yet. Okay. So right now we're just kind of looking at what the weather patterns are telling us to try and put the odds in our favor as much as possible. Jim, don't worry about, Art says it's a violet or magenta. Okay. All right. I appreciate that. Thank you. Jim says, what is the blue line? We haven't talked about that yet, so don't worry. We're going to talk about the blue line in just a second. So far, we've just talked about the green line and the purple line. Okay? Just looking at YouTube over here to see if I have any questions. Let me go back in here. Okay? And then I just want to reiterate this. If the primary trend's bullish and the short-term trend is bullish, we're allowed to buy. We're not allowed to short. It's not a trigger to enter. Okay? Let's talk if they don't match, we don't do anything. We want to trade while there's decision in the market. It's one of the most important things I learned from Steve. We don't trade the indecisiveness, we trade the decisions. And so if they don't match, we want to wait until there's a consensus. We want to put the odds in our favor. Okay. What's the blue line? I'm going to get to you right now, Jim. That's the trigger. So let's go back to the blue line. Okay. So we've got we had our long term, we had our short term. We have a blue line that generally seems like it's right in the middle, because it is. It's the medium term trend. Okay. With this one, though, it's a little bit different, because we don't really necessarily care if it's above the zero line or below the zero line. What we're looking for is the relationship between this blue line, or the medium term trend, and the short term trend. So, and what I mean by that, for example, is if I was to look at the chart here, and if I was to compare the price activity that was happening right here in this area right here, what we had was we had a bit of a bearishness. We had a change of direction, or a change of force, and this short-term trend went up above this long-term trend. And the moment that that happens is right here. The moment that cross happens is right here on the chart. Rahul calls that a change of direction, or a change of momentum, or a change of force. And that's actually what's going to plot buy and sell signals on the chart. So if that change of momentum happens towards the short term getting more bullish than the medium term trend, you'll get a buy signal on the chart. Okay? If it happens where it's crossing down below, where the momentum shifting to the downside, you're going to get a sell arrow on the chart. Okay? And that's exactly how you actually get an entry signal. So, for example, if we're looking at, and again, we have to look at Tesla right now, right? Because that's when we're trading it, is right now. If we're looking at it, though, like just a few days ago, February 10th, right here, we would have had that shift of momentum, or that shift of direction to the downside, which would have given us a sell signal on the chart. But if we're following the rules, we're bullish long term. See the RMO bullish right here? We're bullish short term. We're not going to take this trade, because it's a trade in the direction the opposite direction. If Tesla starts to get weak from here and it gets bearish short term and bearish long term, bearish long term and bearish short term, we might consider going short. But we have no business taking a short position on this stock because it's going straight up right now. We don't want to trade against the trend. Some people might like that. Not me. I generally like to kind of be in a position that has a stop loss. So, and generally, just to kind of give you an idea of my trading style, I have what feels like between 4 and 100 kids at my house at any given time. And I work at least 40 hours a week and sometimes a lot more than that. So I generally like methodologies that are fairly straightforward, fairly simple, and don't require a lot of like guesswork. So let me go ahead and go back here a little bit in time and just kind of show you how this would work. And what I'm going to wait is I'm going to wait till after this pullback, and I'm going to pretend that like September 3rd of 2019, so that just maybe 4 or 5 months ago, we started to look at Tesla for the very first time. Okay, and if I was looking at it on the day before, right here, I'd have a bit of a different assessment. We would have said, okay, long term we're bearish, and short term we're bearish. Okay, but if I started looking on a September 3rd, everything lined up for Tesla to give us a long term buy signal. Okay, or I should say a buy signal. So in other words, long term we became bullish, short term we became bullish, and we had that shift of momentum or that shift of force that happened all at the same day. So this all lines up. Okay, I will be specific. They don't all have to line up on the same day, and they normally don't. But everything started to get bullish on Tesla right here. Okay, so this is actually a trigger. We have the trigger to go long. We have the bullish long term. We have the bullish short term. We're ready to place this trade. Rahul has some very, very specific rules that he uses for this trade. And I'm going to try and be specific as possible here. First thing that he wants to do, I'm going to zoom into this chart a little bit, like so. Okay. And the first thing that he's going to do is he's going to identify an entry point. Okay. So just because everything kind of lined up today, he wants to kind of see it go through kind of the high of this bar or the high of the previous bar in order to take that trade. So generally what y'all do here to kind of identify that is on the day everything lines up, I'll look at the high, I'll look at the high for the day before, and I'll say to myself, this high is higher than this high, so this is the high I'm going to use. And I'll put a horizontal line right above that high, okay? And that's my entry price. So as long as Tesla doesn't go above 232.95, I'm not a trader, okay? 232.95 is my entry point. What I want it to do is show a bit more strength before I buy into it, and so that's why I'm going to buy above the high of these two bars, okay? The other thing that I want to do, again, so that I have a good way of getting out of the stock, is I want to figure out where my stop loss is going to be. So if I look at this chart, there's a couple of ways that Rahul talks about doing stop losses. I'm going to tell you both of them, and I'm going to tell you the one I prefer. I'm going to do them in that order. So the first way that Rahul kind of talks about stop losses is you can look at the low, and you can look at the low just like we did for the high. So you could say this is lower, and you could put that entry position or that stop loss right there. It's a bit of a more conservative stop, and it's not the one that I like to use. The other way that you can look to place a stop loss, and this is my preferred method that Rahul teaches, is I'm going to look for a recent pivot low. Okay, and just in case you're not familiar with what a pivot low is very, very simple terminology. Okay, I'm going to look for a low that has two higher lows surrounding it. So right here, if we looked at this one, there's a higher low here, but this one's lower, right? The first pivot low I see is right here. Okay, I'm going to put my stop loss right below that pivot low. Okay, which is going to be right here on the chart at $210.60. So I'm going to go ahead and type that up so I don't have to remember it later, but $210.60 is exactly where my stop loss is. Now there's a couple things here that I would say are important. Number one, okay, I know where I'm going to get in. I'm going to get in as close to 232 as I can. Okay, I know where I'm going to get out, 210. Okay. That means effectively I'm risking about 20 points, right? I know what my risk reward is. Okay. 20 points on a $200 stock is maybe 10%, if my math is correct, right? That's not too bad. The other thing I think is important here, because trading is mostly about discipline, is I'm not trying to determine where that stop loss goes after the stock is moving down against me. Have you ever been in a trade where you didn't decide where your stop loss was going to be, and then you just like, well, okay, it's going to go up tomorrow, it's going to go up for tomorrow, it's going to go up for tomorrow, and it doesn't? I believe that good trading requires discipline. And I also believe that good discipline requires that we have a stop loss that we use, and that we're not making decisions while we're in the heat of battle, if you would. So right now, I know what my risk-reward ratio, or I know what my risk ratio is going to be, and I know when I'm going to get in, and I'm making those decisions when I'm not in the middle of a trade. Okay, so here we go. We wait about 4 or 5 days, 1, 2, 3, 4, and we finally get into that trade. Okay, it takes us 4 days to actually get to that price. We go ahead and buy in, and immediately we put in our stop loss. Okay, all right, and then we just follow along. Okay, it goes up a little bit, and as it will always do, it comes back down a little bit, right? So here we kind of get to a scenario, and just so we can follow along, here we get that change of direction to the downside, which points us this arrow. Okay, long term we're still bullish, short term we're still bullish, so we're going to hold on to this thing. Okay, if everything goes bearish on us and we get this change of momentum, we're out. Okay, we want to start looking at reversing our trade, but that's not what happened. We do go short term bullish, bearish right here. It crosses down below 0 for just 1 day. Still long term we're bullish, so we're going to hold on to this trade. Okay. And it's a good thing that we do, because it starts to go up a little bit. We don't hit our stop loss. Tesla starts to go up a little bit. And here we have this change of momentum, change of force to the positive side. Okay. Now, when this happens and you're in a long trade, there's a couple things that you can do. One of them's optional, one of them's not optional. Rahul says you can buy more stock if you want when you get this additional confirmation. I typically don't do that. I buy all of my stock back here. Okay. The other thing that's not optional is obviously we want to move up our stop. Okay. And let me just kind of talk a little bit about the psychology of that for a minute. I find I'm a little bit wordier than usual today, but maybe that's helpful. I don't know. We've had a bit of an upward thrust in the marketplace. Market's come back down a little bit, and now it's on its way back up. What's happened? Okay. Usually the market goes up in steps, right? Well, what's happened is we've actually gone in and we've set up a new area of resistance. Okay. When we have that move up, a pullback, and then a resumption of the trend, what we want to be able to do is move up our stop to that new resistance area. So at this particular point, what I'm going to do is I'm going to look for the first pivot low after this buy arrow, which is going to be right here, this low surrounded by 2 higher lows. That's where I'm going to put my stop. Boom. Okay. It's still a stop loss. In other words, we got in at 232, and right now we're at 220, but we're locked 217 for our stop. We're locking in this resistance level, or I'm sorry, this support level instead. Okay. So let's kind of follow this along a little bit more. Here we have that change of momentum again. It comes right back down. Tesla's does this. Okay. And a resumption of trend. Here is where you get a new buy signal. Okay. Here is where that pivot low we're going to set our stop under. Okay. And you can see we're almost getting to the point where we might make a profit from this trade. So I'm going to keep going forward. Okay. And now we start to have this huge movement up, the move up that you love when you're in a position, right? And in this particular case, as long as it keeps going up, we can be kind of comfortable. Okay. Here back in, what day is this? 11/21, had a bit of a gap down. We had a change of momentum. We're still bullish long term, and we're still bullish short term. So we're going to go ahead and hold it. Okay. Here we have the resumption of trend. So what we're going to do is we're going to move up that stop. We're going to look for the pivot low. This is kind of boring, right? But it's good trading isn't about being excited. Is this pivot low? Okay, it's going to be this one. This was our closest pivot low. Okay. Now we're locking in profit. We've got $327 on the table. Okay. It's still going up. We're still in that. We're still very, very, very profitable. Right now it's sitting at about $800. Okay. We just had this shift of momentum to the downside. I'd be looking for a shift back up to move a stop. Okay. Now, there's a couple things you might say. You might be like, hey, Jeff, this stock is trading right now at $800 and your stop is down at 327. That will happen with RMO. And Rahul did build a tool into RMO that would allow you to kind of get more aggressive about moving your stops. And it's called this exit swing signal right here. Okay. And the way that that works is if we look at this, I'm going to just make this full screen for a second. Okay. Is if we're in a long position and this thing comes in, dips down below zero, or the blue line, I'm sorry, this indicator comes and dips down below the blue line and goes back above it, we can put in a trailing stop. Okay. So you see that happened. I'm going to just draw a couple lines on the chart for when that happened. So it happened here. It happened here. Okay. It happened here. Okay. And he's very specific. It hasn't happened since then. Okay. But is very specific. You want to put in a trailing stop. You don't necessarily want to get out of the trade. So in the case of like a Tesla where it's just kind of going off the rails right here, the way that I would use this exit signal is another way to move up my stop. So right here when we had it cross down below zero and come up above it, I'd put in a stop loss right here above that pivot low. Okay. I don't use this often. It's just in a scenario like this where the stock is moving out of control and I want to be able to retain some more profits. But again, here you could move a stop, and every time that crosses down, here it almost crossed down below zero. It's going to cross down below zero, and you could put in another stop. The idea, though, is we want to give it room to go. We don't necessarily, this thing could keep going forever. We don't necessarily want to get out of it, but when it goes parabolic, like Tesla has been lately, it does allow us to get really, really specific about getting out. Okay. Brianna, and I've ignored questions because I got into a big diatribe. This is being recorded, Ghana, and we will send you the recording within about an hour afterwards. Art, I think I just answered your questions. When have you moved your stop loss up? Yep. I had read your question without even reading your question. 10% is a lot for a stop loss. Well, that might be the case. One of the things I like about this, and you can go with the tighter stop, but the thing that I like about the way Rahul puts his stop is you notice that I'm not saying, hey, 10% is more than I can afford to lose. Or, hey, 10% because it's just an arbitrary number. You'll notice that with the way that we're putting this stop loss in, the market doesn't care about how much we can afford to lose. What we want to do is we want to look at putting these stop losses in where the market will support us. In other words, where the support zones exist in the marketplace. And so I'm not saying, okay, well, 10% is too much. If it's too much, that's a valid argument, right? But then don't take the trade because the risk reward isn't there. And that's the choice that you have. I'm not going to take an arbitrary 1% stop because I'm just going to stop out because Tesla's crazy anyway, right? If the risk is not where we want it to be, we always have the decision of stepping back. There's always an opportunity that exists in the marketplace, okay? If Steve Eisman used MetaStock RMO, he wouldn't have been short Tesla. I'm not sure who that is, but I suppose you're right. Chris says, aren't you supposed to wait for the candlestick to close higher? No, not with this particular rule. Some people do like the candlestick to close higher. With the way Rahul teaches this, you're looking for just a penetration. I think, to be specific, Chris, and answer your question correctly, when you enter, you're not looking for a close above. You're looking for just the high to be penetrated. Okay, you're not looking for that close to be above. And Rahul is pretty specific about it. He's just looking for that one last signal that market is still going to go up. Okay. Somebody asked, and I am looking at the time, and it's almost time for Todd to come on, so I'm going to go a little bit quicker here. But somebody asked to look at this on a 30-minute basis. Okay. And we'll just sum up right now. So we would have gotten into this at 232. 800 is about what we're holding. That's a pretty idealized trade, but Tesla's been going crazy. Let's look at this on a little bit of maybe like an hourly chart. I did promise to do that, and we'll look at a little bit more of a broader brush. Okay, even on the hourly chart, okay, you notice we had a little bit of a bearishness here. Okay, I don't think that would have trailed us into a thing. We would have had a pretty good setup right here that would have triggered in, would have put a stop loss in. We would have been trading this. So this does work pretty well on an intraday basis as well. I don't look at a lot of intraday. I just don't have the time for it. I would make an argument here that I think is easily supportable. For the most part, with the exception of a day or two, we've been bullish on an hourly basis from the very first time this chart recorded something, 12:04 at 4 p.m. It's been bullish. During that time frame, it's moved from 334 to 800, and we were only looking to take long positions that whole way up. On a daily, it's even better than that. Okay, on a daily, we've been bullish since 332. It's gone up to 800. We've only been looking to maintain a long position and move up our stops. On the downward basis, you can see right here, it was bearish from 327 to around 234. I'd say that's going to be putting odds in your favor as well. Look at a couple of other examples real quickly, just because, well, we're running out of time. Let's take a look at KB for Scott. Okay, looking just kind of again, I'm not going to go trade by trade through here. We've been bullish. RMO has been bullish since January 30th on KB. During that, on January 30th, it was at $20. It's doubled in price almost to $39.70. You're only looking at long positions all the way up. Okay. During that downward, it's been a little bit more choppy during the downtrend, but you can see during this downtrend we were bearish. There was a bit of chop in this, and it's not perfect. There are stocks that this doesn't work well on. You kind of want to play with them. It generally works really well on Apple, on stocks that generally have massive trends like Tesla. This does work pretty well with. I'd say that this has been looking pretty good in the recent past. A little choppy back here, but that's why you want to kind of look at these things. Let's take a look at, I don't know, the Dow. We'll look at the Dow to finish up. Here we go. Okay. Dow has been in a tremendous bullish market. Okay. We've been, if you've just been taking the long trades, we've been bullish on Dow since it is at 269. It's right now 294. Okay. And again, during that upward move, you're looking to take advantage of those long trades and keep the odds in your favor. So it works really, really well on a broad array of instruments. Does a really good job of kind of picking off those plays and trading them. Okay. That's kind of what I wanted to show you. Okay. Are those buy signals when the exit signal is low? Okay, let me talk a little bit about this again and how the exit swing signal works. Okay, again, I only use it when we're moving in a market that's kind of going nuts, like Tesla. But if we're in a long position, let's say we bought this somewhere back here, and right now we're looking to kind of get more aggressive about getting out. When this comes down below the blue line and up above it, we can look to put in a stop. So if we wanted to move our stop, we could move our stop to right here based on this going up above the blue line. Okay, does that make sense? Art says, now you guys had to get fire working again. ERSA plus RMO plus a filter list like IBD50 or value line. Art, we're working on getting fire working again, but we're not ready to show that, but you'll be happy to know. Fire is a product that we put together a while ago. It's a very popular one, and we're bringing it back out for you, Art. So maybe a little bit later this year. I'm not even going to give a time frame because I'm not. I hear they're pretty close, but they are working on it. Which video is his video for training on this? You'll get one as part of the Unleash the Power of MetaStock when you sign up for MetaStock. And Chris, if you already have MetaStock and you just want me to send you some training videos, you can go to youtube.com/MetaStock. You can do a search for the RMO videos up there and it'll pull up a bunch of them. I've done hundreds of them. And while you're up on our channel, make sure to like and subscribe. It does help quite a bit. Right, Greg?
Yes.
All right, there we go.
Absolutely. Hey, another thing, when they purchase MetaStock, you can get Unleash the Power of MetaStock for free, which includes a really good tutorial of art. Did you just say that?
I did say that, but apparently I thought I said
I'm sorry,
that.
I'm listening to multiple channels, but I didn't hear you say that. I apologize.
Well, I might not have been clear. I was listening to you say that, going, was I not clear?
I'm sure you were clear.
All right, there we go. So, and again, the software, we're just showing you a small part of it. It's fun to show you. I like this because we can go in and talk about trades and moving stops and stuff like that. We did show you just a small part. We had to get kind of myopic a little bit when we talk about what's in MetaStock, but I think it's something that's helpful for you. So MetaStock, we have two versions. We have a real-time version. We have a DC version. Real-time with MetaStock with that $1 billion newsfeed. Excuse me, woo! It's going to be $250 per month, which is a fraction. Like the data service that we power this thing with is the same data service that like hedge funds subscribe to and banks subscribe to so that they can manage their trades. It's an institutional quality feed. The MetaStock program's been rated #1 for 26 years in a row now as #1. So $250 a month for that. You can get an end-of-day version, which includes everything but the really high-end data feed. That's $69 per month. What we're going to do for the summit offer today is we're going to let you purchase. I'm just looking at the time. We're going to let you purchase 1 month and get 2 additional months. So it's what we call our buy 1, get 2 free. You get a total of 3 months for that. And basically it's about, 70 divided by 3. Very, very inexpensive to try a product that's been rated #1 for 26 years in a row. So that'll include MetaStock. That includes data for whatever region you're interested in, whether it's London or Europe or Middle East or Africa or North America, whatever region you're interested in will include. We're going to have somebody give you a white glove installation support where they'll sit down with you and make sure everything's installed, answer questions that you've got. That's a one-on-one session that we schedule to last 2 hours. So they don't always last 2 hours, but it lasts 2 hours. We're going to include that Unleash the Power of MetaStock that Greg was talking about as part of it. And we're going to, so that's buy 1, get 2 free. Okay. There's also a recorded boot camp session that'll kind of help you get started with it as well. Okay. So it's also that's all part of our summit action pack today, where we're going to include MetaStock real time. You can get the 3 months of data. You can also get, all of our most popular add-ons, Steve Bigelow's Candle Profit System, the training that he did, which was incredible. The value charts, the trade trend, the Chuck Hughes Prime Trade Select, the 2 years of stocks and commodities, all that's available for a discount of more than half off, $19.45 today. So do one or the other. If you're just interested in seeing what MetaStock is all about, I'll tell you this. There's a reason that it's been rated #1 in its price category for 26 years in a row, and it's not because Greg Lewis is voting for it. Greg Lewis is our sound guy, just for context there.
I'm voting for it.
Yeah. It's because it helps people make better trades. This is a collection of MetaStock, the award-winning software, plus all of our most popular add-ons. You should try it out. 800-882-3040. You can chat online with us at metastock.com/saleschat. I know a lot of you are asking questions. Jim says, is the 1945 for 3 months? Okay, let's go into that because that's a really good question, Jim, and I'm glad you asked it. You do get MetaStock Real Time and Zenith for 3 months. You also get Trade Trend for 3 months. Everything else is a one-time purchase. So you pay the $19.45 one time, then you can kind of keep on a subscription after 3 months. So hopefully that's clear. If it's not, just chat online with us. It's metastock.com/saleschat, 800-882-3040. I know I'm missing a lot of questions. I'm going to answer those. I'll go back and through and answer all of these. We're just out of time, which happens every time. So if I didn't get your question, I will get it. If you have questions and you want to talk to one of our guys, metastock.com/saleschat. Okay? All right. Okay. I do want to, wow. I had to catch my breath a little bit after doing that. So, in any case, I do want to say thank you to Stocks and Commodities magazine for sponsoring the event today. It's a great magazine. You came to an 8-hour class today. Most of you have been here for 5 hours, according to the question I asked at the front of this. So you know how important it is to continue your education. Stocks and Commodities does a great job of it. You can get a free issue. I'm going to go ahead and type this in the chat box in a second. But make sure you claimed your free issue if you didn't when you registered. If you already did when you registered for the summit today, don't worry about it. But I do want to thank them for their support for the last 7 years. With these online trader summits, and it's a great way to do continued education. I need to catch my breath, Greg. I get on a tear and I just start talking. All right. The other thing I'd ask from you guys is when you get to the end of today and when you log out, answer my 2-question survey. I want to know how well we did. So today, next we have for the very first time in a MetaStock seminar, we have Todd Horowitz. And normally I'd spend a few minutes looking at somebody's bio so I can kind of do a pretty good introduction of them. But I was in the middle of talking about RMO, so I didn't get a chance to look at it, his bio recently, but we will talk to him. So Todd, how are you doing today?
Hey Jeff, great to be here. Great presentation. I listened to it all.
I saw you log in quite a bit early. I'm glad you were here too. And I'm glad you could make it. I'm going to make some guesses. I did read your bio earlier. I'm going to guess based on your picture, though, that you worked for the floor, or you worked on the floor.
I'm actually still a member. I have my bio in my presentation, but I'm still on the floor now. I'm not still on the floor. I'm still a member today. I started in 1980 trading on the floor at the SIBO, and I'm still a member of the Board of Trade.
Well, I'm excited to have you here for your first presentation. What I typically do is I turn the presentation over to you and I get out of the way as fast as I can. Are you okay with that scenario?
I'm good.
All right.
I'm good.
All right.
So share my screen. Okay. So am I sharing the right one?
Yep.
Yeah, that's the question.
I see managed futures, micros, and minis with Bubba.
Yes, sir. That's the one. That's the one. Okay. So anyways, what's up, everybody? Welcome aboard, and thanks for being here, and thanks to MetaStock and Jeff for having me. It's a pleasure to be a part of it. I've listened to many of these over the years, and love being with them. So I appreciate you having. And today we're going to talk about managed futures, micros, and minis with me, Bubba. And of course, that was my trading name, and it has been my name for over 40 years. So in the meantime, we got a lot of stuff to cover. So we'll get right into it after the disclaimer. Okay. And of course, you guys can read this because I'm not a big fan, but at the end of the day, they do involve risk and so on and so forth. And it's kind of a law. You have to show it. So there it is. There's your disclaimer. And just a quick note, just the other day, last week, somebody had sent me this note and said, "Hey coach, big day for me, hit an intraday triple of my future account in 54 weeks. I'm looking forward to showing you some of these things I've been working on. Best piece of advice I've ever heard, and it's to trade mechanically and remove emotions." So we do talk about a lot of things, but again, in my eyes, and after 40 years of trading, and I am a full-time trader still, there ain't no secrets. Okay, you just got to follow the rules of whatever you're using and whatever you're going to do. Okay, because again, the people that end up in trouble are the ones that lose a fact of the rules that they're following for their own typical system, which means that whatever you do, you have to have a plan. Okay. But we also know one very important thing about being a trader or being involved, there's going to be drawdowns. Okay. Don't expect that you're never going to have a drawdown. It's impossible. B, It happens. It is part of the business. The idea is to continue to grow your account, not to worry about any individual day, as long as you know what your win rate is, things you're doing. That's what becomes important as part of our trading. So we got to make sure we understand all the pitfalls, everything that happens, but it always comes back to a few simple rules. And that is making sure that you follow your plan. Okay. Because there's no magic. The magic is inside you. There ain't no crystal balls. All right. Now, we look at micro and e-mini futures as they take off, as what we call them the next big thing. And what we mean by that is they become, first of all, it was the #1 product ever launched by the CME. Okay. Which means there's one heck of a lot of interest in futures, and especially in the micro minis, because again, it reduces the price of getting in. So you don't have to worry about those times when you get, worried about getting 5,000 bushels of soybeans delivered to your backyard. Those things are no longer in play. And of course, you can trade very small. And what really made these futures work is that they, unlike the SIBO, who came out with mini options years and years ago. Okay. What they forgot to do was take care of the customer, which was lower the commission rate so you could actually trade and make money. Well, the CME and the brokers around it have reduced the commissions on trading minis and micros to 10% of what it is to trade the big ones, and so to speak. And the size of these are 10% of the size of the normal size contracts. So they put the commissions in commensurate with the product, so that you can make money, because part of trading, we know, is liquidity is your commission costs and the cost you pay. What we believe in is everything's probability. Okay. It's important to accept the probabilities that happen. And we'll talk about win rate and things that happen and how you get there. But again, if you play this very much like a game, okay, if any of you are game players, and I'm talking about mathematical games like gin, backgammon, bridge, and poker, okay, the better player will always win. Okay. Now, again, they won't win every game. They won't win every time, but it will grind it out over time. And that's what we do. We're interested in grinding it out over time. We're not interested in any individual day. We want to make sure that we're always moving in a positive direction. So in the meantime, as Jeff introduced me a little bit, but I've been doing this for 40 years. I've been a member for 40 years. I founded Bubba Trading. I've written 2 books on options and one coming out in futures shortly. Okay. I regularly contribute to the major networks on a regular basis. And every trade, I trade for myself. That is my career. And every recommendation that I give, I trade myself. I'm not giving out recommendations that I am not personally trading. So today we're going to talk about trend trading. And of course, I was good friends with Richard Dennis. If you remember the Turtle Traders, him and I traded together back in the 80s. And of course, one thing that we all know or should know is price is everything. Okay. We ignore the news. Okay. Now, again, I don't look at any news at all. I could care less. I've never read in 40 years a copy of the Wall Street Journal. Okay. Because again, the markets will play out the news for you, and typically they'll anticipate it. You buy when they're breaking out, you sell when they're breaking down. You don't get out before the trend changes directions. And the key is you stick to the system. Okay. Because at the end of the day, if you don't, again, once you take that individual emotion into any trade, you have now changed the probabilities and the odds in which you're trading. Yeah. So what we're looking for is long-term profitability. Anything can happen day to day. And we have a huge edge trend following, and that is using our proprietary algorithm. Okay. We've been doing it, and we've got statistics and records backing it up. Okay. And by the end of today, you will see the current portfolios live as they sit today. Okay. Again, everything you see will be current and regular, and you'll see an entire history of what we've done. So what are our objectives? Okay. Manage futures. It's the math, the portfolios, how you can take advantage. And I will answer any of your questions in regards to any type of trading. I saw some great questions in Jeff's presentation, so I might even answer those if I have time. So the components are what markets you're going to trade, okay? What to buy or sell, what's your size, okay? Entry, when to buy, when to sell, stops, when to close, and exits. one reverse. Okay, that's what we care about. Those are the only things we look about, because at the end of the day, I could trade markets without knowing the name of that market. That is a Richard Dennis quote, and of course, that is a fact, because in the big scheme of trading, all markets are the same. All charts are the same. All patterns repeat themselves. And as Jeff said quite a bit during his presentation, they use 2 time frames, where the longest time frame is always determined by the short term, because the shortest term always has to resolve backwards into and forms the longer time trend. So it doesn't matter what market you're trading, what the chart is, as long as you can understand the trend and do the right thing, you know that you are going to be seeing a chart that's going to work for you. Now, why professional traders use rule-based trading systems? Because again, you have to be able to establish rules when you're trading, and they're non-negotiable. Okay. Rules themselves are non-negotiable. They must be followed exactly and explicitly throughout your entire trading, because if you don't, guess what happens? Again, you change the odds. It's like somebody thinks if you flip a coin, what's the true odds? Okay. 50-50. And if you flip a coin 100 times and it comes up 85 heads, what are the odds on the next flip? Okay. If anyone wants to take a shot at that, great, go ahead. But in the meantime, it's still going to be 50-50. Now, we know the law of large numbers will always be 50-50. So it doesn't matter what happens in the short run. We're concerned about the laws of large numbers. Okay. And just one of my people wrote to me from the classes and training to your excellent algorithms, you've given me the tools to be a successful trader. After 40 years of trying and failing, maybe now between your teaching and other technical analysis, I've acquired along the way, it will work and be able to trade for a living in a few years. You have made that possible. The last pieces are falling into place and the veil has lifted. And again, I get these all the time because what we do works, it's good, and it's solid. Okay. So the mini and micro futures, okay, they've got them on just about every product. Okay. The most common people trade are like the Dow, S&P, Russell, NASDAQ, but they do have them for grains. They have mini products for oil and gas and things like that. So we trade them all. And of course, they do have some different values, but the core is based on the tick size of 10% or 1/10 the size of a normal S&P. A normal S&P goes at $50 for every point it moves. A mini goes at $5. And of course, that's what we're looking for. And when I first started, the S&P was a $500 and there was no minis. Okay. So now, again, they brought the things down to the market, which I believe make futures the next big product. I believe that futures will be where it's at a few years from now because of the pure action market that you get, because of the pure price discovery, nothing to worry about but the bid and the offer spread. So that's one of the things that makes futures so dynamic, is that they're straight. Now, I've traded them all, and I still do trade everything. Again, it's not that I don't trade other products, but when I'm building things, I usually trade futures, especially if I'm trading in a short term. Now, this is obviously not a short-term system, but when I do trade short-term, I do use 2 time frames. I use all the same mechanics, but on a much shorter period of time. Okay. Now, what are your objectives? Well, the first objective of everybody I know is to make money. Okay. We want to keep the variance small. And what that means is, again, when we do have drawdowns, we don't want to be crazy. We want to be within reason to keep our equity curve floating in the right direction, which is always lower left to upper right. We want to be balanced. Okay. And then to keep the drawdown small. These are things that are very important in the scheme of trading. Okay. For your emotional stability and for many other reasons. This is what keeps you in the game. If you can get down, again, you'll hear this maybe 100 more times, follow the rules. So manage futures, following the trend, a good trend following system will keep you in the market until there's evidence that the trend has changed. Now, again, there's a lot of times, and I go back to when Amazon reported in October, okay, if you recall, okay, Amazon was under a little bit of pressure in October. I'm just going to pop up a chart here because that's, I like to do that anyways. Amazon was in a little pressure in October. Okay. And of course, all the guys that were involved go, oh, do we have to sell the Nasdaq? Is it time to sell? Is it time to sell? I said, the signal has not changed yet. We will change it when it's time. And of course, here is the Nasdaq at that point in time. And here it is. And this is where Amazon's earnings came out. And of course, if the people that decided that they wanted to get out now missed, and the big portfolios, a $32,000 move, okay, because they decided to bring emotion, okay. We like to, somebody just asked, what does balance mean? We like to keep our portfolios balanced versus capital, also versus products that we put in to try to have a measured balance so that they're all trending at the same time. We can really kill it. And if you are trending, we're making up for the ones that aren't. That's what we're trying to do, because we're trying to balance out, different products, okay, interest rates, equities, currencies, softs, to make sure that the markets, that we're in the markets. Again, there are times when they'll all trend together, okay, and there's times when they won't. So it's nice to see it. But another great quote from Richard Dennis is, using a mechanical system is the best way to consistently make money. If you know that your system makes money over the long run, it is easier to take the signals and follow the system during periods of losses. If you rely on your own judgment during trading, you may find that you're fearful just when you should be courageous, or courageous just when you should be fearful. And of course, that is the absolute facts of life, because if you were in a market that was starting to sell off, okay, and you had a portfolio of stocks, let's say, okay, which ones would you sell first? Okay, you'd sell the good ones and forget to keep the ones and keep the dogs, which it should be, in theory, the opposite. Okay, you want to get rid of the dogs and keep the good ones, and that's what a mechanical system does, because it makes all of the decisions for you. You have no reason to make any decision other than to enter a new trade or reverse out of one. That's it. There is no other decision to be made. Okay, that's what we call this the next big thing, or if you watch Seinfeld, that's gold, Jerry. The whole model is built on probabilities. Okay, it's taken my 40 years and Dr. Fang's 40 years and put together into an algorithm that has built a model of reading charts and doing things over years, calculating out the math and using it over and over again. And here we got to a base model, and we are always long or short a product. We are never out. Whichever portfolio you decide to choose, okay. I'm a nuts and bolts guy, and I need something to take emotion out of trading. That's what I offer. This is exactly what I offer. Okay, there is no emotion here. Okay, that's exactly what this model is about. Is about being unemotional about the market. Because again, as a floor trader, and as a floor trader at one time in the biggest pit in the world, as a floor trader that traded through the 1987 crash on the floor, okay, the one thing you can never have in this business is emotions, because you will invariably make the wrong decision. And I'll just put this example forward, which I use about almost every webinar I've ever done with emotions. And it's, have you ever said something to somebody that the minute you said it, you wish you could put the words back in your mouth? You wish you were one of those cartoon characters, you could erase them. Well, unfortunately, and of course, you make emotions, and one bad emotion leads to another bad trade. Okay. So not only does it lead to missed profits and missed opportunity, it leads to more bad trades, because you changed your going from making profits to becoming a profit. And of course, then it prevents you. And the worst is, if you make the right choice the first time ever, then you can think you do it every time. Now, I can tell you from experience, okay, and the number of shots I've taken over the years, okay, that overall, the good and the bad don't equal out. And I've made more mistakes trying to pick tops and bottoms than by just minding my own business and doing my job. Okay. Now, win rate. Again, we always know what our win rate is. Our win rate is 66%. Okay. We are profiting 66% of the time. Okay. Why is it important? Because everything you do is based on your win rate, or everything you should learn to do, whether you come with me or you trade by yourself. You need to know what your win rate is. Why? Because it will help you determine how to size yourself, how to trade yourself, how to understand the drawdown, and how to actually take advantage of a drawdown when they happen, because believe it or not, drawdowns are good at times because they show you that they settle the markets on, number one. Number two, if you know what you're doing, they allow you to make more money on the next move up. Okay. But again, that's why this is so important. That's why mathematics, becomes important here. And again, it's not hard math. It's, what you made 60, you made 100 trades, you won 66. That's what we're trying to do so that we know exactly and specifically so that we can follow to the letter of the law of what we're trying to do. Amateur traders want to be right. Pro traders want to make money. I can vouch for that. Okay. I want to make money. I don't care what market it is. I don't care which way it's going. I mean, again, they think I'm a bear all the time, but my words out of to everybody when I'm on TV is, look, right now I might want to be short, but I'm not selling my IRA or my SEP. I'm keeping all my retirement money long the market. Okay. Because again, history of the markets say what? The markets go up 8.5% year over year for 170 years. So why would I think it would be different today? All right. There's going to be a market meltdown at some point. When? Only the shadow knows. I don't. But it'll happen, and there'll be a reason for it. But whatever it is, that's what it'll be. Okay. Trading is a game of probabilities. You don't have to be right every time. You just have to follow the rules. Okay. Richard Dennis again. I always say you could publish the rules in a newspaper and no one would follow them. The key is consistency and discipline. And is that not true? Okay. Do any of you violate rules when you're trading? Okay. I'm not, I just saw something. What did I miss? All right, what doesn't matter. I'll find it later. Okay. You can lose 70% of the time and still be profitable if you know what you're doing and know how to size yourself properly. I mean, obviously, you should probably look for a better system that you're using, but you can win. You can win it if you know your specific win rate. You can win at any price. Okay. I completely comprehend so far. My question is simple. Do you stay outside probability 84% of the for not, or do you go further out such? And I assume these are naked short options. These are not options. These are futures. These are mini futures is all I trade in this model. Okay. And I don't sell, and just FYI, the question, I don't sell naked options. It never pays to sell option naked. I don't care what anybody says. Okay. I've seen too many guys get carried out. And of course, I knew I could not predict anything. That is why we decided to follow trends. That is why we've been so successful. We simply follow trends, no matter how ridiculous those trends appear at the beginning, and no matter how extended or irrational they seem at the end, we follow trends. I don't believe that I am the only person who cannot predict future prices. No one can consistently predict anything, especially investors. Prices, not investors, predict future. Again, let me say that again. Price determines everything. Okay. Despite this, investors hope to or believe they can predict the future, or someone else can. A lot of them look to predict what the next macroeconomic cycle will be. The genius economists can't predict what's going to happen in the next economic cycle. How is anybody else going to do it? We rely on the fact that other investors are convinced they can predict the future, and I believe that's where our profits come from. Me, I believe it's that simple, as we do. Okay, we believe it's that simple. Okay, I don't have any doubt about it. Okay, that it's that simple. Again, it comes down to some very key things. Now we talk a lot about profit factor. Okay. Profit factors is simply divided by the gross losses and the gross wins, and it gives you a number, and a very good profit factor is 2 to 1. Okay. And I'm going to show you some profit factors of what we do. So all these micros and minis were born from our big daddy, okay, which is our $226,000 portfolio. Okay. This is live. We trade this. Okay. Now this portfolio we call it the 226 because it really requires about $72,000 of money. Okay. And of course, we trade 29 products, and we are always in long or short. Okay. We're never out. We're never on the sidelines. We are either long or short these markets. Okay. And by the way, you will get these reports. Okay. This and the rest I'm going to show you today. Every Saturday morning, they will come to you at about, I usually send them about 3 a.m. Saturday morning, which gives you a total recap, but it tells you what date we're entered, what our entry price was. Okay. The shaded ones are what we call mega trades. All right. These are $3,000 of winners or better. Okay. And of course, we have a ton of those. And these are the aggregate closed profits or losses in every trade that we've made this year over time. So again, it's something that you can obviously see anytime you want. Okay, and you do get an email to you each and every Saturday. Now, what we do is we track it like this. This is what you get this as well. Results and profit factor. Okay, so 29 markets, 5 losers, 23 winners, average winner, and so on. And of course, our profit factor. This particular model is up raw profit 429% since November of 16. Okay, now again, we're giving you and showing you right here where we stand as it is. But of course, and by the way, this is every single week since June 9th of 17. You can see I show the losses just like I show the wins. Okay, I don't hide anything. Okay, the easiest way to do it is to show you the facts and the truth. Okay, then there's never an issue. Okay, never a problem as long as I tell you exactly what we did. I mean, again, there's some big numbers in there that are ugly, but again, it doesn't matter. Okay, I never once think about it. All the bold ones are new highs for the portfolio. Okay, is win rate correlated to money made? Well, it is if you're trading it correctly. Yes. Okay. I mean, again, if your win rate is 80%, but you're buying 3 of one and 1 of the other, then it may not be. Okay. It really depends. If you're doing everything measured, and these portfolios are all based on one contract per portfolio. And then here is the actual equity curve for the 226, okay, which you also get each and every Saturday, just like this. I mean, it's a little more compact, but again, for you to see it, I had to put it on a bigger screen. But again, these are showing you each and every week. So again, we didn't cut out the drawdown because I didn't want you to see it. I want you to realize that this is part of the business. Okay, I want you to realize this has been my career for 40 years. Okay, there's been plenty of drawdowns, but at the end of the day, I'm still doing it. And I'm still trading, and I'm having a great time doing it. I just, again, I wish the trading floor was still here. I mean, those were the days, but of course, things come and go. So I became an educator as well as a trader, including high school students, because I have a program that I donate to 600 high schools of financial literacy. Now, as we get into what you're here for, okay, the micro portfolios. Now, micros are new. They're having their year anniversary right about now. Okay, now. We have 4 different versions of mini and micro portfolios. All right. Now, our big daddy here, we call, is the 28K. Okay. It trades the Australian, the Canadian, the British. Okay. Dow trades, it trades 18 different products, 18 markets. Okay. So here's the stats for these 18 markets. Okay. 18 markets. 6 losers, 12 winners, average winner, average loser. Okay. Win rate's down a little bit because we had a drawdown this week. Okay. But again, notice that we just made new equity highs 2 weeks ago. Okay. Here's 214. This was sent out Saturday morning. Okay. Now, this portfolio is legit. I've got it. I'm going to show you mine. Okay. Shortly. Okay. My real portfolio. But again, this is real. This is what we do. And this is what we send. So everybody's on the same page. The only difference is some people are always not in the same entry because, again, if I send them out at 3 a.m. and you're awake, you might enter a trade right away if that market's open versus somebody who gets in California might get up a couple hours later. They might not put it in at the same time. But again, it always works out mathematically. Eventually, all the stats should be very, very close to each other. But again, this has been an extremely profitable since July. This has had a 56% on using 3 times margin. And the reason we use the 3 times margin, very simple. Okay. It keeps your emotions out. Okay. If you put up just the $9,000 to trade this and you get a drawdown, A, you get a margin call, B, you go, oh my God, what am I going to do? Versus being comfortable enough to know that the markets will pull back. Okay. And not the markets, but the actual portfolios. Here is the 17K. Okay. This is a little bit smaller. What it really did here is we took out the mini of oil and the 10-year treasury note, okay, and a couple of others. But this trades 15 markets, okay. It's got a profit factor of 1573 because you can see it's starting to head back higher again. It had its drawdown a couple of weeks ago. Again, you can see new equity highs in the bold. You can see the date entered of every single trade. Now, just a quick thing to understand, the NASDAQ, okay, has actually been long for longer than this. But again, when we roll it over to the new contract, okay, then obviously the data has changed because that's the date of the new entry. And of course, in these portfolios, a mega trade is $500 plus of open profit. Okay. And then we have our 16K, which was actually the first, because this was using just mini contracts. They didn't have micros when we first did this. And we wanted, and there were a lot of people that wanted something a little bit smaller to get their feet wet. So we built this portfolio to start out with. And this trade's only 4 markets. Okay. It's got a profit factor of almost 3%, over 3. Okay. You can see the trans progression. You can see new equity highs. You can see the equity curve, again, up to date to the 14th of Saturday. Okay. And of course, here is the 5K. Okay. Not a race. We're not running. This is a 5K portfolio. Okay. That also trades 4 markets. Okay. But these are purely micros. This is a real great entry level for many who may be afraid. Okay. Again, I understand what has been the some of the stories out of futures markets over the years, but that's no longer the case. You know, the whole market structure has changed since that when I started. You know, when I first started, they didn't have put options in, believe it or not. So again, this is developed into some horror story. And believe it or not, most commodities and futures are now settled in cash anyways. There is no more market deliveries. So here we trade 4 markets. Okay. And again, here our win rate is 22%. Okay. We've made new equity highs consistently. And again, we had drawdowns, right? There you go. Bang, bang. They happen. Again, we don't try to hide from them. We know they're a fact of the business. Okay. And if you understand that, it makes you a better trader, it makes you better at everything you do if you just understand that that's what happens in this business. Okay. Because again, as I said, even the best can't avoid it. Now, every day I will send you an update, either a new trade, no, none, or a new trade, we're going to reverse something. Okay. And it's always a reverse. Again, we are in these markets consistently 365 days a year, or 241 open trading days. And if you throw in Sunday nights now, it's 293 days a year. We are in these products and never out. Okay. We don't stop out, we reverse out. Okay. We don't use stops. The stop is when the reversal signal comes in. Okay. And again, these are straight algorithm. There's not one of my opinions in here. And to prove the fact, if you ever listen to my daily updates, okay, I tell people how much I hate being long oil. Well, we were long oil until a couple of weeks ago when it hit 60 some dollars and went reversed. We finally got short. I was winding all the way up with a profitable trade. And right now I'm short the grains, okay, because the system's short the grains. I don't like being short grains either. But in the meantime, I've made money on it. I just don't like it. But I will never, or do we ever, inject a personal opinion. I mean, I read charts. I know what they look like. I know how to read them. I'm good at it. But when it comes to this method, there is no human interaction. It is straight. Here's the numbers. I run the report around 2 a.m. and I get everything, all the changes, if there is any. And of course, our goal is to have very few. Okay. Very few updates. I like none is my favorite, because that means that we're just making profit. Okay. That means that the equity curve is going in the right direction. I don't like making changes. Okay. So Bobby, you're not, this is not quick in and out. You never trade during the day. Okay. Your only trade during the day, depending what time you get up, okay, is to either enter, reverse out and put on the new trade, or start. If you're just starting, then you would trade. But once the position's on, you're done for the day. There is no watching. You don't have to sit there. You don't have to babysit it. There's never going to be a signal change ever during the day. Okay. The signal changes come out before the markets open, except the ones that are open 24 hours. Obviously, they're open 24 hours, so they can never be closed. But you never get a signal during the day. Okay. Every signal you get will be in your inbox somewhere between, depending on where you live. But I send them about 3 a.m. Central every morning. Okay. So at somewhere in that time, you will have the current update, which is when I enter my trades. In fact, I have my portfolios auto traded or letter of direction traded through one of my firms, because I don't even want to think about it. They do it for me. They place the orders. It's about 6:30 Central Time is when I enter, so that my portfolio matches up with everybody else's. Okay, and this is my portfolio. Now, this portfolio, just so you understand, I didn't put 28K here because I've already got quite a bit more there. Okay, I've got the 226 I'm trading. I've got a couple others that I'm trading. I've actually got a little hybrid model that I play around with. But in the meantime, this accounts up 50%. Okay, since I put it on, which was in October. Okay, and of course, here's all the positions. Here's my name, so you can see. I just blacked out my account number in case anybody was wondering. All right, but again, this is our current positions right now. Okay, this is as I shot this morning at 11:16 a.m. Okay, so you can see. In fact, I lost $100 today. Okay, with some of the electronic market which were open. But again, this is exactly what the 28K looks like, and it's obviously doing quite well. And again, I never think about it. The only time I look at it is when I run the report, and then I have to go ahead and enter my trades or not enter my trades. Okay, no quick. I'm not in a hurry. I don't want to trade. I mean, don't get me wrong. When it's busy, I trade myself. But again, I never touch the portfolios ever. What an amazing performance of the managed portfolios. I just wanted to send you a note to thank you for your continued guidance in all aspects of investing and trading. Your reassuring words every day really help me out when deciding whether to enter a position or not. Hearing the stress patience has proven to be an invaluable tool. I'm learning more and more from you every day. Your years of wisdom and your share with us as the MasterCard commercials is priceless. Now, here's a few facts for it. I contend that no one knows as to why markets do anything. Hence, it is impossible to predict future prices with any consistency or accuracy. Those that think they can forecast are fools and will soon find themselves broke. Gurus con gullible traders into believing that they have the special knowledge of the future. Unfortunately, 99% of all trading is based on false premises. And this is why very few obtain large wealth from the trading game. You want to make money trading, you simply buy when prices are going up and you sell when they're going down. It is that simple and basic. But this concept evades most traders because they think they will make more if they know more. I contend it is the opposite. The less you know, the more you make, which means the less you act, the less you have to do, the better off that you are. Because again, I can show you many different charts and I can read them. And in fact, I do a live webinar tonight and where I look at and set levels for stocks. But again, I will also put the disclaimer in if I'm in an algorithm, one of my algorithms, I will say, I may read this differently. This is where my position is, but this is what the chart's telling. Okay. But again, I don't care what the chart is when I'm using this because again, it comes back down to the simple fact that we have to follow the rules. We have to follow the trend. And that's all that we care about. Okay. So again, remember that whether you come with me or not, remember when you trade with consistency and discipline. Okay. And do not violate your rules. So in the meantime, again, if you like what you see, okay, and you'd like to take advantage today, okay, I have room for 50 people. Okay. Again, we call it futures portfolio management. Today, for the MetaStock event, it's $129 per month for the first 2 months. So we give you a month free. Okay. And then it's $129 therefore after. It's bubbatrading.com/micro. If you're an annual kind of person, okay, it's bubbatrading.com/micro year. And this is available to 50 people if you choose to do so. Love to have you aboard. But again, hey, remember to take care of yourself, okay, and understand the things that we covered today, because at the end of the day, it comes down, the real answer lies within yourself, okay? And if you do that, you'll become a much better trader. Do we get a break if we are upgrading? Don't have to show page after page. Things make the point system works. Do we get a break if you're upgrading? Don't have to show page after page of the same things. Well, again, you know what? You know how many people told me they get their point that I've trained in my 40 years and ended up out in the street losing all their money? Okay. Again, part of it is making the point after point so that you understand it. Okay. Those who are really good at it are probably making money now. So again, this is, you can look at it in any different way that you want. At the end of the day, okay, this business comes down to very few simple things. Okay. Fortunately, I was lucky enough to learn that about 6 months in and using my gin and backgammon schools, because for my 6 months as a trader, okay, I actually made my living playing gin and backgammon. Okay. So I'm happy to take any questions that anybody has. Okay. Just want to make sure I give you a quick rundown, but any questions about the systems, any questions about trading, I'll be more than happy to work with you on any of them right now. All you do is ask them. But again, it's bubbatrading.com, and it is case sensitive. So use the lowercase. Okay. So it's .com/micro for the first 2 months for 129, or it's micro year for the 13-month for 1 year in the first year. Okay. And we do have room for 50. And I haven't looked at as of yet as to what we've got. But again, any questions, I'll be more than happy to talk to you. And again, just remember, again, for your own trading, the basics of markets. Okay. All markets are the same. Does not matter. All charts and all patterns repeat themselves over and over and over again. It does not matter whether you're looking at a yearly chart, a weekly chart, a 4-minute chart. I mean, I personally trade during the day. If there's action, I personally trade on a 4-minute, okay, and a 1 minute. I use the 4 as the trigger, and that tells me what's happening, what I'm looking for. And then I flip to the 1 to get confirmation, okay? Because the market itself really breaks itself down into 3 basic phases, okay, which are very simple: congestion, breakout, and blow off, okay? I use CTG, Charlie Tango Golf. If you'd like it, just shoot me an email at bubbatrading.com, and I will send you their information. Okay. But they're very good. They've got great customer service. When you call, there is no voicemail. You get them, and they trade my account for me. Okay. Which should tell you how much I trust them. Okay. So at the end of the day, they do a very good job. They're not the cheapest in the world. They're not the most expensive for letter of direction trade. They're very mid-range, but it works out extremely well. And again, they do a great job in putting together. So it works out very well. You know, CTG, Charlie Tango Golf. Again, email me at bubbatrading.com, and I'll give you all their contact info. Okay. You deal with the owner, which is always a good thing, right? That's a better one to deal with than anybody else. Charlie Tango Golf is like the flipping of a coin confirms the law of large numbers, because you have a sample of independent, identically distributed random variables. Is that true in future? Yes, it is. Okay. There are only 2 variables. Each result of a flip is the independent of that, except when you can add in the right information, which is what I can do manually, but I can do it a hell of a lot better with the algorithm. Okay. I can do it manually. I just can't do it always as fast. I don't always recognize it as fast, but all the algorithm took was the logic from myself and Dr. Fang to put this together, okay, and build it. Okay. And there is what how we built it, okay, and used it. And again, those results I showed you are all live and real. Those aren't imaginary. You could have. Those are real results. And the reason that there's some dates on them that even though I said we go back farther is because these portfolios, I only show information on results that you could have legitimately really attained. Okay. Because I do trade every one of these portfolios. Okay. I do trade. Every recommendation I've ever made in my history in this business, okay, has been traded in my account as well. Okay. Because again, if I'm not willing to trade it, why the hell would I want to recommend it? Okay. What is the difference between 1 minute and 4-minute charts? Well, again, that's a good question. When I'm trading short term, okay, I need a trigger. I'm looking for a certain pattern. Okay. I'm looking for the blow off patterns I'm looking for. So, and the reason I use 4 minutes is because I can trade for a couple hours and have a bunch of opportunities. Because typically, I'll just show you another chart that I'm watching. I'm going to drag this over for you. Okay. Here. This is on my other, one of my other monitors. Okay. This is what I typically watch during the day. Okay. on one screen. I mean, I've got 6 and I've got one that's got 30 charts on it. But in the meantime, I'm watching this. Okay. And you can see they're all set for 4. Okay. Why? Because once I see what I'm looking for, I switch to 1 because 1 becomes what I call the trigger. That tells me. So if I'm looking to get in a direction, I'm looking for a candle in the direction that I want to go. And once that confirms, I make that trade. Okay. Works very well if you understand it. Again, everything comes back down to understanding. This is you will get selections. Okay. Every day, if there is a trade, okay, you will get it. Okay. If there is no trade, you won't get it. So normally, if you signed up today, okay, what I would say to you, okay, so go in whichever portfolio you choose and open all those current trades as they sit right now. Now, a lot of people want to know, well, why don't I wait for the signal to change? Oh, who the hell knows when the signal to change? The NASDAQ's been long almost an entire year. Okay. So why would I want to wait? You know, you remember one thing, if you put the wrong position on today, if it's wrong, okay, it's going to reverse. So it's not a big deal. Okay. That's all we care about. Again, if you have the right position on, if you're wrong, it'll reverse for you. That's what we look at. Okay. It's BubbaTrading.com/micro, all lowercase. BubbaTrading.com/micro year, all lowercase. Again, if you're having a problem, I know a couple of people are typing that, but a little bit of a problem. Okay. How many trades represent a large number of trades? Well, we have 29 markets right now. I trade more than one lot. What I'm showing you today is a representation of one contract per portfolio. One per contract per future per portfolio. So now again, we trade, hopefully very infrequently. Okay, because again, hopefully the trend is lasting, and we will look for that. But sometimes they change, but we also have built in, okay, not to get stopped out or reversed too quickly. Our algorithm recognizes that it could possibly be a false move, so it gives it a little bit extra time just to make sure. We don't want to be reversing every day, right? We don't want to get caught in one of these big choppy markets, okay, that keeps reversing you back and forth, and you're chasing your tail. This has the ability to wait, okay, just long enough. And again, it's the best trend trading software I've ever seen. It's not software, but it's our method, okay, that I've ever seen. Okay. It's 66% is one heck of a rate to win. I like your plain talk. Okay. Well, I'm selling picks. I'm selling a portfolio. I'm selling you these selections. Okay. You will get these portfolios each and every week. You will get an update every single day. Okay. You will know what to trade. So if you decide that you wanted to be in the 5K micro portfolio, okay, you would buy these 4 futures tomorrow. Okay. Or tonight, because they'll be open. Right. And you would put them in that account. Right. And then if there's any changes, I will send them. And until there's a change, you will stay either long or short those products. Okay. And that's what we are. We're managing. We're showing you managed portfolios that we do the managing for you. You do it with your money. We don't touch your money. You do it with your own money. Okay. We just recommend a broker if you want. And if you got a broker already, hey, good for you. There's no requirement of where you go. We want you to be comfortable and happy. And I would never have anybody change brokers unless they wanted to. How many trades? Let's see. What is the main indicator that you determine? Well, again, if I gave you that would be my proprietary algorithm. So I can't give that. Okay. Again, I can't give out the proprietary information, otherwise I wouldn't have anything, right? And that becomes exactly what we're trying to do. Again, it's a very basic, simple, no day trading, nothing during the day. Everything is given to you pre-market. You can be ready to go. Okay. How much you need in your account to be in the big account trading? The big account requires 72,000 cash. Okay. 3 times margin is 226 or 216, but 226,000 is what it's representing. Okay. And you got to make sure, again, because it's an emotional business, you have to have enough capital so that you don't get nervous when you go into a drawdown. Okay. No worries. No worries, RD. I have no issue. Okay. I've been doing this for 40 years. I'm comfortable and I understand your exact position. Okay. Again, take your time. No worries. Okay. You know, the one thing we got is time left. And again, at my age, hey, you know, I'm 62 and manage, you know, and trade every day, trade every night, you know, because I'm always sitting in front of the machine anyways. But at the end of the day, again, it comes down to the same simple basics all the time. Okay. Patience, discipline, no emotions. That's it. You can do that because I got news for you. When we were on the floor, okay, the guy showed emotion. Guess what happened? He got run over like a freight train because everybody knew he was wrong. All right. That's the key. You know, there's an old saying when you can see somebody's tonsils when they're yelling, okay, they're wrong. All right. Same as the bottom of the market in 09. Okay. When everybody was lining up with their brokers to get out, that was the time to be getting in. Okay. And we were. Right. But that's not the point. The point is that, again, when you bring that emotional step into your game, you automate. I sleep a little bit, about 5 hours. Okay. You cannot pick out certain, I mean, you can do what you want, but if you do, you're again, if you decide to pick out certain trades, you're violating what we do. That changes the dynamics of everything. Okay. We do not select them. I don't know. Listen, I don't know which market's going to go up next. Okay. I don't know which market's going to go down next. Okay. I can give you a pretty good guess. Okay. But again, I need to have more certainty. Okay. So for me and for my certainty and my sanity, okay, you know, I just like to have, it tells me automatically what to do. That's what I do. I don't have to think about it. I don't have to watch the markets. If I want to go play golf, you know, my son played college baseball. I want to go watch him play baseball. I was gone. I didn't have to worry about the markets. I didn't care. Okay. Again, both my kids just graduated in the last 3 years. Okay. You know, $500,000 in tuition, bang. Okay. But fortunately, the algorithms paid for it. So it was all good. Yeah. I sleep occasionally. No, I sleep a couple hours, about 5. 71 and do futures and forward. Great. Some earnings plays. Please consider trying naked. Please consider trying naked strangles for earnings, but well out of the money. Again, I just say this to you. You're good. You can do what you want. If you got plenty of dough, hey, go for it. I would never sell a naked option. I have never have. Okay. I've watched too many guys get carried out. And yes, it does pay. But again, the one time it doesn't, because in this business, I believe the improbable happens once a week and the impossible happens once a month. Okay. Yes, all returns are going to be good. I mean, all the portfolios are well over 50% up. Okay. And I mean, the 226, because it's the oldest, is up 426% since inception. Okay. And you can grow from one portfolio to the next portfolio. That's our objective, is to get everybody to the biggest portfolios, because again, it's best for you. Okay. And then, I mean, I've got some members that trade 10 contracts of the 226, which means they're representing just a little bit more than 226,000, right? 2.26 million, right? So again, our goal is to have you grow naturally. Okay. Okay. So that is what we try to do. I trade everything. Okay. I've even traded the weather in the past. You know, there was a weather pit. I don't know if it still exists, but there was a weather pit at the CME, and that was really for insurance companies, if you're not sure why they had one. Okay. They had against hurricanes and tornadoes and things like that. Okay. So at the end of the day, okay, we want to make sure, again, that we follow the rules, we stay disciplined, we do the right thing. And again, that's what we do. That's why what we do works. Because again, as John Henry, the owner of the Boston Red Sox, the Turtle Traders, Richard Dennis, Dr. Fang and all, okay, this is what we do. We don't think about it. I don't have to worry which way it's gone, because I don't care. Okay. I've watched the future go dramatically against me. I go, okay, if it reverses, great. And if it doesn't reverse, I'll be in it. So, Okay. But I trade stocks too. Okay. I trade everything. Again, there's nothing I don't have positions in. I mean, right now, I've got, I don't know, probably 50 futures trades open and probably over 100 equity trades open with, using some kind of options scheme, okay, formula. So again, I do it all. There's nothing that I will not trade. Well, I don't want to manage money because I don't want people calling me at night if we have a bad day. Okay. Because I don't want to go through all the regulations that you have to go through to do it. And I don't ever want to touch anybody's money. You take control of your money. Okay. I don't believe in paying an advisory fee. Okay. That's for me. I mean, again, if you choose to, you can. I mean, I can put you with somebody who'll manage this for you. Okay. You want to give them the money. I just prefer that you keep your own money. Okay. Why don't you treat? What do you think about all these strategies and templates, plugins that are offered? Look, if you're going to be a disciplined trader, okay, everything can work. Again, I can make any system work. You know why back testing works so great? Anybody? What time is it? I don't want to overstay my welcome on the first time. You know why? You know why back testing doesn't work? Okay, it really doesn't work because you can't feel the emotion. Okay, of what's happening, right? You don't feel the losses when they happen in a back test. So you have to forward test. But in the meantime, they all work. The real problem is what works is what you can manage the best yourself and follow the rules that are set. I think what was it, the RMO you were looking at? Okay, whatever with Jeff. Okay, again, if you follow the rules, okay, which they're very perfect, right? They're exactly what they should be. Everything works if you follow rules. Okay, it's not the systems that don't work. Okay, it's the the people that don't follow the rules based on it. Okay, that's my opinion, anyways. Okay, how do you equalize position size? Well, again, we trade equal across the board. So if it's one, if it's one across, it's one across. If it's two across, it's two across. So basically, what most people do is they go from one to the next. But let's say I had just had somebody. So this has happened. Somebody was we have a $72,000 model as well in the bigger portfolios. And he just grew his account to like 180. So he went to 3. So as soon as he gets to 220, he'll take those 3 and go back to 1 and spread it out to more markets. Okay. That's what we do. That's how we build it. Okay. You can go, we've got 6 different actual portfolios. Today was about the micros and minis, but I do have bigger ones as well, but you saw the 226. And with that, Jeff, I will say thank you. I think I don't want to burn up all your time, but I certainly appreciate you having me. Oh, maybe or not. Maybe let me talk more.
Hey.
Oh.
Hey, Todd.
I thought I was going to steal another hour.
Oh, yeah. That'd be great. But great job. Hey, appreciate having you on here.
It was great to be here, and thank you everybody for listening. I appreciate y'all. And look, some commodity contracts are much larger. They are, but not in the perspective in which we're using them. Okay. Again, remember, if you're trading the micros, okay, they're 1/10 the value. I mean, the Dow, S&P, Nasdaq, and Russell are all similar in size. Okay. Trust me, it works. I showed you the results. That's all I can do. And I know I've already lost my screen. So with that, I will say thank you to everybody and goodbye and have a great day. I appreciate your time. If you need me, Bubba@BubbaTrading.com.
Thank you, Todd.
Thank you, Jeff.
All right. Bye. Okay. All right. Thanks, guys. Hope you guys enjoyed that. Thanks for coming today. I hope you're enjoying the day. I do want to remind you just before we get to our next speaker, which is Hima Reddy, that we do have a fantastic bundle discount on MetaStock Real Time, the Zenith data, so our most popular add-ons, Unleash the Power of MetaStock, 2 years of Stocks and Commodities magazine. Normally, all of this separately would cost you $44.87. You can get most of it today, mostly with a money-back guarantee for all but the subscription parts of it, for just $19.45, which is a savings of $22,542. So give us a call at 800-882-3040 or chat live with us at metastock.com/salespchat, and we can help you get set up. Other thing is do want to thank Stocks and Commodities for hosting today's event. We're going to include 2 years of Stocks and Commodities with that package, and let us know. Make sure you get your free trial at the link right here, bit.ly. I'll copy that in the and paste it in the chat for you as well. And if you do nothing else today, make sure you get the MetaStock program. It's been rated #1. I know it says 25 years in the row, but they just announced 26. So every single year for the last 26 years, it's been rated #1 because it allows you to scan the markets, test trading ideas, do forecasting. And so get in touch with us. Again, the contact information for us is phone number 800-882-3040. And you can chat with us also at metastock.com/salespchat. Yes.
This chart we're looking at right now, or the PowerPoint, it says trade trends buy one get two, but I believe in fact it's buy one get three, is it not?
No, it's buy one get two.
Oh, well that's why it says buy one get two.
Yeah, it's buy one get two free. So you actually, it depends on how you want to say it. It's buy one get three total.
Because Zena's data says buy one get three.
Yeah. You will get a total of three.
You get a total of three.
Yeah.
Okay. That's right.
That's interesting. I wonder, next time we should probably have these matched, don't you think, Greg?
I think you should have your marketing guy review it. That's what I think.
So do be clear. It's buy one, get two more for a total of three. So anyway.
Buy one, get three.
Okay. Let me go ahead and let's talk a little bit to Hima. Hima, how are you doing today?
I'm good. Can you hear me?
I can hear you. You sound great.
Okay, awesome.
Like an angel.
Well, that's a good thing, especially after you guys have had a jam-packed day here. Glad I can come in and keep it rolling.
I'm interested. I'm interested again. You're here for your first time, so I'm gonna kind of put the heat to you a little bit. Tell us just a little bit about yourself.
Well, I actually have a bit of a story I will share as I dive in. So
Okay.
Whenever you're ready to hand the mic over, I will be sharing that in a moment here once I share my screen and all.
Yeah. Okay. So we want to welcome Hima Reddy. Did just a little bit of coding for her Thursday or Friday. I don't remember, but she's going to be talking to us, and I'm interested to see what she's got to say. Hima, I'm out of your way.
Okay.
Oh,
All right.
maybe I should give you the screen, though.
Yeah, I was going to say, maybe it'd be good to show some slides here.
No,
Okay,
we haven't been
so let's
going for
go
7
ahead and-
hours straight right now, so,
All right, so I think I have got it going on here. All right, so if you guys can go ahead and everyone just type a Y for me in the chat if you can see my screen.
we can
It
see it.
says,
I can see it.
It says how to trade momentum in any market on any time frame.
yes,
All
sounds
right.
good. All right, always helps for me if the audience gets to chime in too. So are they asking questions in the panel here? It looks like it.
We
So if
are.
you-
We also
Okay.
probably will have some. We might have some questions from YouTube. We've got a simulcast going on. If those come in, I will actually ask them to you later.
Okay, great. Because yeah, by design, I am happy to take questions and we'll have some time carved out for that. So, okay, great. So I see Victor, Betty, Dan, George, Jim, Kana or Gana. I'm not sure how you say your name, but awesome. It looks like you guys can all see me. And, I would love to know, especially, here in the US, it's a bank holiday, President's Day. It's also my birthday weekend, so that makes it a holiday for me anyway. But I'd love to know where you guys are dialing in from as I get set up here and get ready to dive in. So what state, what country, what city? It's about 4 Eastern. Markets would have been closing if they were fully open today. But the thing that's awesome about trading, especially, is that you can do it from anywhere in the world, right? So I'm always curious to see who is coming in to get some education and boost what they're already doing. All right. Well, as you guys share that, I'm going to go ahead and dive in here with my content, make sure I keep the track rolling here. And I will have time for Q&A. I'm going to collect those and answer those at the end. So if you have a question along the way, just jot it down and I'll make sure it'll circle back after we get through the presentation here. All right. So with that, I'm going to go ahead and dive right in. All right, so you're here for how to trade momentum to get a sneak peek behind the one Jedi indicator that helps me accurately predict turns and large moves in any market on any time frame. Okay. So if you want this, then that's fantastic. You're in the right place. So let me ask you, have you ever wondered what it would be like to have an expert analyst in your back pocket? Have you ever wondered what it would be like to finally trade with confidence? Have you ever wondered what it would be like to finally make enough with trading that you could live the life you deserve? Would you like me to share an easy way to amplify the power of an indicator that's in every single trading system out there? Would you like me to share an easy pattern that allows me to predict trends in price and momentum for you? Would you like me to share an easy way to trade futures, stocks, and options? How many of you want to get as much as possible out of our time here together? Yeah, I want that for you too, right? For most of you here with me today, this is going to be a long-term relationship. Once we show you how simple this is, once we show you how easy it is to consistently extract money from the markets, once we show you how fast your business and life can grow, you'll want to hang out with us for a lifetime. Now, in a moment, you're about to discover how to make money with stocks and options, even if you suck at picking them yourself. You're about to discover how to capitalize off making trades at the best prices and the best times. And in a moment, you're about to discover how to catch market turns and ride the price waves up and down, all right, in only minutes a day. So would you guys like me to show you that? Go ahead and type a Y for me in the chat, okay? As much as we're here on the web, I got to make sure you're here, you're listening, and coming through loud and clear. So go ahead and type a Y for me so I know you are set to go. All right, fantastic. Now, I promise that by the end of our time today, you'll know everything you need to pick the best trade, when to enter, and when to exit in only minutes a day. All right, would that be okay if I pull back that curtain for you? Now, that's great because here's the problem. Many traders are making it way too complicated, all right? Many traders are getting hammered by the trends because you haven't found a consistent way to produce profits by yourself. And it's not your fault, all right? They make it complicated. So as you listen to me now, know my intention is to help you fix that problem because you're ready to take action now. Now notice, I'm going to be absolutely upfront and transparent with you today. I'm going to show you current case studies and figures today. As you well know, trading involves risk, and it's your responsibility to evaluate any information, opinion, advice, or other content contained within my presentation, right? Your results are up to you. I can't predict them. I'm not going to predict them. Anyone who says they can is lying to you. I don't know your trading plan, your account size, your markets. I can only show what's working for myself and others. Your success is up to you. So who am I and why listen to me, right? Now, if you haven't been following me for a while, here's a mercifully short introduction. So I'm Hima Reddy, and I'm originally from New York, the hotbed of the markets. And I started out at age 16 learning futures trading from my dad, a successful trader in the Gann style of trading. In fact, my dad was so far ahead of his time that he got a chunk of Amazon stocks right at the beginning. Now, I went on to become a certified CMT, working as an analyst at Piper Jaffray, before going on my own to help traders directly. And over the past 20 years, between my professional analysis on Wall Street and my international publications and my proprietary analysis and education, I've helped hundreds of thousands of individuals create a sound plan for their financial future. I'm an international speaker presenting to institutional portfolio managers and analysts, as well as individual traders, and I've been blessed to appear on the Wall Street Journal, Barron's, Bloomberg, Reuters, The Street, Benzinga, and all the alphabet, NBC, CNBC, Fox, ABC, featured in Stocks and Commodities magazine, and with TradeStation. I'm also the author of the trading methodologies of W.D. Gann. So how did I get here? Well, that's quite a story. Is it okay if I take a couple minutes and tell you my story? It'll go by like that. Okay, guys. So here we go, all right? Now I'm a successful trader and educator, but it hasn't always been like this. Years ago, life seemed great, all right? I was in the center of the action as an analyst with Piper Jaffray and making them a ton of money. I started work at 5 a.m., worked late, burned out quickly. Is anyone else here a corporate cog making someone else rich? Yeah, I know, right? Now, I thought there must be more to life. Okay, the money was good, but I never got to see my family. You know what I mean, right? I started becoming a ghost in my own life. Now, the bottom dropped out of my world when my beloved dad and mentor died suddenly. And at first it felt like my whole world was crashing in because I had to leave my job to tend to financial and legal matters for my family. But then I realized that, this was my ray of light. This was my hope to get out of the corporate grind. And I seized it with both hands. Because back while I was apprenticing with my dad to learn the markets, I had started a report that I called my Skitty on the Mini. Okay, it started out as just another exercise, but soon my dad started using my report and making money with it. And then I shared it with other traders too, and they were benefiting. But all of that stopped when I joined the corporate world, right? Conflicts of interest, am I right? And all those years, those traders were hounding me to get the report back. So when I had to leave my job and take over my dad's accounts to trade for my mom's future, I realized that it was time to bring back the Skinny and the Mini and reclaim my life. So I sent out the call to all my former subscribers, and they said yes, they would love to get back my report that ROI'd on average 7 times out of 10. Okay, they couldn't wait to leave the hard work to me again. So the result was I had time to trade my dad's and my accounts again. I started maximizing the trading methods of WD GAN and became the leading expert on GAN. I started teaching others the hard-earned secrets that I had learned from my late father. And in a moment, I'm going to share those very secrets with you, because what I've discovered about trading, guys, what I've discovered is that trading equals freedom. Trading equals what? I want you to type it for me there in the question box. Trading equals, yes, freedom. Okay, there's only so much time in each day. And when I found the system, I got my time back and my family back, and that's freedom. And clearly that's what we all want, right? Freedom. I mean, wouldn't that be awesome? But clearly there are challenges. Many traders, they lose money because they don't have a proven system. Okay, trading often feels complicated and overwhelming, and often it can be confusing, right? Well, they made it confusing and complicated because you don't have a simple proven system, because what I'm about to share wasn't available until now. And now that it is, you've got to have your 4 zones RSI coverage system. And you'll immediately notice how much easier it is to make money with trading. And I'll show you that a little later. So what's different about the 4 zones RSI coverage system? Well, the 4 zones RSI coverage system gives you my Jedi indicator and system that helps you accurately predict turns and large moves in any type of market on any time frame. But more on that in a bit. Okay, first we're going to dive right in. Now, trading momentum can be easy, but first you need to understand how momentum works. So a Formula One car racing track will have you understanding momentum in no time. So let's put ourselves in the driver's seat here, okay? You're at the starting line of this racetrack. You rev up your engine, and there you go. Taking off, you pick up speed really quickly or accelerate on the straight runs of the track. Then you see a turn coming up, and you prepare accordingly. You ease off the gas to slow down or decelerate, even if it's just a little bit, so that you can have more control as the car whips to the other side of the turn. Then, after you make the turn and the road straightens out again, you hit the accelerator once more. Are you guys getting the idea of how you'd accelerate and decelerate on this track? Go ahead and type a Y for me in the chat. All right, because if you can follow this, then you know exactly how price momentum works. Now, let's jump into the helicopter that was looking down at the racetrack and get a bird's eye view of it. You see, the racetrack becomes price as you see it on your stock charts, and momentum is generally plotted on the bottom as a subchart. Making sense? Okay, we've got price on the top, momentum on the bottom. Now, what happens as these two move together? Well, when price is trending higher, you've got upward momentum that's improving. That upward momentum generally begins to slow down and peak before price does. Okay, this makes momentum a leading indicator. It actually is taking action before prices, giving you a heads up. Now, during falling prices, there's falling momentum that's becoming more and more powerful of a force. But when a price bottom is approaching, you usually see momentum bottom out and turn up before price does. This is what makes momentum indicators ones that can warn you about hidden strength or weakness in a market, giving you that heads up. Right? Especially when it comes to potential market turns. Am I making sense, guys? All right, type a Y for me if you've got it. Okay, great. You've got this. Now we're going to dive into the indicator, okay? But first, let me share with you the results from our trading family. Hima, I value your insights. Your momentum indicator is an integral part of what I've put together. I believe I'm ready to go from paper to live trading, said Jim. So now that we've made momentum easy to understand, in a moment, I'm going to show you how you can make money trading momentum. But first, you guys want the Jedi secret? That indicator that I said is the key to my maximizing momentum? All right, cool. So I'm going to let you peek behind the scenes of my trading and show you how momentum moves through the markets that you know using my special Jedi indicator. And that indicator is called the RSI power zones. Okay? And you can use it on any market in any time frame. Now, I want everyone here to take a look at this slide, right? We've got a variety of markets on the left, active markets that have a lot of participation. And we've got a sampling of timeframes on the right, monthly, weekly, 15-minute, 5-minute. Do you guys see a market you trade here? Do you see a time frame that you use? I want you to type for me in the chat what you're trading. Okay, maybe it's stocks on a daily, maybe it's commodities on a 5-minute. Type in your combination for me. This is important because I want you to see that what I'm using here, what I'm applying here, works for what you're doing, okay? That I'm speaking your language. So let's see what you guys got. As I said, my history started with learning futures trading from my dad. So I'm definitely well-versed with futures on a 5-minute chart. I also manage my family's accounts. So that's a lot more of a stock trading on a daily time frame. What time frames are you guys using? Go ahead and type into the chat box here. Okay, we've got stocks on a weekly from Steve. We've got futures on a daily from Robert. Stocks on a 3-minute, 5-minute from Chris and Victor. Options and ETF. Oil on a 5-minute. Okay, there's futures again. Stocks, options, ES on the tick chart. Commodities, 21 range. All right, so there's a lot of variations out there, but all of you are naming markets that move actively, which means that my RSI power zones can apply. And as long as you plot time on the bottom of the chart, all of the nuances and the rules and the signals around it work great, okay? If you happen to trade on a tick chart, no problem. Just pick a time frame that you want to use to anchor your RSI power zone signals, like a 5-minute or 1-minute, and you can combine that with what you're doing on the tick charts. All right, awesome. So now let's look at combination using a commodity that you guys ask me about all the time, okay, oil. And let's look at this on a big picture time frame before we drill down. I'm going to pull up a monthly chart of oil. So now we jump back in time. We've got a candlestick chart here with every single candle, all these bars up the top representing 1 month of price action, and the RSI power zones plotted on the bottom. Now, first, let me walk you through the basic zones, hence the name power zones, of the RSI power zones. So these 2 lower red lines, that's the RSI bear support power zone. The 2 lower green lines are the bull support power zone. The 2 upper red lines are the bear resistance power zone, and the 2 upper green lines are the bull resistance power zone. Okay? Now, as we look at a market that we're familiar with on a long-term time frame, you're going to see what it would have looked like if you'd been looking at RSI power zones versus just the regular plain old vanilla RSI. So let's start with the big run-up that happened that shot the RSI and price higher, with the strong advance higher in price being accompanied by what? A move from the RSI's bull support power zone to bull resistance power zone. Okay, so the most basic tenet here is that when you're moving between the bull zones, you generally are in bull markets and want to be on the lookout for long trades or long strategies. Now, oil fell out of bed. Okay, I was on Wall Street when this happened. Not sure where you guys were, maybe trading, maybe in your old job or whatever you're doing, but this was a pretty nasty fall. And in the big picture, okay, I used to study monthly charts, even on Wall Street. I looked and said, you know what? I don't think this is just a little shakeout. I think there's something more severe here, because not only do we get a lower low in price, and RSI fell all the way to the bear support power zone, it's now changed, right? It's not moving between the bull zones anymore. And I was worried about oil's recovery, and I rightfully was worried. For years, oil kept trying to go higher, just kept punching away, but it couldn't get through what? Look at this, guys. It could not get through the bear resistance power zone multiple times. And after all that, it fell hard again, respecting the bear zones, declining in price, posting a lower low, another lower low, with the RSI power zones falling into the bear support power zone again. Okay. Started to recover, and even that recovery in the first attempt capped at the bear resistance power zone. Now, this is a slice of history of a very highly watched market on a big picture time frame. And so it's a great place to start to show you the value of the RSI power zones. All right, you guys getting this? Type a Y for me. If you're getting this, you're seeing how looking at these zones on the RSI is different. I'm going to show you another example of another market that you guys ask me about all the time. All right. So here's another combination, all right? We're going to check them off as we go. Let's look at an ETF that a lot of you trade, especially my coaching students. They ask me about this all the time on a weekly time frame. SPY. Do we have any SPY traders in here? There's got to be at least one. There almost always is. Okay. Now I want you to look at the same zones that I was talking about, all right? Same setup here, except now every weekly candle is representing 1 week of price action. And you've got the same 4 zones on the RSI power zones. So let's look back at this consolidation that was happening back at this early part of this chart, okay? Market went sideways for a while, price broke out higher. Then it pulled back, okay? It went above this dash line and then it pulled back. What did that pullback do with the RSI power zones? It coincided with holding the bull support power zone. This is something you would not have seen if you were following the plain old default RSI. You just would not have, okay? So this was an early heads up that, hey, maybe this market's really ramping up. And boy, was that a nice early clue to this price action. Huge, strong advance higher. And look, where did that advance go? Up, beyond your traditional overbought levels. And it went up into the bull resistance power zone. So RSI moved from the bull support power zone to the bull resistance power zone. Now, after that, something really interesting happened. On price, it was this nasty quick fall, okay? Similar to what we saw on that oil chart, right? A really quick fall, seems like out of nowhere. What do you do? How do you interpret it? Well, the difference is that here on the SPY, when that sharp fall happened, 2 weeks of price action wiping out, the past 10 weeks, sharp correction lower, what happened to the RSI? All it did was reset a little. It went from the bull resistance power zone down to the bull support power zone. Nothing to freak out about. And I was guiding my traders with the skinny on the mini and my education to help them make the most of it. And I said, everyone, relax, okay? We're going to probably have some sort of choppy trading from here. Watch for clues for if the uptrend resumes. And that's exactly what ended up happening. Choppy trading, which on a weekly time frame doesn't look like a lot, but on the daily, you had a lot of opportunities. Intraday, you could still trade this. It just wasn't a good long-term setup. You had to wait for all this to shake out. In this sideways range, all the RSI continued to do was push back down into the bull support power zone and hang out there. Then price broke out higher, okay? So this continues on, and it doesn't matter what type of market you're looking at, as long as it's active, it has, good amount of participation, and as long as it's plotted with a time. You guys type a Y for me if you're following this. That way I can show you more examples of more markets that you guys asked me about, my students asked me about, my members asked me about, especially during our review sessions. Okay, fantastic. All right, now we're going to dive into the trade setups tied to the RSI power zones. But first, let me share with you more results from our trading family. Susie shared, my first month using RSI power zones was also my best trading month so far. All right, by now you're getting it. Okay, so we're going to dive into my proprietary 3-step approach to using RSI power zones to find great trade setups. I'm going to show you actual setups that I use and share with my trading family. So here we're going to have the steps listed out, and then you're going to see example after example working through them. So step 1 in using RSI power zones to identify trade setups. is to first review the chart and assess the price trend. And now you might be like, hold up, Hima, just back it up a little there. You've been hounding the momentum. Why are you coming back to the price trend? Because price is king, guys, okay? Price rules your chart. Momentum indicators, like many others, are derived from price. You must always be aware of what price is doing. Now, here's the thing. You don't only have to trade in uptrends or downtrends. You can trade when the market's chopping around going sideways. You just better know which one of those three it's in. So just identifying the situation you're in gives you an advantage and makes you positioned to make the most of momentum. Uptrend, downtrend, or sideways, as per your chosen trading time frame. Next step, you want to evaluate the RSI power zones reading. So here, you want to actually look at where is the RSI value relative to those 4 power zones. What's the actual value? In which zone is it in? What zone did it just leave or is going to? That's the important step here, to look at the price trend and then the RSI movement. After that, you take a closer look at the two, price and RSI together, and you can determine the presence of an entry signal between price and momentum. If you identify an entry signal beyond just the movement between the zones, you have an even greater advantage at getting a winning trade or winning setup out of the market at that time, right? So let's put all this together, and I'm going to show you what I mean here. Let's change it up a little, okay? We did weekly, we did monthly, we did ETFs, we did commodities. How about we look at a stock on a daily time frame? I know a bunch of you in here are trading stocks in the daily. All right. So here's Netflix, okay? One of the stocks in the FANG, whether you go FANG, FAANG, it's a stock that a lot of people watch and a lot of folks trade. Now, this is a daily chart of Netflix. Each candlestick represents 1 day of price action. There is a moving average. That's part of a filter I use. And we have the RSI power zones on the bottom. So we're going to apply the same 3 steps I just taught you live on the chart. I want you to review the chart and assess the price trend. Well, how do we do that? I want you to look at the highs and lows in this market as far back as I've given you. So the first one that jumps out is this blue circle right here, okay? A high in price. Then there was a little bit of a wave down. We established this low. Ramped up, gapped in the middle of that, and made this new high. Corrected down to this low. Traded up again to this new high. And currently, as of this chart, at this low, okay? You guys give me your guesses in the chat box. Uptrend, downtrend, or sideways? All right, so we have a series of higher highs and higher lows with the current price action going in the opposite direction. So this is a situation where we are in an uptrend in price, but we have a corrective pullback in motion, okay, or a correction. All that terminology is the same. Great, so now we know what price is doing. Next step is to assess momentum. Evaluate the RSI power zones reading. Here, it's holding the bull support power zone. It's in between the 2 lower green lines, right? And that right there gives us information that we can use in the next step. We want to determine the presence of an entry signal between price and momentum, okay? And there is a signal here that brought your attention to not only this market moving between the zones, but actually producing a tradable signal that then led to this move higher, right? I have a whole training that dives into RSI power zones for true mastery, and I'll show you the signal in module number 2 because I cannot teach you everything you need to know within an hour, okay? It would do you a disservice. It would shoot you in the retirement. Yes, I said shoot you in the retirement, okay? Money isn't just money, guys, right? It's our blood, sweat, and tears, and for you, all that it took for you to go and make that. So you can't afford to lose it. And I'm here to help you maximize it. And of course, I can't teach you everything I've learned in 20 plus years in an hour. So don't do this at home without help. After all, it's what you brought you here today, right? If you could do all this without help, you wouldn't be here. So in a moment, I'm going to show you what you've been missing. And then we can take a look at how I can teach you more in depth. The thing is, guys, when this setup was happening, this exact setup on Netflix, I brought it to the attention of my trading tribe, and they were able to take advantage of it. I spelled out exactly what was happening, and they were able to take advantage of it and then go on to learn how to identify that themselves. All right, guys, I want you to type a Y for me for the chat. If you're still here, you follow what we walked through on Netflix and you want to see some more examples. Happy to do it, but I got to know you're here. So type a Y for me in the chat. All right. Now, before I move on from Netflix, here I showed you this, you move, but I didn't show you the money, okay? So what exactly happened here? Well, from the time I identified the signal, there was a low at $271.22, traded up to $423.21, 56% move higher based on the 3 steps that I just walked through. So let's go look at opportunities that emerge like that in other types of markets. Now, before we look at other types of markets, I want to show you a different type of signal that came up in a different daily stock chart. Again, a market you guys ask me about all the time, Twitter. So let's do our steps again here. 1, review the chart and assess the price trend. I see a little itty bitty high back here, formed this low. Now, this move between these second and third blue dots broke up into several pieces, the highest of which is the third blue dot, corrected to this low, traded up, many pieces, ultimately forming this high, corrected back to this low as of this chart. So you guys are getting practice at this. Is this an uptrend, downtrend, or sideways? Uptrend, downtrend, or sideways? All right, this is a lot like the Netflix chart. Okay, this is an uptrend in price with corrective pullback in motion. Now we move on to the RSI. Evaluate the RSI power zone's reading. Holding the Bullsport power zone. All right, so far it seems a lot like Netflix. You might be thinking, well, I don't really see what's different here. It's just the same example all over again. Oh, no, no. As it was happening, I identified a signal happening in Twitter where you could use price and momentum to actually calculate a price target. And it is tied to the trend of price, and it's tied to where the RSI power zones are. Okay, these all meld together. So on this date, April 10, I was able to calculate an upside target of precisely $39.13. And I did it live in front of all the students who were also deploying these methods with me. Here's what unfolded, okay, after determining this price and momentum signal. We got this move in price action. A low that had formed at 2660 that stayed in place. There were opportunities to buy dips after calculating the upside target, and the upside target was met June 5th. Okay, 47% move higher, all derived from understanding your price and momentum in the form of RSI power zones. Like I said, I've got a whole training that dives into all 4 of these RSI power zones and the related signals. Okay, I'm giving you the overview of what you didn't know that you didn't know, that trading and applying momentum can be simple when you follow the expert. All right, guys, making sense? Are you getting this? All right, I've got another chart for you here. Here we're going to mix it up a little. We're going to step away from stocks, okay? And I want to know, do I have any FX traders here? We're going to look at a different type of market. That's not what you hear about all the time, stocks, options, futures, okay? And here we're going to look again at a daily chart because that's a very common trading time frame for currency traders. Here we have the Swiss franc. We're going to apply the same 3 steps. Review the chart and assess the price trend. We have a high. For what I gave you, that's the highest high in the chart. Then this low, then this high. Lower low, lower high, lower low, lower high, lower low. What's the trend, guys? Uptrend, downtrend, or sideways? Right. Good job, Trong and John. You're probably more of you typing in there. Yes, this is a downtrend. This is a series of lower highs and lower lows in price. Okay. So far, we'd only been looking at uptrends. Now we're looking at a different market, a different type of trend. Next step is still the same. Evaluate the RSI power zones reading. Now, when you look at this line here, okay, the RSI is this black line in between all the different zones or in the zones at any given time. Where is it right now? You might think, oh, that's a trick question. No, it can be between the zones. And when it is, it's important to look at where it had been, okay, the path that it's carving out. And notice how, in line with this downtrend in price, RSI had moved from the bear resistance zone to the bear support power zone. Okay. This is all falling in line. Everything is kosher here, okay? Nothing's out of whack. Until you start looking really close, and then you can see, the RSI power zones and price are not agreeing, okay? And the details of the signal, again, are in signal module 2 in my course. But here, if you knew that something was up with this downtrend here, and I brought this to the attention of my traders, my whole trading tribe, actually, not even just members. I said, everyone, you need to watch this because this market is on the verge of a huge turn possibly. And this is what happened. And I don't even trade FX. All I knew was how to study price, momentum, and identify the signals. And this move that formed, okay, it got you ready to get out of the downtrend or at least stop selling. Then be able to participate in buying into this move that you can see surge higher. Now, the size of the entire move is the following: 0.9186 up to 1.0050. And for FX trading, there's lots of funky math and things like that. So I checked with one of my good friends, FX trader, and he was like, I wish I knew your approach when this was happening, because this on one contract was an $8,600 move. Now, I'm showing you this because these are all examples that I actually brought to the attention of people when they were happening. I didn't go back and cherry pick and say, what would make a nice textbook setup? And I detail all of this, okay? Because I'm very passionate about the work I do to provide traders with the best analysis and education to trade the market so that you can take control of your financial freedom and live the life you and your family deserve, right? So by now, with these examples, with moving through various markets, various timeframes, you know that power zones on the RSI can really boost your trading. Because whether you're new to studying momentum, maybe never used it before, or you've been doing it for years, this approach can really help you extract more profits from the market and be more consistent. And consistent profits, that's what it's about, right? That's what's bringing you here to find ways to boost your trading. So if you guys are getting this, I want you to type a Y for me in the chat if you want more consistent profits. Everyone here should be typing a Y because I don't know who doesn't want more consistent profits. All right. Love it. And that's the results our trading family loves to see too. Okay, like David. I installed the RSI Power Zones indicator, and it's just amazing how accurate it is. On all markets, it actually gives advance warning before the price moves. So let me ask you, did I provide value for you today? Did you guys learn? Are you ready for more? All right, awesome. Then it's time to master RSI Power Zones. So far, you've heard about how I've come to really benefit from using the RSI Power Zones. Okay, here's what more of my students have to say. I was very impressed with the education Hima provided that came with the indicator. Hima's RSI Power Zones indicator has become the standard in all of my charts, said Rob. Norman shared, a day after learning one of Hima's RSI Power Zones trend continuation entry signals, I tested it out on a 5-minute chart of Tesla. With this one trade, I made over triple digits, covering the cost of her newest course. I got your RSI Power Zones training, and the next morning on the market open, I found UNH as a short candidate using the weekly chart. By the time I sold the position, it nearly paid for the whole course. Thank you for sharing your knowledge and keeping your content reasonably priced, said Aaron. So will you be our next success story? Making sense, guys? Are you getting this? How simple it can be to trade when you have help? Great. So imagine and picture this. You finally able to turn your trading around and make money with trading and live the lifestyle you've always wanted. Giving back to your community the ways you've always wanted to, right? Sounds great, right? Spending all the time you want with your kids and grandkids. Great. So here is what I have got for you. This system that can give you all that is the 4 Zones RSI coverage system. Now, before I give you this opportunity, let me show you the features and benefits that using this system will give you. First, rapid results. Okay, you can learn to use the system in as fast as 60 minutes and you'll be up and running. That's perfect for any account size. $5,000 or $10,000, $100,000 or $1 million or more, you can trade this. You can pinpoint your trades faster so it takes less time. And you can get more profit because it's perfect to add to whatever you're doing right now. It's perfect for beginners, so easy that anyone can do it. Perfect for experts to diversify their accounts, okay? Because the RSI, 4 Zones RSI coverage system gives you all this. But first, who is this not for? Okay, this is not for those of you who are trying to get rich quick. Okay, like anything worthwhile in life, trading takes consistent work to get consistent results. So if you're here to play the slot machines, this isn't for you. So who is this for? This is for those who are ready to analyze the markets like the experts to optimize and boost their trading. Okay, this is for those who want to diversify what they're already doing for additional profits. This is for those who are ready to step up and take action for their own financial freedom. So since you're still sitting here with me, you're taking the time to learn to boost your trading, you're ready to take action now because it's time to remember what you forgot to remember. You can let it be easy. Now, in my 4 Zones RSI coverage system, I give you my 20 years experience on the silver platter. And it's 100% focused on step-by-step systems, instantly accessible starting with video tutorials, where I take you by the hand and you move through the 8 phases of a trade so that you can have a complete system to your approach so that you minimize mistakes. I give you my top RSI power zones trading signals from years of study and observation with various real-world examples across multiple markets and timeframes, just like you saw here today. I walk you through the best entries, exits, and protective stop strategies so that you can extract the most profit from the market using RSI power zones, and a whole lot more. Now, to make it even easier, you're also going to have cheat sheets that you can download and print out and keep right by your trading desk. Okay, this harkens back, guys, to like, I don't know why, it's middle school earth science, all right? You would learn about new concepts or formulas, and then suddenly you have a pop quiz 3 days later. And the teachers who gave you that aid, allowed you to come in with that half sheet of paper with your stuff written on it, they were helping you learn faster, okay? This helps you ace the test faster, learn faster. And so I want you to learn as quickly as possible so you can deploy all this goodness in your trading. So what does a cheat sheet look like when it comes to trading? Well, I have easy to read grids like this, as well as step-by-step strategies that are all filled out, okay? They're moving you faster on your path to boosting your trading account. And again, it's a PDF that you can print out, keep a paper copy, that's what I do, or you can keep a digital one on your trading desk. Now, you're gonna love this, okay? This is the very thing everyone's always pestering me to get, but I had to have it specially coded for you. I'm also including the RSI Power Zones indicator on a variety of platforms, including MetaStock, just added today, okay? So Jeff and the team helped me get that ready for you so that those of you here, especially many of you are MetaStock users, you will be able to seamlessly apply everything on the RSI Power Zones into your trading right away. Now, if you happen to also use additional software or you're still in the middle of maybe transitioning from another software over to MetaStock, no problem. I have this indicator available for all the most popular trading platforms. They're listed on the registration page, and you can download the indicator for as many platforms as you like, as many machines as you like, as many times as you like forever, okay? So let's say your computer breaks on you or you hand it off to somebody in your family, you gotta get a new one, no problem. You just go back in your portal and get the RSI indicator again. Or let's say, again, you decide to use more than one platform to meet different needs, no problem. Okay, I have had tons of traders email in and offer me hundreds of dollars just for these indicators alone, okay? But I'm giving them to you here as part of the complete system. And I've included everything to set you up for success. You've got video tutorials, you've got cheat sheets, you've got the indicator. Now, the only thing you could possibly still need from me is to take you by the hand personally and help you. So would you guys like that? Would you like if I like hopped on the computer with you and actually showed you live how it's done and answered your questions right there on the spot? Go type a Y for me in the chat if that's something you'd like to do. All right. Well, then I think that's a good fit because what I'm giving you here is everything including me. Monthly group coaching for life. Once a month, okay, you'll get together online with me personally, and we'll spend an hour together. And I'll personally walk you through the markets, doing analysis with open Q&A, and taking your ticker requests of the markets you trade to help you become the trader that you want to be. All right, is this making sense? Would you like to get your hands on that? I mean, time with me every month. Fantastic, all right? I've got it all ready for you. Now, your next sessions will be listed in your portal. These sessions are also going to be recorded so that if you ever have to miss one, no problem. You have access to the recording and you can review it on your own time. Okay, these sessions are designed for you to get my expert analysis live. So the 4 zones RSI coverage system with the on-demand video tutorials where I take you by the hand through how to best trade with the RSI power zones is valued at $1,997. The cheat sheets that you can use as a daily trading guide are valued at $197. This lets you learn the system faster and more easily. Now the monthly group coaching live, all right, this is priceless, but if I had to put a price on it, this is easily $797 for just the first couple of months because I easily charge $500 an hour for my one-on-one coaching. But here you get me for life. And the RSI Power Zones indicator, available for the most popular trading platforms, new today with MetaStock, with free updates for life, any other versions or upgrades, we include them, is valued at $497. So the total value is $3,488, and it's worth every penny. And let me ask you, if all the system did for you is help you to trade an additional market this week, would it be worth it? Yes. If all the system did for you is help you finally make money trading with momentum, would it be worth it? Absolutely. If all the system did for you is help you make so much money with trading that you can quit your job, travel the world, and live the lifestyle you deserve, would it be worth the investment? Of course. So the total value of this system is $3,488. Because I want you to make an investment in your future, okay, because I want you to see a return on your investment fast, for a limited time, I'm making the system available for one low, easy investment of $297. And you can sign up at himareddy.com/RSI. I'm going to make it even easier for you. When you click on the link and you invest in the system today, okay, I'm going to give you all this because I want to see you finally succeed in your trading. So I'm giving you our personal 100% satisfaction buy it back guarantee. Okay, I want you to take action now. Use the complete package for 90 days. I mean, wear the tires off the thing. And if you aren't 100% satisfied with your investment, then I will give you your money back as my gift to you. Okay, I want you to be 150% satisfied with the 4 zones RSI coverage system. So after all, my clients, they tend to stick around a long time and become my friends too. So I want you to follow the whole system. I want you to get out there and treat it like a rental car, guys, all right? Put it through its paces, drive it all over, wear the tires off the thing. And if you don't feel like you've gotten far more than your investment, then I will hop on the phone with you personally, work with you. And what I really want is for you to be totally satisfied. And that's what we guarantee. And if that still hasn't happened, then I'll give you your money back. Simple as that. Again, the total value of the system is over $3,488. And for a limited time, I'm giving it to you for the simple, easy investment of $297. So you can go ahead and take action now. You can go ahead and visit himareddy.com/RSI. I'm still here, got 12 more minutes with you in the room here, and I'm going to go ahead and take your questions. And I also want to show you exactly what happens when you join us. Okay, you'll immediately get a login access email with details to enter the RSI Power Zone system at my educational portal. And once you do that, you're all the training you need is going to be right here. See, 4 zones RSI coverage system, where you can get to it easily. I mean, there's even a start here button. You don't have to try to figure out where to go. It's all laid out for you. And what's all this other cool content? That's all undisclosed bonuses, and you're going to love it. Okay, we love to over deliver. So you guys need to take action now because this offer is not available for long, right? Especially with the fact that we've got the MetaStock indicator out today. Once you go ahead and get signed up, I'm here answering your questions, and this offer ends at 10 p.m. Eastern. Now, I'm going to open up the question panel here, see what you guys have to ask me, and make sure that I can help you get started easily, okay?
All right, Hima, how are you?
I'm good, good.
We
I'm
love
just
it.
checking for the questions here or making sure that everybody is sorted out. So I've still got some time here, yeah?
Yeah, of course. I just wanted to bring your attention to two things on YouTube. One question
Sure.
that we're getting from YouTube and GoToWebinar is, can you show the phone number again?
Well, we have a website.
Okay.
That's himareddy.com/RSI. It's right at the top here.
Oh,
I
I
can-
see it. I was looking at
Yeah,
the
sure, I can
bottom.
just
That's
circle it.
there you go.
No problem. I used to use GoToWebinar back in the day. I think I know how to use the highlighter. Here you go. Does that help?
Yeah, that's better.
Okay, great.
Scott Guest says the RSI Power Zones is very helpful and nice. So we did have that comment that came out of YouTube.
Oh, terrific.
In
So
a-
somebody who's been using it already?
I suppose so. He says it was neat.
Oh, okay. Great. So that's awesome. So any other YouTube questions, Jeff, before I help out the folks in the room here?
Yeah, we have one from Van Long in
Okay.
YouTube. He said, just want to make sure the price is a one-time payment, right?
Yes, that's an excellent question. So this is a $297 membership for life. So you get the 4 Zones RSI coverage system with the on-demand video tutorials, any updates I ever make to them, which I have done in the past. You get grandfathered in, no additional charge. The cheat sheets, if I decide to add one new or make any other additions or improvements, again, you get those, but they're all ready for you to deploy. Monthly live group coaching. I mean, I've been doing this for years and I'm not going anywhere. So once a month, forever, as long as this product is out there, again, it's not going anywhere anytime soon, you get me. You get invited to a webinar. We get online, and I'm going to show you here in a minute. I got 9 minutes left. As I answer your questions, I'm going to show you guys how I analyze charts. You get to see what does it look like when a Wall Street analyst, goes rogue, okay? But how it can help you. And the RSI Power Zones indicator, yes, today we have it new for MetaStock, Chris. We have a template which Jeff helped put together, which I really appreciate. And this is my first MetaStock event, so I want to make sure we had that for you guys. And the MetaStock template has a little extra bonus that I think you'll appreciate. It includes my moving average filter. So my moving average filter is completely explained in the course. Anybody can add it on with their moving averages, but the RSI Power Zones are programmed to make it easy. So you have the zones in the right place at the right time. Trust me, it's a major, major convenience, okay? Gail, the other platforms, if you go to himareddy.com/RSI, you will see everything that's listed. Okay, out of respect for MetaStock and Jeff, I'm not going to talk about other platforms here now, but they're all listed there. And I understand, you're not necessarily using one. So you can see them there. Great question, though. And so what happens is after you guys sign up, when you go into that portal, when you get your login info, there's a section of where to download the indicator. And for every single indicator for every platform, there are specific instructions as well as the actual file. And if you have any issues, you get to get help from our team anytime. Okay. We take a break on the weekends, but besides that, we will get back to you as soon as we can after you reach out within a business day or so. And the indicator is the RSI Power Zones that I've been talking about all afternoon here. So Steve, great question. So he's asking, how can RSI Power Zones help me with trading, understand candles and reversal signals and other momentum? So Steve, I have a whole approach and I include the best candlesticks that work with RSI Power Zones based on my experience, which is vast with a variety of technical analysis indicators. Remember, I worked on Wall Street. I had to get that CMT. I had to know a lot of stuff before I really drilled down to a more streamlined system. Okay. I think somebody asked, yes, Mark, yes, this is on Sierra charts. I mean, if you ask me about a specific platform, I'll tell you if we have it. All right, so to be clear, this is a one-time membership of $297. You will not be charged again. This is a membership for life. And I have some examples of me looking at the markets using RSI power zones. And these markets are hot off the MetaStock press. Jeff gave them to me on Friday very graciously. He was very swamped and very busy. And of course I was like, hey, can I have all the FANG stocks, please? And he said, sure. So let me show you them so you can see this in action. All right, you guys want to see FANG stocks analysis in 5 minutes? Type a Y for me. And keep asking your questions. I can do both. Okay. Chris, an indicator without training on how to use it is not to your benefit. Trust me, I've learned that the hard way, okay? So in this situation, you're getting the indicator and the education all at the same time, and it's designed to use it in conjunction. Gail, your question's a good one. The deep explanation of the RSI power zones goes into why and how it's different from the original and you know what that benefit can be for you. Okay, great. I'm seeing John and Brendan and Steve and George and Mode and Z. Lots of folks want to see the market. So let's take a look. To the charts. I fancy myself a superhero now and then. I'm super into the comics, the superhero movies, all of that. So let me keep this highlighted here. So you guys know you can go to himareddy.com/RSI. And as Edwin, we have this for MetaStock, but we have it for a variety of other platforms. If you go to himareddy.com/RSI, yes, we have it for TOS, TJ. Okay. If you're having any technical issues, then don't worry. My team is there at support@himareddy.com to help you out. Okay. Remember, this is available till 10 p.m. Eastern, so make sure you get your spot. So here is, let me go get my proper cursor. All right, here is the beautiful chart Jeff gave me of Facebook, okay, into Friday. Now, I want to tell you something. What we have here with the RSI power zones and my moving average filter, there's a very good looking signal here going on in Facebook, all right? And I teach you how to identify that signal. You'll see that in module 2, and you'll be able to come and calculate the upside target that I'm going to calculate for myself on Facebook. Because I had looked at this gap down that happened a couple weeks ago, and it was unclear as to whether the RSI power zones wanted to really push deep into the bull support power zone, like test it again, or if this was going to be it, it was going to go sideways. Here it is going sideways. All right, so asking for the link here. So I think I can type it in the chat, no problem. Make it a little easier for you guys. Did that come through in the chat? All right, so that's what I got to say about Facebook. Let's look at, I'm watching the clock and I'm watching your questions. Apple, okay, Apple has been a very interesting beast here, right? So with Apple, I want you to look at the way that the RSI power zones lifted into the bull resistance power zone. And look, during all this sideways trend, yeah, up higher highs and lower lows, the most confusing price action of all time, right? What's going on here? All this is a time pause in the market, meaning instead of a downward correction, it's a sideways correction. And it's just getting its bearings from coronavirus and everything else going on in the world. And all that RSI power zones is doing, it had returned to not only close to the bull support power zone, but also to a previous oversold level, like a comparable oversold point. And the last time RSI was here, look at how it lifted off, okay? So I would be on guard for closing upside breaks in Apple. And again, in our monthly review sessions, I go deep into this. And I don't just show you the RSI power zones, guys. I deploy my full basket of trading analysis. And if you're there with the RSI power zones education, you'll understand that right away. And if you want to learn anything else, we'll let you know how. But I give you my full analysis. I don't just pick and choose. I share it all because that's how analysis should be done. And everything I offer can be layered, one on top of the other. Meaning, if you're using another indicator, you're going to love using RSI power zones with it. No problem. Okay, you can layer one on top of the other. So I want to make sure I respect the clock. So let's see. We've got a couple more questions coming in. So the link is himareddy.com/RSI. Now, if you want to put www. That'll be working. The website is working because I do have new members my team is telling me about. I want to keep privacy here, but one person's name starts with an S, another starts with an A. You guys are able to sign up. So if you're having issues, guys, I recommend if you're using Google Chrome or Internet Explorer, sometimes your system is just so backed up and backlogged. Try an incognito or private window. If it still doesn't work, email support@himareddy.com and we'll help you out. Okay. All right. I got 1 more minute. Let me do one more
Hi, Hima.
bang stock here.
Hima.
So here we've got Netflix. Oh, Netflix, like I talked about before, up and away. Okay, it's running up to the upside. It's still on track to extend up into the bull resistance power zone. So I don't have anything new to say about Netflix. If you're not long, don't try to get long necessarily now. The link I typed in is wrong. All right, Chris, thank you. Let me try one more time and then I'll make sure I hand
Hima?
everything over.
Hima, can you hear me?
Doesn't look wrong to me, but you know what? I'm going to make sure you guys are all set up. So I'm going to give you the, I see the time. I'm going to hop off in 1 second, Jeff. Just bear with me. There seems to be a little bit of tech issue. So in the room here, I'm going to drop the actual underlying link here to make sure you all are set. And then I'll be on my way. All right, so just give me a moment here and we'll get that over. Oh, I had it on the side because I had a feeling something like this could happen, but that's okay. All right.
Hima.
Yes.
Oh, there you are.
Yep, I got it. I'm gonna get out of your way here. Okay, guys.
No,
here it
I'm
is.
not kicking you
dropping
off.
it
I wanted
you.
to let you know that I think the issue people are complaining about is when they go to, there's a box on there that says, I agree to the terms and conditions. I'm not able to actually check that box. Oh, it finally worked. Huh.
Yeah, I see it. Like I said, I see some members coming through. So what happens, guys, is that you have to fill out the page and then that will open up for you to be able to use. I mean, we've used this sign up registration page many times. So you can't do it until you put information in. It's to prevent you from accidentally proceeding with things. But if you're still having issues, don't worry. I will have my team be helping you out on our support desk. So just email support@himareddy.com if you're having issues, or visit himareddy.com and you can get to our contact page from there. But I want to respect the time here. So Jeff, were you able to get it clicked now after another attempt?
After a try or two, yes.
Okay. All right. Well, like I said, guys, sometimes tech happens.
Yeah,
Maybe there's
right.
so many of you coming to sign up that it's getting a little backlogged, but you've got till 10 p.m. Eastern, okay? Do it carefully and make sure you take action today so that you can get your spot. And yes, Andy, thank you. Once you click that you agree to the terms and conditions, which are at the bottom of the page, okay, I already told you you have a 90-day money-back guarantee, but if you want to scroll all the way down, then you'll see privacy policy terms and conditions. You can read them if you really want. And if you do, either way, once you click, then you get a chance to submit. This is by design. I'm trying to protect you and make sure that you know what you're getting into. But I'm telling you, and it's there, 90-day money-back guarantee. Take the system out, do everything you can for it. If you're having issues, you email in. And if we can't help you with a personal phone call from me, no problem, you get your money back. All right? So sorry I went a little bit over there, but looks like there was a tech issue and lots of folks wanted to get on board. So thank you everyone for being here. It was a pleasure and hope you have a great rest of your MetaStock Online Trader Summit. And thank you so much, Jeff. Really appreciate it.
Thank you, Hima. It was good to have you. We appreciate your coming in, and we're rounding the corner. That was great. We appreciate it. And
awesome.
So what is your, one last question though, what is your
Sure.
superhero name?
That is a great question. I don't know. I mean, I'm partial to like Superman and Supergirl, so I guess just Super Hima. I don't know.
Okay, there you go. I was going to let you come up with an answer next time.
But I didn't get quite that far.
All right. Very good. Thank you very much, Hima.
All right, thanks.
We'll see you at the next one.
Mm-hmm.
Good. All right, guys. One more to go. Hope you're still enjoying it. Hope you're still having a good time. I thought that was awesome that we were able to get Hima's code put together for MetaStock. It actually was pretty easy. Like most things that work pretty well in the market, it's very, very straightforward to get it ready for. So in any case, for those of you that are asking about that, if you do sign up for the Hima Reddy course, you'll just get her indicators as part of it with MetaStock. Basically, it's just a template you apply it. It's that simple. We did have some questions about, hey, is there scans that work with this and that kind of stuff? And the answer that I put in there was a very shifty not yet. But I'm actually going to be going through her training over the next few weeks to see what we can further do to automate it. So no announcements to make yet. I haven't done any real look at it, but it looks promising. I do want to remind you that we do have the MetaStock Summit Traders Pack. It includes MetaStock Real Time, MetaStock Zenith, all of our most popular add-ons, Unleash the Power of MetaStock, 2 years of stocks and commodities, and it's a more than a 50% discount. Today you can get it for like $19.45. Give us a call at 800-882-3040 or chat online with us at metastock.com/saleschat. And I do want to thank 2 more times probably Stocks and Commodities Magazine for supporting the Traders Summit. It's been such a great event. We've had thousands and thousands and thousands and thousands of traders come through here over the years, and it's been great. I hope you enjoy it as much as we enjoy doing it. So, and let's go ahead and talk about our last presenter, Stan Freeland. Greg did this to me. Stan Freefield. So Stan is Stan's going to be talking to us about options and option strategies. Stan, I just unmuted your microphone. How are you doing today?
I'm doing great, Jeff. I've been listening to the speakers before that spoke before me, and very, very informative.
Yeah, I think we're doing a pretty good job. What do you think?
Yeah. Oh, yeah. Very, very nice.
Ray asks, what time does Stan go on? That's a question.
Right about now, I think.
All right. Well, let me go ahead and I'll let you introduce yourself. I want to say welcome. This is I think the second time you've been to an Online Trader Summit. So you were good enough to come back.
Well, that's very kind of you. Thank you, Jeff.
All right. Let's go ahead and get the presentation, get the screen over to you. Yes. Okay. And I will let you know when I can see it, and we'll get going.
Do you see my screen now? You should be able to.
Looks great, and I'm out of your way.
Terrific. Thank you.
I forgot one little programming note.
Sure.
We are simulcasting this to YouTube. And the reason that that's important is YouTube has a run limit of 8 hours exactly. So at 4, I'm not sure what happens if you go over at 4 o'clock here or 6 o'clock Eastern time, but we can always find out. You might want to be aware that we should probably end it before 4.
Before 6 for me.
6 Eastern, yes.
Yeah. Okay. I'm on the East Coast.
Okay. All right. It's all yours.
All right, let me get going then. So I want to thank everybody for attending the summit, and in particular my presentation. If you're on the East Coast, I hope I'm not interfering with your dinner. I'm going primarily to talk about delta neutral, but along the way, I'll point out some interesting aspects of options and options trading. Maybe a couple of things that you're not going to see in too many other places. During my presentation, there are lots of calculations. I'm kind of a numbers guy. And I think you'll get the most out of it if you try and follow the math and do the calculations. I'll answer questions if I see them coming in, but that might be a little difficult. Plus, I do have a lot of material. I'll try and answer questions at the end as well. But if I don't get to them, feel free to send me an email. I'm going to give you my contact information, and I'll give you a personal response. Okay? All right. So I'm going to get going because I do have a lot of material here to cover. So All right, so here's the outline of the presentation. First, I'm going to tell you who I am and why it might make sense to listen to me about option trading. I have a disclaimer, which our attorney said we need to have. I'll give you some general thoughts on options trading. And then the Greeks that we need for purposes of this presentation. It's not going to be a complete presentation of the Greeks, but it'll give you a good handle on them. And also, then we'll get into what delta neutral is. And I have a bunch of things that I'm going to talk about, including an example I think that you'll find pretty interesting. And then the company that I work with, which is Macmillan Analysis Corp, MAC we refer to it. It's Larry Macmillan's company. We have some specials, and I'll show you the contact information again. All right, so here's a picture of me when I had hair in the good old days, and that's my floor jacket. I was a floor trader and an official of the Amex, the American Stock Exchange. You can take a very quick look over at this, and I know our session and all the sessions have been recorded, so you'll be able to look a little more closely if you should care. But basically, I was an actuary, sold a pension consulting company, or part owner of, and we sold it. And I used the proceeds to go onto the floor of the Amex trading. And I was trading my own account. I didn't have any boss, well, aside from my wife, of course. And yeah, and that was great. I left right around 9/11. I was an official at the time, and I knew almost all the guys and girls really on the floor. There were probably 864 seats on the Amex, and 9 guys were killed that day. And I just left the floor, closed out my accounts, and I started a mentoring program. I called Larry Macmillan, who's one of the best known and most respected traders. I didn't know him personally. I knew about his book. And I said I'd like to start a mentoring program. And he said, let's get together for lunch. And kind of the rest is history. That's about it. Here's my contact information. I'm one of those crazy guys. I love talking to option traders. I love talking about options. My kids tell me I need more of a life. Maybe they're right. But I do talk a lot about options. Feel free to call if you have option questions, or particularly about this webinar. Also, here's my email, stan@optionstrategist.com. We also have a VP of mentoring, and if anybody's interested in my mentoring program, you could contact him directly. His name is Ed Schramm. Here's his phone number, and it's ed@optionstrategist.com. Our emails are really simple. And then for the specials that we have and some other information, just go to optionstrategist.com/delta neutral. Okay. Here's the disclaimer. Well, I was told to read it, but the presentation is for educational, informational purposes only, should not be construed as a solicitation to buy or sell options or other securities of any kind. We're not advising or recommending the use of the strategies or techniques described. There are multiple risks inherent to options trading, and it may expose investors and traders to potentially rapid and substantial losses. You agree that Macmillan Analysis Corp. And Stan Freifeld in particular, right, is not liable for any trading losses or other consequential damages you may incur. And option trading isn't really suitable for everyone. You want to make sure that it's right for you. There are a lot of risks. And here's a brochure that's put out by the Option Clearing Corporation that talks about those risks. All right. Here are some thoughts on options trading, and I don't want to scare anyone, but a lot of retail traders end up losing money. This is, and I've heard very high numbers, numbers that into the 80s, 80%, just a very high number. And I think part of the reason is that they're not really trained very well. They think the stock's going up, I'll buy some calls. The stock's going down, I'll buy some puts, and that's about it. And there really is a lot more to it. It's a zero-sum game. It's very competitive. Everybody wants to take your money in trading. I mean, that's the bottom line. Think of it as a competition. That's how I think about it. I may not sound like it, but basically I'm a pretty competitive person. And that's what I think option trading is. And I guess most trading is like that. I'm most familiar with options trading in particular. And the thing is, we don't create anything when we trade options. It's not like for example, a baker who puts a lot of ingredients into a pot, mixes them up, and ends up with a cake that's worth more than the sum of the ingredients. Whatever we put in is what comes out. And some would even say it's a negative sum game because of the expenses, although those have come down a lot. Option trading is also complicated. It's not rocket science, but on the other hand, it's not arithmetic either. So you really have to think about what you're doing. And if you're doing it just willy-nilly, you're going to lose money. I mean, I've been around a long time doing this, and that's what I'll say, and I'll stand by it. And also, we need to use all the tools that are available, because just imagine that, or assume that your competition they're using everything that they have, and it gives them an advantage over you if you're not using the tools. Now, what am I talking about? Well, some things that we have to know as option traders. We certainly have to know the basics. You need to know the definitions, what's in the money and out of the money, and all the moneyness of an option, American style, European style, exercise, assignment, all those kinds of things we need to know. But some other things that maybe aren't as obvious, synthetically equivalent positions. I spend a lot of time in my mentoring program teaching people about that. But a lot of people who are casual option traders, they don't understand that. Meaning, for example, long stock and a short call, that's the same thing as a short put. And I prove it 3 ways: graphically, algebraically, and then numerically. Long stock and a long put. Well, synthetically, that's a call. That's just a long call. Things like that, very important, because we could substitute one position for another position. You have to know how to do gain-loss calculations. There are people who have complicated positions that they've put on over a period of time, and they don't know if they're making money or losing money. They're making money on one option, but they're losing it on another option. They don't know if they want the stock to go up or down, or volatility to increase or decrease, or if time going forward helps or hurts them. These are things you have to know if you want to be a successful options trader. Put call parity. I have something, it's the equation of put call parity. I call it the beautiful equation because it's that important. And it relates the price of the put to the price of the call to the price of stock. And it gives you a gauge to tell if the call or a put is trading out of line with the other one. If the call is too high relative to the put, or too low relative to the put, etc. You have to know about volatility. And there's at least 3 different types: historical, future predicted, and the very important implied volatility. And you have to know the Greeks. And knowing the Greeks is actually very critical. It's when people don't use the Greeks, in my mind, it's like they're driving a car without having any gauges. You wouldn't drive, I imagine most people at least, right? You wouldn't drive a car without a speedometer or without a gas gauge or something telling you that you don't have any oil pressure. That's what the Greeks do. And be assured that your competition is using the Greeks. They know exactly what's going to happen. They know exactly what they want to happen. And sometimes you can't tell. So this is just a list of things I put together that I think are kind of critical to know and understand. It's not a complete list. We could go on. I could spend a whole hour just talking about these kinds of things that we need to know. All right, but now to get on to the real presentation. To understand what delta neutral is, we need to know, well, I just said that we need to know the Greeks, and there are two that we're going to need to know for the example that I do today. And the first is delta. The general definition is that delta is a change in the options premium relative to a 1-point change in the price of the stock. For those who might be a little bit more mathematical, it's really the first partial derivative of an options premium relative to a change in the price of the stock. And I'm not going to go into it right now, but there's a reason why I give both of these definitions, because sometimes the mathematical definition explains why in practice, some things that we expect to happen based on delta don't really happen. And it's a whole issue of continuous functions relative to discrete functions. So, all right, but the other Greek that we need to know for today, for this purpose, is gamma. The general definition is that gamma is a change in an options delta. It's not a change in the premium of the option. It's a change in the delta relative to a 1-point change in the price of the stock. The more mathematical definition is that it's the second partial derivative of an options premium relative to a change in the price of the stock. And some people might consider, if you consider delta to be speed, then gamma would be acceleration. Okay, if that makes sense to you. So that's really what's going on with these two. And I've heard people say, oh, as long as you know delta, you're okay. Gamma's not important. Well, I don't think there are any professional options traders who would agree with that, because sometimes we'll base our whole position around gamma. Do we want to have a positive gamma position, a negative gamma position, or a neutral gamma position? So it's important, and or at least I think so. All right, here are the other Greeks that come into play. We're not going to need them for this presentation, but I couldn't help myself. I just wanted to make sure you know what they are. Theta, changing the option premium relative to a change in time to expiration. And the T for theta and the T for time, that might be a good mnemonic for you. Vega is a change in the option premium relative to a change in volatility. We have the V and the V, the T and the T over here. And then rho is a change in the option premium relative to a change in the risk-free interest rate. I guess we could use risk-free or rate to go with rho. So that's how you could remember them. But today, we're going to concentrate on delta and gamma for the trade that I show you. Delta and gamma are really, they're both percentages. The delta for one option can be shown as 85% or 0.85. But the delta for one option contract, and as an ex-floor trader, that's normally how I think of it. I think of using delta for hedging purposes. Since it represents 100 shares of stock, we multiply by 100. So I would say the delta for one option contract in this situation would be 85, for example. I refer to that as ESP, equivalent stock, or equivalent share, some people say. ESP, but equivalent stock position. Okay. So yeah, so this, if you had one option with an 85 delta, one option contract would be equivalent to about 85 shares of stock. Now, of course, it doesn't stay at 85. Stock would always stay at whatever it is, which is 100, but the delta is going to change as the stock price moves. That's what gamma is going to tell us, how much the delta changes. All right. Delta of long stock is always 100. Delta of short stock is always negative 100. Delta doesn't vary with the price of the stock. That's not an obvious thing. So 300 shares of a $5 stock represents 300 deltas. 300 shares of a $50 stock represents 300 deltas. The price of the stock isn't material in terms of how many deltas are represented, okay? Now, here's a question. I ask my students this: what's the delta of cash? And a lot of times, they'll say 100, and it's really 0 or maybe even NA, because think of it, if you have $1,000 in the bank and IBM goes up $1, well, how much money do you have in the bank? Oh, hopefully you still have 1,000, right? It doesn't change. So there's no concept of delta for cash. All right. So let's talk a little about call deltas. Since call premiums increase as the price of stock increases, call deltas are positive. If we have a deep ITM that's in the money, deep in the money calls have deltas of approximately 100, and they're going to act like long stock. At the money calls have deltas of approximately 50. So two of them together would act as long stock. And if we're far out of the money, OTM, far out of the money calls have deltas of approximately 0. And short calls have negative deltas. So long calls have positive deltas, short calls have negative deltas. All right. What about puts? Puts work in the opposite direction. Put premiums decrease as the price of stock increases. So put deltas are negative. A deep in the money put has a delta of approximately minus 100, and it's going to act like short stock. An at the money put will have a delta of approximately minus 50, and far out of the money puts have deltas of approximately 0. Short puts have positive deltas. Okay, long puts have negative deltas, short puts have positive deltas. All right, now, what's the relationship between the put and call delta? Well, if you're familiar with synthetics, and I told you, very important, but if you're not, long stock plus a short put is equal to long stock. A long call plus short put is equal to long stock. What does that mean, by the way? Well, it means that if we have a position and the long call and short put are the same strike price and same expiration, but if we put that position on, it will make or lose the same amount of money as if we just bought stock. Now, of course, the investment will be very different, the margin will be different, but the dollar amount of gain or loss will be the same. Assuming the pricing is correct, they will be the same. So anyway, the way I normally show it, I'd say call minus put. The long call is positive call, the short put is minus put, is equal to stock. And then if we think of this as an equation, right, it's not a numerical equation, because numerically it won't work. But if we think of it as an equation, a synthetic equation, let's call it, and we take the delta of both sides, the call delta minus the put delta is going to equal the stock delta. And I already told you the stock delta is always equal to 100. So we get call delta minus put delta is equal to 100. It's kind of an important relationship to know. I don't know if we're going to use it here today, but it's certainly an important relationship for any options trader to know about. All right. Here's how delta works. How do we actually use delta once we know it? So if P is equal to the option premium and D is equal to the delta, and M is the stock movement, a plus for an increase, a minus for a decrease, then if nothing else changes, just the stock moves, meaning not a lot of time has gone by, volatility hasn't changed, the new option premium is going to be calculated like this. We take the old option premium and we add delta times the amount of the movement. Now it's pretty straightforward to do this calculation. The only thing that you need to be a little careful about is the signs. Any one of these can be positive or negative. So the delta could be positive or negative. Remember, it could be a put or a call. It could be long or short. The movement, obviously, a stock could go up or down, plus or minus. And the premium could be either a debit or a credit. It could be, if you're long or short, you have to take that into account as well. Okay, so I think we know this, a positive number times a negative number is going to be negative, but a negative times a negative is positive. Okay, so I think that's clear. All right, so here's an example of how it works. We have a stock at 37.5. The Jan 35 calls are worth 375 with a delta of 0.7 or 0.70. All right. And so if the stock changes, the stock here went down $1 to 36.50. This is how we calculate the new premium. It's the old premium plus delta times the movement. And this is what the new premium would be based on the movement of the stock. Okay, and you could see if the stock went up 20 cents, we'd just put a 0.2 in here. Here it's a -1, here it's a positive 0.2. And if the stock went up a full dollar, we'd go up by the amount of delta, or 70 cents, all right, to 445. Okay, and if you have questions on this, you could send it over, because I am glancing occasionally at another screen. I have multiple screens in my office here. And I'll try and catch them if anyone has a problem with the numbers. All right. How the puts work? Well, same thing. Now the put delta is negative. So a similar example, the stock is 37.5. The Jan 35 put is 90 cents. Now the delta is negative 0.3. Remember the delta for the call was positive 0.7. So we have 0.7 or 0.70 minus a minus 0.3, oops, and that's equal to 1. If you'll excuse my writing, my poor penmanship. All right, so if the stock goes down here, down $1 from 37.5 to 36.5, you could see what's going to happen. Now we have a negative 0.3 times a negative 1. That's positive 30 cents that we add on to the 90. We get the $1.20. Okay, same thing here. Now we have a negative times a negative, but and this one, it's negative 0.3 times positive 1 is negative 30 cents. So with the stock going from 37.50 to 38.50, up $1, the put is going to go, oh, excuse me, the put premium is going to go down 60 cents, down to 60 cents from 90 down to 60. All right. All right, so here's something I thought this would be interesting for you to see. It's very counterintuitive, I would think. So I have an implied volatility. IV stands for implied volatility, and T is and there's 6 months to go to expiration. And I have two different stocks: XYZ at $10 and ABC at $200. And so I'm saying the Jan 10 call. It's the same volatility, same time to expiration. The Jan 10 call would be 75 cents. The 200 call in January would be $15. Both have the same delta of 57. Now look what happens if both stocks go up $1. Well, that's a 10% increase for XYZ and only half of 1% for ABC, right? But both premiums will go up by 57 cents. So that's a 76% increase for XYZ. It was 75, it's going to add 57, whatever that is, I guess $1.32. Yeah, $1.30. And this one is going to go from 15 to 15.57. So that's only a 3.8% increase. Very, just not counterintuitive. At least I don't think it is. I mean, I understand it. I'm sure we could all understand what's going on, but it's not something you would expect, or at least most people would. All right, how do we change the delta of a position? Well, we could get positive deltas to a position 3 ways, right? We buy stock, we buy calls, or we sell puts. That's how you add positive deltas to a position, meaning you're making it more bullish. Adding deltas makes a position more bullish. All right, how do we add negative deltas to a position? Well, we sell stock or short stock. We buy puts or we sell calls. We've made the position more more bearish by doing any of these 3 things. Okay. A question did come in, and they said, if you think you know the direction of the market, is using a synthetic your best bet? Not necessarily. Okay, they're equivalent positions. And so one isn't necessarily better than the other. It depends on what the price of the put and call is relative to the price of the stock. It's not something I could explain right now. I do go through it in my course, but yeah, but that's the answer to that question. All right, so what about gamma? So the gamma of long options is positive, gamma of short options is negative, gamma of stock, long or short, is always zero. And when you think about it, gamma is the change in delta, right? So we said delta is always 100 for stock. 100 minus 100 is zero. Some would say NA, but zero to me makes sense also. Corresponding puts and calls have the same amount of gamma, same expiration, same strike. Puts and calls have the same gamma. That's an important thing to know. At the money options have more gamma than either out of the money or in the money options. And as time to expiration decreases, the gamma of the at the money options increase and it becomes very large prior to expiration. Okay, so you get a lot of gamma as you get close to expiration if you're long options. But on the other hand, if you're long options, well, they decay, right? So the decay when you're very close to expiration is very high. You have what we would say is very high theta as well. So everything that we do is kind of a balancing act or a compromise, if you look at it that way. All right. Sometimes I prove this to you. I'm not going to have time to do it right now, but we can prove that the call gamma is equal to the put gamma. We use the beautiful equation to do that. If anybody's really interested, wants to know, they could send me an email, and I'll prove it for you. Or you could take my course too. That's always a great alternative. All right. How does gamma work? We have a similar type formula. If D is delta, G is gamma, and M is the stock movement, we calculate our new delta this way. We take the old delta and then we add gamma times the amount of movement. Okay? I'm going a little quickly because I want to get to the real example by the end of the time that I have allocated. So, all right, here's an example of how gamma works. We'll just look at one real quick. With the stock at 37.5, the Jan 35 call is 375, delta is 0.7, the gamma is 0.04, and take a look. If the stock goes down $1, we calculate the new delta this way. We just multiply the gamma by -1, the change in the movement, change in price is -1, and we get 0.66. And the other two are very similar. Okay, and then the gamma of puts, well, it's the same thing. And as long as you don't get confused by the negative signs and the negative times the positive, it works the same way. So here, from 37.50, the stock goes to 36.50. The delta goes from, it started at -30, and then we have to add 0.04 times -1, stock went down, and that gives us a new delta of -0.34. Okay, now how do we combine deltas and gammas? And by the way, this is also true for the other Greeks, but for today we're talking about delta and gamma. We just multiply the number of they're additive, so we multiply the number of contracts by the delta and by the gamma. So I have a made-up position here. Don't read anything into this made-up position. I'm long 10 Jan 35 calls. The delta is 60 and the gamma is 7. I'm short 8 of the Jan 30 puts. Here's the delta and gamma. And I'm long 10 of the Feb 40 puts. Here's my delta and gamma. So I multiply to come up with my position delta. 10 by 60, that's 600. 10 by 7 is my gamma for 70, right? For this first put position, -8 times -25 is 200, positive 200, no less. So this position, by the way, will act as if it were long 200 shares of stock. Well, it's a short put, right? So we expect, we want the stock to go up when we're short a put, and this kind of shows us it'll act like 200 shares of stock. But it has negative gamma, the -8 times +3. And over here, we do the same calculation. We then add them up and we say our position delta is 300 and our position gamma is 86. What does that mean? It means the position is going to act like 300 shares of stock over a small range of stock prices. So if the stock goes up 50 cents, we'd expect to make about $150. Okay. It doesn't mean if the stock goes up $10, we're going to make 3,000 because the deltas are changing. We have this gamma over here. Oh, excuse me. All right. All right. So what is delta neutral? That's where we're headed, right? For our purposes today, we're going to define a delta neutral position this way. A position in a given stock where the sum of the deltas for the puts, calls, and stock is close to zero. All right. Now, delta is a measure of risk. For me, I normally recommend for retail traders, a delta neutral position is normally between -50 and +50, something like that. When I was on the floor, it was between -500 and +500. And for guys who were much bigger than me, who had money supporting them, you know, I was just a local. I was trading Stan Freifeld's money, which was not that great, as somebody to my left who was working for Merrill Lynch at the time. So, so anyway, for them, the delta neutral position could be 2,500 or 3,000 deltas, you know, something much larger. Now, why do we want to be delta neutral? And we're going to see how it works, but it reduces the directional component in the value of the position. The value of the position doesn't change over a small price range. So the question then, what's the benefit of having it? Why not just take the position off? If the value is not going to change with the stock going up or down, why not just take it off? The range can be extended if the position is gamma neutral also, and we could extend it further still if it's gamma neutral. Now I have this in quotes because this is a term, I heard it first from Larry, and we joke around about it because I think it should be gamma delta neutral as opposed to gamma neutral. To me, this is a fourth derivative, and I think what we really are talking about is the third derivative. But be that as it may, this insurance of being neutral, which changes the range of the stock movement over which the position doesn't change in value, it's an expense, and because of that, it reduces the profitability of the position. All right. So again, why, or some more points as to why we want to be delta neutral. It allows, this is the real key here, it allows you to isolate one of the other variables other than price. When we say delta neutral, we're neutral with regard to price, but we might be really wanting to focus on volatility or time, and rarely, these days, rarely interest rates, because interest rates are so low and they don't move around very quickly. Right now, when I was on the floor, you could have a change of a point and a half. Things were really moving and interest rates were important. Also, delta neutral could be used in conjunction with gamma scalping, which is a great strategy now. I've always liked it, but now that there are no or very low expenses when you're buying or selling stock, it's gotten more popular again. And it, you know, I think it's a really good strategy, but we can't talk about it today. And you could use as a hedge to protect a position for a period of time. You're worried something might happen over the next 2 weeks. You make it delta neutral, and then you take the neutral position off. Also, you could take advantage of mispriced options. That doesn't happen so much these days, that they're mispriced. All right, so suppose we want to make a delta neutral position. We have two options, a 50 call, a 40 put. The premium, the delta, and the gamma are given. You just form the ratio of the deltas, and it tells you how many calls you need for how many puts. So in this example, 60 over 25, delta over delta is 2.4. It says we need to buy 2.4 puts for every call. For example, 12 puts for 5 calls. Let's see. So we could buy 5 calls for 12 puts, gives me a delta neutral position. We also, but that'll give me positive 88 gamma. Now think about it, we could go the other way. What if I sold 5 calls and sold 12 puts? the deltas would be minus 300 and positive 300 for the calls and puts respectively, but I'd still have a delta neutral position. Now I have a negative gamma position, and that's a different type of position, negative gamma versus positive gamma. Can't go into too much about it now. Alternatively, we could buy 5 calls, 8 puts, and sell 100 shares of stock. And again, we're going to have a delta neutral position, but with a different amount of gamma. And also on each of these 3 positions, theta and vega, they're going to be different as well. Okay? All right. Now to make a position gamma and delta neutral, well, first neutralize the gamma, then neutralize the delta by buying or selling stock. It might sound more complicated than it is, but it really isn't. And if you start using this kind of information, it's going to put you leagues ahead of most of your competition. Most public traders, they don't do these kind of things. They don't take them into account at all. Anyway, so we could make this position gamma neutral by buying 10 calls and selling 20 puts, right? Remember the ratio here, we had, that was 8 and that was 4. But that would give me 1,100, just the calls and puts would give me positive 1,100 deltas. So I short 1,100 shares. Now I have a delta neutral and gamma neutral position. Or another way I could, there are lots of different ways of doing this, right? So here's a couple of examples. Okay, I normally go through each line, but what I'm just going to put them all up here now because of our time constraint. So here's a position. We have a stock at 55, and I'm long 6 calls. I'm short 4 of the Jan 45 puts, and here are my deltas, right? Multiply and short 600 shares. Here are my position deltas, and we see, look at that, it comes out to 0. And as far as the dollar value, it's negative or a credit. A negative sign here indicates a credit. Positive means we bought something, and a debit. So here we have a credit of $30,090. Now look what happens if the stock goes up 50 cents from 55 to 55.50. We could calculate each of these, right? Remember how we calculate the new premium? We take the old premium plus delta times the movement. So the movement is 0.5. 0.5 times 0.8 is 80 cents. 80 cents, I'm sorry, 0.5 times 80 is 40 cents. 40 cents added on to the 625 is my 665. We multiply that by 6 contracts and we get 39.90. Now it was that position or that leg, these are called legs, all 3 of them together are called a position, was $37.50 to put it on. Now it's worth $39.90. So there's a gain of $240. In the next position, there's a gain of $60. And the stock, we shorted 600 shares at 55. It went to 55.50, so that there's a loss of $300 there. Well, look at this. We have no gain or loss, and we have the same dollar value of the position. Now, of course, this is nice and neat. In reality, it's not going to work exactly like this. Things won't be exact numbers, and the gamma will, if the stock moves more than this, the gamma will start kicking in, throwing this off, and it might be a little different. But it still should be pretty close. Anyway, we have the same kind of example with the stock at 54. In other words, going down $1. Okay. All right. So, all right. Well, here's an example that I wanted to show you, and this is really what we were leading up to. And that is, I have a stock at 53, and earnings are coming out tomorrow, let's say, for example. And typically, one of the few things, by the way, that we know almost for sure, I never like to say for sure, but almost for sure, is that when earnings come out, the volatility of the options will drop. And we call it the volatility crush. Or you might have heard volatility crash, terms like that. So here I have a made-up example. We have a stock at 53. The volatility normally trades between 35 and 55, and earnings are coming out tomorrow. The volatility is pumped up to 60. Now, that's not such a great increase, by the way. If you look at real examples, it might increase a lot more than that. I'm trying to be conservative and not give an example that you'd say, well, he's making up numbers that don't make sense. These numbers make sense, okay? We have the Jan 60 call. The dollar value is 227. The delta is 33.3. 50 days to go with a risk-free rate of 1%. I put this in because sometimes people like to check my numbers. So if you put in a $53 stock and we're looking at the 60 call with 50 days to go with a risk-free rate of 1% and an IV of 60, you should come pretty close to the 227 if you're using a Black-Scholes model or something close to that. Anyway, what I'm going to do now is put on a delta neutral covered call. So what does that mean? Well, covered call is when you buy, you're buying stock and you're selling a call against it. We're going to do it in a ratioed manner. We're going to sell 3. So I'm buying 100 shares of stock at 53. The delta for stock is 100. My position delta is just 100. And the cost is $5,300, right? $53 for 100 shares. Selling now 3 of the Jan 60 calls at 227. And the delta is 33. I rounded that to 100. It's 99.9, but I made it 100. And the cost here is a credit of $681. So 5,300 minus the 681 credit is a net debit. I'm paying 46.19. Okay. Let's see what happens now tomorrow. One day or tomorrow, the earnings are released. Now the IV drops to 50. And we could generally be sure that the volatility is going to drop. Might not drop immediately. It might take till the afternoon, or if the stock price drops precipitously, it might even take a couple of days. But generally, a high percentage of the time, 95 or more % of the time, volatility will come back to its trading range. Well, remember, we paid $46.19 yesterday. Well, take a look at what's going on here. At various stock prices that I listed, from minus 15% from where the stock was to positive 15%. This will be the value of the stock. This is the value of the calls, and here's the value of the position. So at 45, we'd lose $191. We bought 100 shares, we sold 3 calls, we'd lose 191. At 47.68, which is a 10% drop, that would be break even. And then anywhere all the way up to 60.84, which is a 15% increase, 15 and some change. That's why these two both say 15 and some decimal point. In both cases, this would be a break even at 60.84, and at 61, we'd lose $10. Now, granted, as we go up more, the losses will become larger. But this, we're saying we could sustain a 15% move to the upside, a 10% move to the downside, and not take a loss. This is pretty cool, I think. Now, there is, I want to be totally honest about this. There is unlimited loss potential. If this stock went to 100, we'd be in pretty bad shape, okay? So, there is an element of risk that we have to be aware of. And it could be, a large risk. Same thing on the downside. If this stock fell to, 40 or something, or anything lower than 47.68, we'd be taking a loss. Okay, but so we probably want to take a look at what's happened over the last, I say 10, but pick your number of earnings periods and see what's happened over that period of time, over the last 10 earnings. Has the stock made those kinds of moves, or does it normally not move at all, or move 5 or 10%, 5 or 8%, something like that? So anyway, this is the example that I wanted you to see. All right, what are the problems? Well, the stock could move too far. I already said that. Volatility does not come in enough. Worse yet, volatility increases. That would be if the stock goes down a lot. It might take a couple of days, and you might have to hold it a little bit longer than the 1 day that we were talking about. The options might not behave as they should. Well, we'll just leave it at that. You may lose to time decay. That's not going to be an issue in this particular delta neutral example, but that could happen. And if small size, well, when I put this together, there were commissions originally. Now we don't even have commissions, but there are spreads and other expenses that we have to be concerned about. And we do have margin requirements, okay? Remember, there are 2 short calls. There's one that's covered by the long stock, but then there's the 2 short calls. Now, synthetically, for those who understand synthetic positions, it's really, this is the position where we had a debit of 46.19, but it's synthetically equivalent to receiving a credit, actually, selling one of the 60 puts and selling 2 of the 60 calls. This position is synthetically equivalent, meaning we'll make or lose the same amount that we would have with the original position, the actual position. But there'd also be a net margin requirement of 1590 if we do it synthetically. Okay? All right. All right, let me just tell you quickly about Macmillan analysis and what we do there. We have trade advisories. We do money management for people who don't want to get involved in doing their own trading. We have educational material and software products. I do consulting to institutions, hedge funds, and individuals. And what I do the most of is the one-on-one mentoring. And you could visit our website or call me for more information about it. Or, and in addition to that, we also have some specials for those who've attended today and might be missing their dinner, or it's dinner time for them right now. We have 50% off on two products that we have: the Intensive Options Webinar, Volume 1, that was put together by Larry McMillan, and our expected return calculator. And we say, if you're going to trade, you really want to put every trade through the expected return calculator, because sometimes you can't tell. It's like the old situation of somebody with a die, and they say, all right, if you get the numbers from 1 to 5, I'll give you $1. If you get a 6, you have to give me $10. Well, that might look like it's a decent trade because you're going to win 5 out of 6 times. But from an expected point of view, that's a losing trade, and you wouldn't want to do it. Even though most times you're going to win, overall, that's a losing trade that you don't want to get involved with. Anyway, you could check out our specials over here at optionstrategist.com, Delta Neutral. I think you need a coupon code, and it's Delta Neutral. Just enter Delta Neutral in there if you're interested. And again, thank you for spending this time with me. If you're interested in the one-on-one mentoring, which is really my baby, that's what I love to do. I love meeting other traders. I really put my heart into it, and I mean that. But anyway, you could call Ed. He does our marketing. He's the vice president of mentoring. Here's his direct phone number. Or you could go to our website and read a little about it, optionstrategist.com/mentoring. And I'll just leave the contact information up. And I think we're just about out of time. I squeezed it in.
You sure did.
Jeff?
You sure did squeeze that in. We do have one question. That I figured.
I don't think I've ever spoken that fast in my life, but I did want to get everything in. So
did the coffee help?
Yeah. Well, the coffee helped, and the wine later on is going to relieve the effects of the coffee.
We had a question from Mark. He wanted to know, your analysis heavily employs the Greeks. One of the earlier presenters said he doesn't even know what they are and what they mean.
Yeah.
I'm confused. I know Tom Sosnoff talks
Yeah.
about delta and gamma and theta a lot, and I trust him. Why is using the Greeks more preferable? I thought that might be an interesting question to end on.
Why is using the Greeks more preferred than not using the Greeks?
Yeah.
It's kind of what I said at the very beginning. It's kind of like when you drive a car, do you look at your speedometer? Do you look at your gas gauge? These are your gauges. This is how you know what's going to happen when the stock changes price, when time goes by, when volatility increases or decreases. I mean, those are your three main variables: price, time, and volatility. There's also interest rates and dividends. They're more minor. But, all right, I'm going to say this. As important as the Greeks are, if all you're doing is buying a call or buying a put, in other words, not spread trading, I would say they're not as important. They're always important, but if you're trading spreads, I can't imagine trading spreads without the Greeks. I can't imagine trading even single puts and calls without the Greeks to get a handle on how much a stock movement is going to change the value of your position. But other people, that trading is not an exact science. If somebody else has a different approach, that's fine. It's fine by me. I welcome the competition.
Okay. All right. Very good.
Which is how I look at this. Right. Any other questions, Jeff?
No, not really. Do you see any on YouTube, Greg?
Somebody said I bought the expected return calculator. Is it still mine? Yeah. Once you buy it, you own it forever. If that's the question you're asking.
Does it work on a Mac?
No.
Okay.
Good question. Yeah, it doesn't. You need some kind of an emulator to make it work on a Mac.
Okay.
Yeah, good question.
That was the same question for MetaStock. It works really well on an Apple, but it does require Windows to run. So.
Right.
All right, very good. Stan, I want to say thanks for coming in today. We appreciate it. It's always good to talk about the Greeks. Really.
Well, thanks, Jeff. Thanks a lot for having me. And thanks a lot for doing this, because this is what it takes for people to be successful traders. If they think of it as a competition, you're providing a source of education to get them ready to go out there and trade.
Yeah.
So I appreciate it. Thank you very much, Jeff.
Well, thanks for coming. Yeah, thank you.
You bet. Bye now.
Okay. All right, let's go ahead and do this real quick. Okay. How long do you think we're good on YouTube?
I have no idea.
We're going to find out.
Um,
All right, very good.
say-
Well, we might not find out. I do want to say thank you for coming, everybody. Want to remind you that we've got a great discount on what's arguably the best software ever released. At least it's been rated #1 for 26 years in a row. We do have the MetaStock Real-Time, the Zenith. You can get one of my favorite add-ons, Steve Bigalow, Candle Profit Systems, the classes he just ran, the value charts, the trade trend, the Chuck Hughes Prime Trade Select, the Unleash the Power of MetaStock, and 2 years of stocks and commodities. Normally, all of that would cost you $44.87. Today, here at the summit, it's $19.45. Give us a call, 800-882-3040, or you can chat online with us at metastock.com/sellchat. I do want to say one last time, thank you for coming today. Thank you to Stocks and Commodities for sponsoring the event. It's great to have them on board. And if you don't want to do the summit, you just want to try the extended trial, I'd encourage you to do that, because 3 for 1 will let you try out the software for the cost of 1 month. You get 3 months. There is a reason it's been rated #1 for basically 26 years in a row. So with all that being said, I want to thank all of our great speakers today. TJ asked, when will the recording be sent? TJ, you can go to youtube.com/metastock and watch it right now. You will be sent a copy to that link within an hour of me closing the webinar today. So it'll be sent just a minute. I wonder if it's still on my clipboard. Yeah, here you go. There you go. You'll be sent the recording right now. There you go. I hope you enjoyed it. These are great classes. Again, you can get a hold of us at 800-882-3040, metastock.com/sales chat. Fill out the survey, go to our website, like and subscribe to our videos on YouTube, and thanks for coming today.